extreme agenda from the ballot at its annual shareholder meetings. The investors are looking to force Exxon to accelerate the pace of reductions in greenhouse gas emissions. And the Oracle of Omaha reportedly giving Citigroup's CEO some advice on the overhaul taking place at her bank. According to Reuters, Warren Buffett and Jane Fraser, they recently got lunch together where Buffett told Fraser to keep going with the reorganization. Buffett's Berkshire Hathaway has roughly $2.8 billion stake in Citi, and as of last fall, and is a top shareholder in the bank. And shares are up just fractionally in the pre-market, Frank.
You know, a show of support from a huge shareholder, just a brilliant financial mind in Warren Buffett, has to feel pretty good.
I think so.
I think she probably had a pretty good week.
Probably.
All right. Silvana, thank you very much.
Yeah.
All right, turning back to one of this morning's top stories, Florida Governor Ron DeSantis ending his bid for the 2024 presidential nomination, announcing his decision in a video statement posted to X just 2 days before the New Hampshire primary, and now endorsing former President Donald Trump. The move leaving Trump and former South Carolina Governor Nikki Haley as the sole contenders for the nomination. Haley is the final Republican alternative to Trump left in the field. She also has emerged as Wall Street's top dog in the race. A report over the weekend saying that Stanley Druckenmiller, Henry Kravis, Ken Langone, and Cliff Asness, they're all co-hosting a fundraiser for Haley in New York City at the end of this month, with tickets going for as high as $33,000. Joining me now on the CNBC Newsline with more is Raymond James Washington policy analyst Ed Mills. Ed, good morning. It's great to have you here, especially on a morning like this one.
Good morning, Frank.
All right, so let's just dive right into it, Ed. How should investors view the fact that the GOP field has shrunk down to just Nikki Haley and former President Donald Trump?
Yeah, Frank, our view is that looking at polls, looking at the path ahead, this is Trump's nomination to lose, and it does not appear that he will lose it. However, New Hampshire is Nikki Haley's best chance to get momentum. There's crossover voting available among independents and Democrats, but the question really is, where does that DeSantis vote go? With his endorsement of Trump, that gives Trump some late momentum and could prove that this could be the last stand for Haley. But New Hampshire has given us big surprises in the past. Hillary Clinton won it as an upset in 2008, McCain in 2020, but they didn't get the nomination, so that's what we're watching.
Okay, could be a surprise. I want to also get your take on Wall Street lining up to support Nikki Haley. There are two economic plans. Which one has the potential to be better for Wall Street? And are you surprised to see so many Wall Street donors lining up to support the former South Carolina governor?
I don't. I think that one of the things that I get asked the most at Raymond James is after the election, what happens on the tax cuts? They're looking at the debt and the deficit. Nikki Haley represents, for a lot of investors, the kind of clearest path to less volatility between the two candidates, and so kind of a more kind of quote-unquote traditional Republican. So that is not a surprise. That's where they might be lining up, but they are waiting till the end of the month. It's not quite clear if that fundraising will happen if she doesn't have a strong finish here in New Hampshire.
Yeah, certainly a lot to watch there. One other thing I want to ask you about Trump's economic plan. He's given us some pieces of it. One thing is the 10% tariff, pretty much a broad-based tariff. How should investors view the potential of this tariff fight ramping back up? It could also potentially, I would think, increase tensions with China.
Yeah, Frank, I spent years during the Trump administration responding to headlines on tariffs. He called himself the tariff man. And what we saw is a lot of the tariffs that he proposed went into effect. Now, it's not going to be a 10% tariff on everything. There is a process, but that certainly is going to weigh on any imports. And in the U.S. relationship with China, the expectation is the tariffs ramp up. But what happens to everything else that has been done? Tech exports, are there offsets there? That will be the debate in the market.
Yeah, a lot to watch. We're showing the audience right now. The New Hampshire primary is coming up, and then the South Carolina primary. That's Nikki Haley's home state. But the question it seems like you're asking is, can she make it until then? Ed Mills, great to see you.
Thank you, Frank.
All right, switching our gears back to the markets. We're looking at shares of United Airlines set to extend their more than 6% year-to-date decline ahead of earnings after the close today. And it's not just United. Several airline stocks selling off this year as two big events hit the sector. JetBlue's failed merger with Spirit Airlines and the FAA's ongoing investigation into Boeing following that mid-air Alaska Air blowout. Let's talk much more about this with Stephen Trent, airline analyst at Citigroup. Stephen, good morning. It's great to have you here.
And thanks for having me.
So let's start with United. Earnings coming up later today. What are your expectations for the report, and what is your price target and rating?
Yeah, certainly. So to give you an industry answer on that, we are generally more constructive on the large network carriers than we are the ultra low cost carriers. So if one looks at the various puts and takes to the network carriers' advantage, and you have international long haul, you have this post-pandemic pivot into economy plus type seating in the cabin. You've got a co-branded credit card revenue. Those drivers continue to be very important. And we think, for example, we're going to continue to see strong trends like we saw with Delta Airlines recent release, which the market didn't appreciate so much. But
all right, so
fundamentals look very good.
All right, so you're continuing to expect more upside. Just by the way, the average rating on the street, 60, 65. You're more bullish than that. You also have a buy rating on United. I want to talk to you about Boeing. How big of an issue is this for the airline sector, really? A couple airlines are impacted. We're talking Alaska. United's also impacted, so Southwest. But industry-wide, how impactful will this be?
Yeah, it's important. And the industry has not gotten a break from these supply chain issues. Whether it's the MAX 9 problem we have now, we have this fan blade issue with the Pratt & Whitney Garrett turbofan engine. So the planes are still not in the air. Everybody's still waiting on the FAA to give the green light on when we can get these planes back into service. So meanwhile, when we have these aircraft on the ground, there's revenue spill associated with that, which looks like it's going to be short term. And probably we get past this particular issue over the short term. But it's a little concerning that we're not done with the supply chain problems.
So I want to talk to you about something that appears to have more long-term impact, the failed merger between JetBlue and Spirit. I was actually speaking to Ed Bastian a couple weeks ago. He said the airline industry used to be a race to the bottom of the lowest fares. Now it's all about being able to offer optionality. That's what he called it. How does this failed merger, how does it change things? Does it change things at all? Are we making a big deal about it here on CNBC and it's not a big deal, or will it have ripple effects?
Yeah, great question. So I do think that when Mr. Bastian's comments make a lot of sense. Which airlines are actually doing well now? It's those airlines that are offering something well beyond main cabin, whether it's premium cabin, co-branded card, loyalty program revenue. We've seen a post-pandemic pivot away from no frills seating. Most people are no longer in the office 5 days a week. This pre-pandemic pattern of fly out Sunday night, fly home Thursday night, be in the office on Friday, that's kind of gone, not entirely gone, but it's broken down. So that shift, that demand has moved away from ultra low cost. At the same time, the U.S. doesn't have the air traffic control capability for a lot of airlines to do maintain these very high block hour utilization, like you saw pre-pandemic. Okay. So, that business model is in a tough spot.
Are we seeing the low-cost carriers go away? I mean, is this failed merger, is this a sign that we may not see any more of these low-cost carriers?
I don't know if that whole subsector disappears, but I would imagine that subsector is going through some soul searching. And, if one simply looks at pre-tax margins, they used to have very high pre-tax margins pre-pandemic, and they were better than network airlines. We're now seeing exactly the opposite. Right. For some of those reasons I outlined, no frills passenger service is
thing of the past. People want amenities, Stephen. I know. I want some legroom personally. Stephen Trent from Citi. It's great to see you. Buy rating on United Airlines. Price target is $71, about an 82% upside from where it's trading right now. Thank you so much. Great to see you. All right, coming up, U.S. regulators out with a new round with new calls around the Boeing jets at the center of that door panel blowout, plus some signs of hope around the U.S. economy and concerns about a potential recession this year. We have all the details when Wex returns. Stay with us.
now.
All right, welcome back to Worldwide Exchange. Time now for your morning call sheet. We start with Oppenheimer downgrading its rating on Home Depot. It says while current share valuations are not necessarily stretched, data suggests that the home improvement sector is facing weakish consumer demand factors. Take a look at shares. They're down fractionally right now. HSBC downgrading its rating on Lululemon to hold. This says while the fitness apparel maker has significantly outperformed the sector in the past, that performance gap is likely to narrow over this year and the next. Shares of Lululemon unchanged in the pre-market. And UBS is upgrading its rating on JB Hunt, moving it to buy and its price target to $234 per share. UBS saying it sees evidence of JB Hunt's intermodal margin likely reaching a bottom and growing cycle leverage intermodal. That's container shipping, just FYI. All right, time now for your global briefing. We're going to start with Japan's Nikkei hitting a fresh 34-year high, closing more than 1.5% higher, led by chip stocks following Taiwan Semiconductor's positive earnings report last week. This ahead of the country's key central bank decision tomorrow, with many investors expecting the Bank of Japan to maintain ultra-low interest rates. Also in Japan, Sony calling off its $10 billion merger of its Indian operations with Z Entertainment, citing disagreements over who would lead that combined company. The deal, which was announced over 2 years ago, was seen as a potential major market mover for both companies as they navigate the highly competitive media industry, though Sony says the failed merger will not have any material impact on its fiscal 2024 results. You can see shares of Sony, they're actually moving almost 2% higher. Z Entertainment down just about 1.5%. An online gaming company, Kindred Group, receiving an all-cash takeover bid from French lottery giant FDJ, who was set to acquire Kindred's entire outstanding share capital. The Wall Street Journal had first reported that offer, saying the deal could be valued at right around $2.5 billion. You can see right now, shares of Kindred Group, they're up almost 17%. The French company also up almost 6%. All right, coming up, the one word that every investor needs to know today, plus where our next guest says the markets, they may be stuck in a holding pattern with the S&P sitting at a fresh all-time high. Also, if you haven't already, follow our podcast. If you missed Worldwide Exchange, check us out on Apple, Spotify, or other podcast apps. Much more WEX coming up in a minute. Stay with us. All right, welcome back to Worldwide Exchange. Taking a look at the pre-market gainers for the S&P 500. You see PayPal up just over 3%. Constellation Brands up about 2%. Western Digital's in there as well. The chipmaker up 1.5%. And then the Dow gainers as well. Remember, the indices hitting new record highs. Intel leading the Dow right now at 1.3% gain. Salesforce right behind with Cisco Systems as well. All right, turning now to your WEX wrap-up. We start with U.S. regulators recommending airlines expand their inspections of Boeing jets beyond the MAX 9 to include those not involved in those Alaska Airlines door panel blowout. Taking a look at shares of Boeing right now. It's down about 2.5% in the pre-market. This is JetBlue and Spirit Airlines appeal a court decision blocking their $3.8 billion merger. Also, Florida Governor Ron DeSantis ending his bid for the 2024 presidential nomination just 2 days before the New Hampshire primary and now endorsing former President Donald Trump. Arkhouse Management and Brigade Capital Management threatening to bring their $5.8 billion bid to take Macy's private directly to Macy's shareholders. This after Macy's rejected the group's proposal over deal financing and valuation concerns. Shares of Macy's right now up almost 1.5%. Shares of Archer Daniels Midland getting hit hard in the pre-market on word the ag company has placed its CFO on administrative leave as it investigates accounting practices at that company. The company says it's now cooperating with the SEC after receiving a document request. Also this morning, Baird saying it's cutting its rating and price target on ADM. Shares of Archer Daniels Midland right now down over 14%. Terraform Labs filing for Chapter 11 bankruptcy following the collapse of its Terra and Luna crypto coins in 2022. This is the company navigates ongoing legal challenges, including the arrest of co-founder Do Kwon. And a new poll by the National Association of Business Economics showing more than 90% of economists believe the U.S. economy should avoid a recession this year. That's up from 79% in a previous survey. Here's what to watch in the week ahead. 2 key central bank decisions from the Bank of Japan on Tuesday and the European Central Bank on Thursday. A very closely watched economic report also out, including real GDP, new home sales, and core PCE on Friday. But perhaps the most market-moving will be earnings this week. We have a diverse batch of names with nearly 1/3 of the Dow set to report, plus Tesla and Netflix. In all, we're looking at 69 S&P 500 companies and 9 Dow components, including Verizon, 3M, Johnson & Johnson, and Intel, all reporting. A very busy slate this week. Ahead of all that, let's see how we're shaping up to kick off the new trading week. Futures right now solidly in the green, as we've been telling you all morning long. Looking like the Dow would open up more than 50 points higher, the NASDAQ up over 0.5%. For much more, let's bring in Degas Wright, founder, CEO, and CIO at Educator Capital and a CNBC contributor. Degas, always a pleasure.
Damn, man.
Frank, it's great to be on with you.
So give us a sense, Degas. We're seeing the indices hit new record highs, seeing a lot of bullishness out there. How do you see today shaping up? What's your WEX word today?
The wax word of the day is bundle. Those firms that can bundle artificial intelligence with their current products and services will be successful.
All right, so as you're talking about bundling right now, are there any certain stocks you're
Bumbling, maybe.
I should say certain sectors. You gave us some picks. I want to wait a second to get to those, but what sectors are you looking at that you believe have that ability to bundle?
Technology and also healthcare are the leading sectors that can really bundle artificial intelligence in their products and services.
All right, so you're looking at those sectors. I want to go through a couple of your names right now. You gave us 3. They're pretty interesting. One is Microsoft, obviously kind of follows in that theme. Another one, KLAC, and also Regeneron. Out of the 3 of those, which one do you expect to do the best, at least in the near term? Remember, a lot of anticipation of Fed cuts. But as you look at your picks, which one are you the most bullish about right now?
I'm the most bullish about Microsoft because one is that it's really done a great job of integration of AI into their products and services, from being with Copilot, Azure Cloud, and those applications are really doing well.
All right, certainly. I also want to look ahead to something that continues to move the market. It's earnings and also the Fed. One thing that you're looking at is the Atlanta Fed's metric of sticky inflation coming in at 4.6%. In your mind, what does that mean for some of the earnings that we're going to see, and then what does that mean about the Fed's decisions when it comes to rates?
Yeah, one of the things with the sticky CPI, the Fed wants to target that to get it to about 2.5 before they even think about easing. So we're looking at still probably a pause till we can bring down that sticky CPI, because that sticky CPI is really difficult to get under control, and the Fed is going to have to be resolute to get that under control.
All right, so you're saying the Fed has to be resolute. So do you agree with the market that we may see 6, maybe 7 cuts this year, or with the Fed is signaling just 3? And again, how does that impact the markets going forward the rest of the year?
Yeah, so what we're seeing is that we're not seeing definitely not six easings. What we're seeing is that there could be easing late 2024. So we're very concerned about getting that sticky CPI under control.
All right, we'll have to continue to watch. So again, Degas writes, your picks are Microsoft, Regeneron, also KLAC. Very bullish on tech, apparently. We'll have to see if tech continues to show leadership today. I do want to ask you one more question. We have seen a bit of a rise in rates. How would you play tech right now, where in general we're seeing higher valuations, but also rates moving higher?
Once again, we look at that AI theme, and so you want to focus on those companies such as the mega cap disruptors, those companies that are suppliers to the artificial intelligence industry, and also those companies that can do applications. So you really have to look under the hood and understand the companies and how AI could impact their business.
All right, what do you think about the markets hitting new record highs? Making you feel bullish or a little concerned right now that it's going to have to pull back?
We are still bullish, risk on in this market, because we feel that the aspects of the market, artificial intelligence, you talked about cybersecurity earlier, those are still going to be drivers into 2024.
This is crazy.
Leave it right there. As we mentioned all morning long, futures are higher right now. Looks like the Dow would open up about 50 points higher. That's going to do it for us. Squawk Box coming up next.
Good morning, shakeup. In the presidential race, Governor Ron DeSantis dropping out and then endorsing Donald Trump. We'll show you what he said about his remaining rival, not his, Nikki Haley. And two big data points on this week's economic calendar, and they could shape the direction of Fed policy in the months to come. The swap planner straight ahead. Got that going. And ExxonMobil is suing two ESG investors. It says they're trying to damage his business by forcing curbs on emissions. It's Monday, January 22nd, 2024 in Squawk Box. In Times Square begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. We were just saying nothing can make you miss Times Square like being really far away and really cold. We are glad to be back. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin, and here we are, fellas.
Is it the canyons?
It's not quite like
the mountains of New
right.
York.
It's not quite like
Different vistas.
not quite like hitting your head against a wall because it feels so good when you stop. We like Davos. We like Davos. It's a grind.
We like coming home.
That 6 hours is,
6 hour difference you're talking
yeah,
about.
you don't know where you don't know whether you're coming or going half the
We don't
time.
talk enough about that, by the way, about why Davos. I think for a lot of people who go there, they're like, it's like an out-of-body experience for a couple of days because they're all jet lagged
In a
they're all
haze.
running around like crazy.
But you're definitely in kind of a haze, and you're going to bed and going. What time is it bed? It's 5 p.m. home, and I'm going back home. And I'm going to bed.
Yeah.
And then you get back, and I almost couldn't sleep when I got back.
I couldn't sleep when I
in the morning,
Yeah.
which was good because I know what was coming on Monday. I was not.
Makes for no fun for any of us. Anyway, let's take a look at what's happening with U.S. equity futures, because you are seeing some fun here in the green arrows after all three of the major averages closed at record highs on Friday. This morning, Dow futures indicated up another 50 points. S&P futures up by 13. The NASDAQ indicated up by close to 100 points. And Treasury yields, we'll take a look at this because, of course, Treasury yields have been driving things. 10 years been holding steady. You'll see it right now at 4.11%. The 2-year almost back to 4.4%. Andrew?
Meantime, I'll bring an update on the 2024 presidential race because big thing changed over the weekend. Florida Governor Ron DeSantis dropping out yesterday and endorsing frontrunner Donald Trump. The announcement coming just 2 days before the New Hampshire primary. In a social media post, DeSantis said he can't ask his supporters to volunteer their time and resources if he doesn't have a clear path to victory. He also took a shot at the remaining challenger to Trump.
We can't go back to the old Republican guard of yesteryear, a repackaged form of warmed-over corporatism that Nikki Haley represents. The days of putting Americans last, of kowtowing to large corporations, of caving to woke ideology are over.
Meantime, Bloomberg reporting that the Wall Street billionaire Stanley Druckenmiller and, I should say billionaires, Henry Kravis, Ken Langone, Cliff Asness are co-hosting a fundraiser for Haley. That's going to happen on January 30th in New York City. So we'll see whether she can build up enough of a war chest to build enough momentum to take on Trump.
It's funny. They asked former President Trump, what about the Ron DeSanctimonious nickname? He goes, that's been retired. That's gone. And it just shows you how this is all one big game.
SNL went to Ron DeStupid, if you saw that on Saturday night.
You know, I didn't think the DeSanctimonious was that good, but like we tried early on to get him on again and again and again. You talked about again and again. Really, Ron? How'd that work? You don't want to. You want to be president, but you don't want to talk to people and talk to the public.
It's a bizarre situation.
But with the way now suddenly endorsing Donald Trump. Well, you were on The Simpsons, remember?
Yep.
So there was a Simpsons episode where Ann Coulter and Al Sharpton were screaming at each other on this talk show, and the minute the cameras go off, they go. Al Sharpton goes, hey, Ann, where are we going to dinner tonight? I go, what? I go, you really got me? They high-five each other, and they head out of the studio together, heading to some place for cocktail. That's the way it seems like this all works.
You don't think that one or two of these people want to be the VP?
They want to be a cabinet member.
Or
They don't want to be ostracized by the...
Right. That's all this is. That's all this is.
But when you go from just almost pure... vile and vitriol and hatred to
but that's how sick it is.
But that's part of the reason that
That's why the American public thinks it's so cynical.
They don't trust
And they should be.
institutions, they don't trust
and they should.
guns, right.
And this goes to the Alex Karp thing. People say stuff that they don't believe.
Right.
And everybody knows it.
do you know how many times on this show in the past 5 years I've said virtue signaling?
Yes, but I believe it.
You what? You believe there is virtue signaling?
No, I believe what I'm saying. That's the difference.
Well, you're different than everybody else, then. I do. And I do say things that I believe, and then I get in trouble. Now to the $5.8 billion bid by an investor group to buy Macy's. Arkhouse Management, which leads that group, said yesterday it could bring the matter to shareholders if deal talks don't pick up. The group issued the bid back on December 1st, and after the Wall Street Journal reported the threat, Macy's CEO Jeff Gannett issued a statement saying the board determined the proposal is not actionable and fails to provide compelling value to Macy's shareholders. Arkhouse said yesterday it could make a meaningful increase to its original bid if it could proceed with necessary due diligence. Jeanette is set to retire. And the company is expected to provide more details on its strategy under incoming CEO Tony Spring in coming weeks.
They said, look, it's a $21 a share in cash offer. And Arkhouse is saying that they want to go straight to the shareholders if they don't get more of an opening from the company, because if you look at the absence of further updates, Macy's shares have actually fallen since, including after the company's announcement last Thursday of a broad-based restructuring. It is a cash offer.
Yeah, the reason I wasn't really paying attention to what I was talking about, because I was thinking about the Journal is not going to get the VP position or a cabinet, because this is the last paragraph of the op-ed page on the 2024 Republican choice. If Republicans do in fact nominate Mr. Trump again, it's democracy, the worst system except for all the others. But our unhappy guess is that sooner or later, the choice of nominating Mr. Trump will end in tears for his voters. So they are not going to. They're not going to jump on the bandwagon. We'll see. Between now and November, doesn't sound like they will. And Druckenmiller. Who else? Langone. Druckenmiller. Langone.
Kravis. I don't think they're jumping on the bandwagon.
Question is what happens if she doesn't perform well in New Hampshire. And when she finally, you've heard what Trump has said about her recently. So if she finally drops out and endorses Trump, are they going to be hugging?
Well, that can't. Yes, you're right. At some point, I mean, now she's going after the age, his age.
Well, after some confusion over the weekend.
Yeah.
Where he was confusing.
Oh, I'm not.
But no, I know you're not. Well, you never would. But that was unbelievable. It was bad enough when he congratulated the state of Kansas when the Chiefs won. That was one thing. But now he's confusing Nancy Pelosi
with Nikki Haley.
Look, almost as if, it's just a symbol of someone I'm really, really mad about, and I got the same mad feeling. Yeah, I'm saying mad feeling about this woman and that woman, and they're just all interchangeable.
Got brown hair. In the meantime, ExxonMobil is suing 2 sustainable investment firms. It's trying to block them from putting forward a shareholder proposal that would commit the energy giant to further curbing its greenhouse gas emissions and target its customers' emissions as well. Exxon says that the 2 investors, Arjuna Capital and Follow This, became shareholders only to advance proposals that would diminish its existing business or put it out of business entirely. In fact, they call this company, they call these activists masquerading as investors. If you look at how they buy their shares, they ask people to donate money so that they can buy these shares and then they move along with them. Exxon's point is not that they should never get a chance to air these things, but they have brought these proposals again and again and have lost overwhelmingly. In some cases, 85% of the shareholders voted against them. In some cases, 72% voted against these issues. They say that it takes a lot of time and energy from the company. And by the way, this is, I don't know if you remember last year at Davos when we were talking to CEOs and they were worried about the new, was this last year or the year before, when they were worried about the new proposal from the SEC that would make it much easier for minority investors to get proxy, get their proposals on the proxy. It takes up a lot of time and energy from these companies, and I don't think they're saying you can't ever do this, but corporate gadflies have risen to all kinds of new prominence, including activists who really don't want to see the company succeed, and I think that's their point here.
And Exxon produced, I mean, they may transition down the road, but they're in the business of producing fossil fuels. I mean, I wouldn't want ESG activists lobbying the big 3 to make only EVs, because we know how that would go.
And their concern is it's not healthy for shareholders at large. It's not healthy for the employees at large.
What happens if it's really cold? Did you read that? Parking lots of stalled EVs?
Battery cars, yep.
Yeah.
What temperature and how does it happen to every single car, or is it just a fluke, or do you know? If it's 10 degrees,
I don't know.
And you're trying to charge,
I don't know.
Can you charge?
Look, there are differences. I've seen a lot of activity and things showing you how to better charge it. You need to make sure that you have like the right charging. It's got to be like a 120 instead of a 220 or something in terms of the voltage that you're putting out on it. That helps.
Well, anecdotally, there's a guy said, I was here yesterday for 3 hours. I had to get a ride home. Now I'm back today trying to get it moved.
That's true. The charge doesn't hold it.
My head would be
Exploding.
Wouldn't it, if that happened?
In the meantime, Reuters is reporting that Citigroup CEO Jane Fraser recently had lunch with Warren Buffett, during which she outlined her latest round of reorganization efforts. On a conference call with managing directors last week, Fraser said that Buffett told her to keep going. During that call, Fraser said more information about the next round of reorganizations would be shared as soon as this week. A representative from Berkshire Hathaway confirmed to Reuters that the lunch took place, but did not give any details about that conversation. Berkshire made a $3 billion bet on Citi back in 2022 and remained a top 5 shareholder as of the most recent data from September. Citigroup shares up by about 16 cents.
Meantime, let's talk about Elon Musk, because he is now denying a Bloomberg report that his AI company XAI has secured $500 million in commitments from investors towards a $1 billion goal. In response to a post on X, Musk called the report simply not accurate. Musk launched XAI in July of last year in response to big tech's AI efforts, which he had criticized for excessive censorship and inadequate safety measures, also taking shots, of course, at OpenAI, a firm that he had funded that had now partnered with Microsoft.
Mm-hmm. You can congratulate Kansas. I mean, there is a Kansas City, Kansas, obviously, right across the river, but it's really the Kansas City, Missouri, but it starts with Kansas, so maybe it's confusing.
No segue there.
You think people just tuned in?
Actually, yes.
You think they tuned in the last minute?
I do. A lot of people just don't get that's
well,
how it works.
That's their problem.
But that's how it works.
That's their problem. They need to get up earlier. You want to, I'm worried about you, not them. Following.
All right, when we come back, we've got this week's Squawk Planner ready for you and 2 key data points that could help determine the direction of Fed policy. That's next. As you see, the futures higher this morning, Dow now up by 61, NASDAQ up above 100, and the S&P indicated up by about 15 points. Later this hour, we will talk China with Heyman Capital's Kyle Bass. Squawk Box will be right back.
Athletics.com.
On this week's Squawk Planner, key economic data at the end of the week. On Thursday, we'll get jobless claims, durable goods, and the first read on GDP in the fourth quarter. Then on Friday, we'll get personal income and spending data, which includes the Fed's favorite inflation gauge. That's the core PCE. On the earnings front this week, we'll be hearing from United Airlines. That's today after the closing bell. Tomorrow, we've got J&J, 3M, GE, Procter & Gamble, Verizon, and Netflix. On Wednesday, AT&T, IBM, and Tesla. And then on Thursday, you've got Intel, Visa, and our parent company, Comcast. Joining us right now to talk about everything we can expect is Stephanie Ling, Hightower Chief Investment Strategist and a CNBC contributor. And Stephanie, how much of the market is going to be driven, you think, by earnings? It may be the time that kind of takes over for the Fed again?
I hope so. I hope we can focus on fundamentals and put the Fed in kind of like just on pause for a little bit. But I do think that the economy continues to do well, Becky, and that will propel earnings to be a little bit better than expected. And I think the market can continue to, it's going to kind of be a little bit sloppy as we kind of figure out what is the Fed going to do 6 times in terms of cuts, 3 times, 2 times, whatever. But I think fundamentals will win out eventually, and so far so good in terms of earnings. 9% of the companies are beating expectations.
What do you think as the market is at record high? The markets are at record highs, I should say. How does that make you feel about things?
Well, I think that we've had kind of this pause in the broadening out of the market, right? We had such a nice rally into the end of last year, 9%, but you had many sectors participate. And then this beginning of this year, we've seen tech take over again. I think the expectations are quite high for technology. Not to say you don't want to be there, but I do think that there are other better values elsewhere. And I hope that earnings will kind of just be more of a tailwind for those other sectors that haven't participated so far this year.
For anybody looking for a big slowdown, you've got a really good point. That is the amount of federal spending that's already been passed and still hasn't even hit the economy yet.
Yeah, so back in 2020, the Fed, we had monetary and fiscal policy that was equivalent to 60% of U.S. GDP. If you go, because we closed the economy, we needed to do the big bang, right? And we did. And just for perspective, back in 2008, with the great financial crisis, fiscal monetary policy that was put in place was just 5% of U.S. GDP. So we have had an enormous amount of liquidity into the system. And then last year, on top of all the things that we've seen over the last couple of years, yeah, you had $2 trillion of infrastructure spend. And that has really led to a manufacturing renaissance, especially the companies that are focusing on onshoring, reshoring, EVs, batteries, and clean. We've seen a lot of companies talk about backlogs are starting to build, and we haven't really even seen that stimulus be put in place. So I do think that that's been a nice tailwind for the economy as a whole, and that's why we're seeing 2.5% GDP growth currently.
You're talking about a barbell approach. You like energy and industrials, but you like some of the tech names too. Why don't we run through a few of the names that you like the most? Schlumberger at the top of the list.
Yeah, so we talk about earnings season being silly season, and this company reported a great number, and it was really only up about 2% on Friday. This, of course, comes on the heels of the stock being down 12% in the last year. I think this stock should absolutely re-rate. It is very cheap for the #1 oilfield service company in the industry, and trading at 14 times forward estimates. They had double the free cash flow, and they're just starting to talk about and see the inflection in international and offshore activity. So this is a company that beat across the board, and I just don't think it gets the respect that it should.
How about IBM?
Yeah, so IBM, they report this week, so we'll have to see, but I think the transition is well underway, Becky. This company, under the CEO, has done such a great job in terms of finding growth. It's not this mainframe company anymore. It's a company that's focusing on all the hot buttons and the real growth areas like AI, cloud, and data center, quantum. And I think that 70% of their revenues now is software and consulting, and that is recurring revenues that should help not only growth, but it should help margins as well. The stock did well last year, up 27%.
Yeah, that's what I was
but
just
I do
say.
think that at 18 times is still attractive.
Yeah, it did well, but not as well as some of the hottest technology names. Is that kind of your thesis? There's still a little more room to run here?
Yeah, exactly right. And you know, 2 years ago, it was actually one of the very best performing tech stocks because it didn't get hit like everything else got hit 2 years ago. So yeah, I think you're going to see a mean reversion this year.
I am not familiar with Elanco Animal Health, but this is one of the stocks that you really like too. This just about strong discretionary spending from consumers still?
I think, well, I have 4 pets, so I am a big fan of animal health, right? And you and I have talked about Zoetis before, the industry leader. Zoetis trades at 37 times forward estimates, as it should, as the industry leader. But Elanco is a number 2 player, and I think there's a turnaround story. They've got a whole bunch of new products, 3 new products that are about to get approval that will help spur better demand in the second half of the year. You have internal fixes at the company in terms of inventory changes and really cutting costs and price increases as well. So this stock trades at 15 times, so at a big discount to Zoetis. I think you can buy and own both of them. One is a turnaround, one is an industry leader, but I do like the $62 billion total addressable market that these companies have an opportunity to really capitalize on.
So this was the spinoff from Eli Lilly and Company. It focuses on medicines and vaccinations for pets and livestock too?
Exactly right. And I think as they get these new products that they're introducing, they get approval, and then we see it obviously helping on the revenue side in the second half of the year. I think you can see EBITDA something like $2 billion this year. Expectations are for $1 billion. So I think that would be a real big surprise. And of course, they have a lot of debt, and I think as they do introduce these new products, they get more free cash flow, they can pay down that debt.
Stephanie, always great to see you. Thanks for joining us this morning.
Good to see you.
All right, coming up, mounting legal challenges for Apple. Steve Kovac will join us to break down the regulatory hurdles that the company is set to face. And then later, New Hampshire Governor Chris Sununu will join us to talk presidential politics ahead of his state's primary, which is happening tomorrow. Squawk Box will be right back. Apple under attack on several fronts, regulatory, legal, and antitrust. And Steve Kovac joins us more. It's an important stock, Steve.
Yeah, and we're only 3 weeks into the year, and these just regulatory and legal pile-ons just keep happening for Apple. And they're putting some restrictions on Apple's ecosystem, but more telling than that is how Apple responds to all these regulations and legal cases and tries to water them down. Let me give you a couple examples that have been happening over the last several days. You have the Supreme Court, which declined to hear the Epic Games lawsuit. Now, Apple won that case mostly, except for one count, and it's now legally required to let apps offer discounts by sending users to a separate website in order to make their payments. Now, that would normally get a 30% fee to Apple, but Apple found a way around it, and it's still going to charge 27%, just a 3% discount. And some other things going on recently. A concession from Apple, actually. Apple offered
discount. That's not good. Remember what they said about Tesla.
PayPal and other payment services.
They're giving cars for a discount. It's going to kill the margin.
Just last week, they're going to sell the Apple Watch here in the United States without that blood oxygen sensor in order to comply with the import ban over that patent dispute we've been talking about for the last several weeks. But we're still waiting to see how Apple responds to the EU's Digital Markets Act, which is going to go in effect later this year. And
man, what a storm.
Apple's lucrative App Store and other core services. So that's going to be the big one to see if they can skirt around it the same way they've been kind of able to skirt around these other smaller cases that have been hitting them in recent days. It's a lot piling on here.
It's a general. He's in high, obviously.
Yeah.
So it's got
It's a TMC.
I thought my machine might be broken. You know what Apple's market cap is right now?
2.7?
2.961.
Okay, so it's getting close to,
You know what Microsoft's is this morning?
what, 3?
No, 2.961.
They're literally the same.
They're literally, I wouldn't say, this is a point where you can't say exactly the same because one is actually maybe I can't see, 2.963. It may have, but it's changing.
Right. I mean,
It's changing right now.
Here's a question for you.
But it is, they're right at they're right next to, 2.96.
But I'm asking of Joe because I feel like Joe has his finger on
The pulse of everything.
He really
the
does.
market.
Yeah.
He already pre-ordered a Vision Pro.
If you were
what?
He doesn't know what it is. If you could buy either Apple or Microsoft,
Yeah.
but I'm telling you now that you're not allowed to sell the stock
Yes.
for 20 years.
Yeah.
God.
Okay, 20 years.
They're fair.
Which one are you buying?
Microsoft.
You're buying Microsoft.
I think
Oh
most
my
people-
gosh.
Yeah.
That's the
bad.
AI thing.
So it should be Apple then.
But the interesting thing with all this regulatory stuff, Apple's about to get hit where Microsoft was over 20 years ago, and they're going to have to go through this slog of regulatory stuff that Microsoft has mostly evaded. There's some stuff around OpenAI that they're dealing with. So it's interesting to see Microsoft kind of back at the top again and leading this innovation wave, whereas Apple is just making.
But do you think?
Our office is currently closed. If you are calling about a fire or life-threatening emergency, please hang up and call 911. Otherwise, please select from the following options. For after-hours security, please press 5. If you would like to report an internet outage, please press 7. If you have a maintenance emergency, please press 9. If you would like to leave a message, thank you for calling TLC on call maintenance. We are currently busy assisting another customer. Please press 3 to leave a detailed message, including your name, phone number, property, unit number, and a description of your maintenance emergency, and we will contact you within 15 minutes. If this is your second time calling and we have failed to contact you within 15 minutes, please press 5 and you will be directed to a secondary number. Thank you.
Hello, this is James Howard at 107 at Falcon Apartments. Your lot is frozen with ice, and you're going to have a lot of bad accidents here. I tried to pull in, and I almost slid into a car, and there's one that already has. So I get out here immediately, or you're going to have one heck of a traffic jam in the parking lot. Again, we are covered with ice. Ice. Who needs ice? Take me to the porta potty. That'll be nice. Real bad. I parked in the church parking lot. I was able to get out, but it's going to get bad.
Good morning and welcome back to Stock Talk, live from the NASDAQ market site in Times Square. Checking the futures this morning, we'd have some new highs after what happened on Friday, the best day since early December. Looking at 63 something earnings, a lot of data points and company reports. The previous quarter, most of what you're listening for is how things look for the next quarter because they're already in it and they already know how it's going. So a lot of people will be watching for guidance. NASDAQ looks pretty strong this morning, up 108.
Meantime, Hong Kong's Hang Seng Index slipping again today. It's down nearly 8% just in the last week. Investors growing a bit more concerned about China's economic growth and a deepening real estate slump. We talked about this in Davos actually a bunch. Joining us is Kyle Bass, Human Capital Management's founder and chief investment officer. Kyle, it's great to see you. I will say one of the sort of talks of the town last week in Davos was this idea that China was there in force, a big delegation trying to say we are open for business. And I think a lot of people suggesting the reason that they're now saying that they're open for business, if you believe them, is that they desperately need to jumpstart their economy.
I mean, you mentioned the Hang Seng Index down 8% in the last few days. It's down 12.5% this year already, and we're like, what is today, January 22nd? If you look back to Hong Kong, the day that the Chinese Communist Party implemented the national security law in Hong Kong, call it the end of the protests, the beginning of 2020, the end of 2019, the Hong Kong stock market is down 50%. It's over 50%.
Bargain.
Lower. It's dropped every year in the last 5 years running. I guess this is the beginning of the 5th year, so call it 4 years straight, and now down a whopping 12% the first 22 days. The Chinese stock market, Andrew, is down over 15 years when the Chinese economy has grown 500% in the last decade and a half. If you invested in the main index in China 15 years ago, you've lost a third of your money. at some point in time, Western investors realize that they're just paying in to a losing bet, and that the Communist Party and investing in communism actually never works.
So, let me ask you this, though. Given that one of the big clouds in the sort of geopolitical conversation, which impacts every business, is whether you think that
And that's
China
America
ultimately
today.
will try to take over Taiwan. We talked about
That's
it multiple
funny.
times. We've talked about, you know, the efforts in Ukraine, almost maybe being a dress rehearsal for that in terms of how people think about some of this stuff. At the moment, if their economy is as challenged as I think you're suggesting, does that make it more or less likely that they try to make a move on Taiwan? Right now, the conventional wisdom is that they don't, but there's a...
They will with
another
Biden in
issue is
office.
If your economy is not working and you're losing...
Can't you all figure it out, y'all?
Within your own people...
And now you
there
want
have been
Haley?
politicians that we know who have gone to war in those times.
Yeah, I'm in that camp, Andrew. I think when you look at the composition of the Chinese economy, they're facing a real estate collapse, a banking crisis, a youth unemployment crisis that some academics in China say is as high as 46% youth unemployment, and they've admitted to 20% youth unemployment, or north of 20%. And they're experiencing a local government debt crisis, and that local government debt market in China is the equivalent of $13 trillion market. So when Xi Jinping is looking at an epic regulatory failure and financial speculation failure, my guess is he wants to stay in power. As you know, when you look at the Standing Committee, the Politburo, and the rest of the Communist Party, he has purged any member that had any allegiance to the prior leadership of China. Everyone that exists there exists because they owe their life to Xi Jinping in one way or another. So you have a scenario where if he wants to hold on to power, back to your assertion, I believe that he ends up moving. And then geopolitically, if you think about which U.S. administration would a Chinese Communist Party want to challenge or think they could challenge successfully? And unfortunately, the one we have now is probably the most pacifist organization or administration.
So you think right now, if it's so interesting. I was at a dinner last week where somebody stood up at the dinner and they said, "Here's the good news, folks. In the next year, at least for now, China is going to do nothing because there's too many crises going on. They have their own crisis at hand. This new Taiwan president is probably not going to try to poke the bear, and China doesn't want to create a bigger mess given what's happening in Ukraine, given what's happening in Israel, given what's happening everywhere else." You think the next 12 months are even more at risk then?
Yeah,
the conventional wisdom. I mean, this goes to the whole idea of, you know, the conventional wisdom in meeting Davos is always a contrarian take on what really is going to happen.
Yeah, I mean, I stopped going to Davos when they gave Xi Jinping the keynote, and he explained to us that he's the global good guy, and that we should all endeavor to be copying and emulating communism and communism with kind of capitalistic characteristics, and we've seen how well that's gone. You know, Davos is not the crowd writ large that we should be aspiring to be. It's not the North Star of capitalism, that's for sure.
Given that you're weighing in on politics, you want to weigh in on Ron DeSantis, Trump, Haley, and how you think about all of them? Some are clearly more hawkish than others. DeSantis is out of the race, so it doesn't matter.
I'm an amateur political analyst, but you know, I think.
But a lot of your analysis very much has to do with geopolitics and therefore politics.
Yeah, look, I think that I think Trump's going to have a rough go in D.C. I think he'll win the New York case. I think he will at least get a hung jury in the Georgia case. He'll get a hung jury in the Florida case if he doesn't win it. In D.C., March 3rd, I think that there are only two kinds of people in D.C., right? They're never Trumpers and Democrats, and I think he will be convicted of multiple felonies. So will his base continue to vote for him, or where the GOP get behind Haley with all their money and influence and try to unseat him as the GOP rep? I think that's likely to happen. I think that's still a minority bet. But I think that this is going to be, I think it's going to be a Trump-Haley race, and I think Haley could actually beat him.
Who said you're not a political analyst?
Exactly.
We're going to get you a job.
I know, we're focused
that we know. Kyle Bass, always good to see you. We appreciate it. I will just add one comment, Kyle. Typically when we see you, you're coming from your office and you have a beautiful American flag in a triangle, of course, right behind you. Today, you're coming to us from what looks like a bedroom with either a flag or a bedspread draped behind you. Where are you?
My wife now works for The Economist in Paris, so I'm visiting between Dallas and Paris, and I did in my suitcase pack a proper bedspread that has an American flag on it, and CNBC doesn't have a studio yet in Paris, even though the Olympics are coming. So you guys told me to stay in the guest bedroom today.
Okay, God, this guy's a nut.
Kyle Bass, we appreciate it. Have fun in Paris. See you soon. Thanks.
Take care.
Who in the heck is a bass?
When we come back, we will tell you about an accounting probe at agricultural giant Archer Daniels Midland. That is next. And a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back.
We're Marcus by Goldman Sachs. We want to help you make the most of your money. That's why we offer a high yield on AMC is
scale.
Agricultural giant Archer Daniels Midland has placed its CFO on administrative leave as it investigates accounting practices at the company. That follows a continuing investigation into ADM's nutrition business and a voluntary document request by the SEC. ADM said that it is cooperating with the SEC. The company expects to delay its fourth quarter and full year reports, usually scheduled for late January. ADM's nutrition business designs and sells ingredients for products like protein drinks, plant-based meat alternatives, and animal feed. The profits for the unit have been lagging behind analyst expectations in recent quarters, in part because of a decline in demand for plant food-based products. That stock down by 14% on this news.
So presumably I'm not going to say it, but it was on administrative leave for something maybe that wasn't totally above board, and they still were missing by a mile. I mean, if you're gonna be creative in your accounting, you at least ought to be
Unless it was
hitting your
something
numbers,
to try and beef up the
so to speak.
most recent. Yeah.
Coming up, four teams remain in the hunt for the Super Bowl. We're going to talk about the weekend's big games and the takeaways for the big sports betting companies. That's coming up right after this.
Hello?
Hello?
Is this Beckman Apartments?
Yes, sir.
Yeah, the lot's pretty well iced over here.
Yes, sir. I'm aware we're waiting for the trucks to be able to get out onto the road.
Yeah.
Since we use a third party. But we're just waiting on them to be able to get out.
Okay.
Everywhere is currently frozen over.
Yeah. I tried to get in the lot and almost hit a car, and another car tried to do it too, so I just want to let you know. I'm gonna stay home. I put I hope it was okay. I put notes on all the doors and told people to be careful.
Yeah, that's perfectly fine. That's why I've been telling people don't get out unless you have to. It's literally not risking it.
Yeah,
Let's
okay.
look at this weekend's NFL playoff games and the betting landscape. Let's bring in Patrick Reese, Director of the Sports Business Program at Washington U in St. Louis. He is also the CEO of Sports Impacts and a market scale sports business contributor. Patrick, it's good to see you. I think the most, not the most interesting thing, but the Super Bowl is X amount of betting dollars. That's coming up. And then the playoffs are, there's a rule of thumb, 4 times the amount. And what does that come out to? $64 billion?
Yeah, if you base it on last year's numbers, Joe, talking to some of my sources in the industry, last year's Super Bowl, the betting was $16 billion. So the betting on the rest of the NFL playoffs is 4x. So I think this year we're going to see obviously a larger volume of betting because you have now more states that have legalized betting.
What's the growth of that? That's what I was going to ask you. Probably, can you just...
I would say this. I would say I base everything on the Super Bowl. So if last year's Super Bowl was $16 billion, I think this year's Super Bowl is going to be somewhere between $20 to $25 billion gambled. So that means roughly this year we're talking
Gambling
about
is bad.
$80 billion on all the other playoff games combined. This past weekend, those 4 games estimate around $20 billion spent on wagering for those games. And let me tell you, Joe, right now the bookmakers are worried because Detroit keeps winning and everybody that's a casual fan is betting the Lions.
I didn't bet on them. And you know what I do, Patrick? I do a lot of money line bets, which aren't even money. There, you get, a lot of money on, with point spreads, you don't even double your money. So you got to put a parlay on, like an under or an over, pick someone to score. It's harder. So, on any given Sunday, as I used to say, if it's a 2.5 point spread, just take the money line and at least get maybe plus 180 or something like that. So I had Tampa Bay, but it could have gone. Tampa Bay did not really, that wasn't going to happen. But the other 2 games, it could have been either or. Buffalo could have won yesterday, right?
Another heartbreaker. Another heartbreaker.
49ers could have lost, too. 49ers could have lost. Yeah,
another heartbreaker for Buffalo fans when a kicker misses a kick. But going back to the Lions, Joe, right now, based on the numbers, you've got 10 times more dollars bet on the Lions right now, the 4 teams left, 10 times the amount bet on them to win the Super Bowl. So there is a huge exposure for the books. But part of this is it's funny how the casual sports fan is going to bet with their hearts rather than their heads. And a lot of casual sports fans love this Dan Campbell, Jared Goff redemption story, and that's why a lot of money is going down on the Lions.
Well, I watched his halftime interview, and he is...
Jimmy hasn't watched a baseball game, a football game, a soccer game in years. He doesn't turn the TV on anymore. I just got away from it. I don't want to hear you, Joe.
When I read something about how the Peacock stream game was the lowest, had the lowest numbers of the game. It was streaming. To do 23 million in streaming is the highest streaming numbers of anything ever, wasn't it?
It was.
It was a good idea.
Streaming is certainly not going anywhere because all of these leagues know that they covet the younger fan. And this is where younger fans are going. Joe, when I talk to my students later on this morning in class at WashU, these kids, some of them have never had cable. Most of them are cord nevers. Their parents may be cord cutters. And this is where people are going. So you've got to reach people. You still have to have linear because there are obviously plenty of people that still want to consume it that way. But you have to go where people are, where the consumer is. So we've seen soccer do this with Apple and their massive deal. We're now seeing Amazon try to throw a life raft to Diamond Sports Group. In that particular bankruptcy ruling, absolutely you're going to see.
I've had enough. So they're probably talking about DraftKings. What the heck? Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy, and I'm going to bring you up a stock right now that Jimmy's going to be watching. He just now noticed a flag and popping off of a certain moving average, and it's all about chart patterns, moving averages, and being in the now. So we're already in the now on Disney. It's had a rough struggle since wokeism took place. And everything's kind of changing. When there's a change in society, there should be a change in how stocks are affected. So it's a 50-50 chance on Disney right now, but they are definitely pumping it up to the upside. Are we in a bull or bear market? We're definitely bullish. We're at extreme levels. So when I get to extreme levels, I'd be very careful and delicate with how I choose my stocks. It's icy here in Missouri. I tried to get out today, and man, it's not good. Tried to get back into the parking lot and seen a car in front of me swinging down in the parking lot, and I said, "Oh shit!" I thought I could make it, so I'm rolling across, and all of a sudden I start doing that sliding thing, and I was able to get out, park in the parking lot next door where there's no cars, so I have a real good chance of not getting hit. Definitely icy in Missouri. So Walt Disney Company, it's been struggling here lately. They've got all kinds of proxy wars going on, and they're trying to be woke to our children. They come out with a bunch of crappy movies last year that just didn't go too well, trying to be politically correct and teach us what's right and wrong. So yeah, they've had a hard struggle. But I'm going to bring up the chart. I noticed here on the chart that we got a bull flag. They're pumping up this stock real big. I mean, they've been real hard at it. And we did pull back to a 1-2-3B. And we are in a bull flag. This is a bull flag as you go to the upside and you have a Darvas box at a vertical downward level. So we could, if we break out of this, we could go a little bit higher, right around 96, maybe a $3 trade. We got a gap right in here. Or we could pull back and hit that 200 SMA on the daily time frame. That's what I was talking about. The moving average is the 200. We found it difficult to break up here once before. It held support at the first of the year of last year, or back during about this same time period, same day. So that 200 SMA could be a solid support. If you do come back and we touch that, I'd probably go in small and add on if we decided to go ahead and break this resistance level on this bull flag. So I just wanted to bring it to your attention. It's something to watch. I'm not a big time lover of Disney at all, although I've been to Anaheim, California, to Disneyland, and I had a great time, but things have changed. Wokeism has took over, and it's just going to be hard. It's going to be run mostly on momentum. The fat cats love this stock. They want to pump it up. They're heavily invested in this trade. And it eventually move. It will. So just be aware. Buyer, be aware. It will definitely move up. But if you could get it at the 200, I think that would be your best bet to get in at the bottom of Disney. I can't see it going much lower than that now. Unless, I don't know. It's definitely at a pivot point area. I can say that. And that pivot point runs right into the pivot point of this here channel. Let's go ahead and draw that in here. I want to show you what a pivot point is. A pivot point is a place on the trade where it finds support and resistance. So we found support right here. We pumped up, we broke out, and then we came back down, and then we found it again. So we got what you call a pivot point channel right in here. And if we can break that pivot point, which is right around 94, I think we can definitely move higher to the upside. But you can see it couldn't break resistance here, it couldn't break it here, then it did pop. This is when they were pumping it up big. You had that big gap up. That's a sign of bullishness. And then we hit that resistance and it created that bull flag. So if you kind of magnify this up a little bit, right now we touched that 50 SMA. So it could, and we have a symmetrical flag right here, bull symmetrical flag right here. So it's definitely starting to look good. It definitely is. We got a tweezer top up here as resistance level. See how it met right there to there? So yeah, I think this could be maybe even the 50 would be a good spot to start a position. And then if it dipped down to the 200, I'd definitely load the boat. That's it. That's it for Disney. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now.
At 4.387. Let's also talk about energy. We spent some time with Dan Jurgen in Davos. He was right. You know, oil has not actually moved as much as you might think. WTI crude at 73.72.
That's exactly right. I figured it would move a lot better.
Crypto, Bitcoin sitting back down at about $40,766. So it seems like buy the rumor, sell the news, at least on the short term, was the move in the past week or two.
Talked about it that day. If everybody can buy a little bit of the ETF, they really are going to quadruple their money in a year and a half if it goes to 500.
I mean, so the question is,
now it's acting like what you want. It's acting like a currency.
At 40,000.
Yeah.
Is there more upside potential or downside potential?
Maybe eventually. I'm not excited about it. Like I wasn't excited at 47. But I mean, the holders are going to stay. I don't know how long it takes. I figure it'll go under 40. Don't you think?
I imagine it could at the rate it's going, but the question is it going down to 35,000? Going to 38,000? Is it going?
It's probably not going to 17.
You think it's retracing?
No.
Okay.
But I don't think it's going to 500,000 tomorrow. Florida Governor Ron DeSantis ending his bid for the 2024 Republican presidential nomination. DeSantis announced his decision in a video statement posted to X just before the New Hampshire primary, which is tomorrow. Quoting Winston Churchill and immediately endorsing former President Donald Trump. This is after DeSantis placed a distant second behind Trump in Iowa in the caucuses, and then took his campaign to South Carolina before quietly returning to Florida. If you knew how to catch fire in a nominate, we've seen enough over our lives, right? I mean, we just never understand how. Where Jeb Bush, never really could figure that out.
Things change pretty rapidly.
I remember when they settled on Kerry. They hadn't started on Kerry. That was weird. Where'd Bill Clinton come from? How did that happen? Gary Hart, if he hadn't taken that trip on the yacht, whatever it was called.
Monkey business? Was
Called Monkey Business.
I think it was.
You get on a yacht, that should be your first clue. I'm taking a bimbo on a yacht, and the yacht's name is Monkey Business. That should have been his first clue. So I don't know. How do you catch fire? How do you... Ron DeSantis. Hey, I was a good governor. Vote for me. That's all. That was it, right? In his view, that was... And then you didn't go... You do no media. You don't do... It was never going to happen, was it?
For a while, people thought that it was going to happen.
He didn't go out. He didn't go on
TV. But you remember there was a moment, and this actually maybe speaks to media. There was a moment, I remember having a conversation with the CEO of a major media company that has a news organization in it, not our own, and I said, do you think it's possible in the future that a candidate could actually make it through the entire election without actually going on what might be described as MSM or whatever, right? Because at the time they were going, DeSantis was going on Twitter, Fox, and doing podcasts. And I thought, is it possible? But you'd see his ratings in the polls, and you'd think, is it possible that this is actually going to work?
I think it's possible in the future. Sure.
Well, maybe, but maybe ultimately what you do need is real reach, and he seemed to miss that reach.
Right.
There was some arrogance there that you don't need to do certain things. Like I said, we tried and tried and tried and tried and tried, and sometimes you have people that are telling the candidate what to do, and they have no idea. Their staff. Right.
The new year looks to have brought a new wave of optimism to the economy. Senior economics reporter Steve Leisman, who covers the dismal science, has more on this upbeat story. Good morning, Steve.
Hey, Becky, yeah, in contrast to the inflation funk that's been all around the country, it looks to be a rash of optimism breaking out over the economy among both businesses and consumers. Just this morning, we got the latest NABE survey, finds the 3-month outlook for sales, profit margins, and CapEx surging compared to the prior quarter, and that's 61% of the 57 responding companies forecast rising sales over the next 3 months. That's the highest percentage since the second quarter of 2021. A net 30% see improved profit margins, which is above the pre-pandemic level and the best since 2015. Fewer businesses also expecting to charge higher prices, though a larger percentage see higher costs for themselves ahead. The level, though, is below the long-run average for the series. Ellen Zentner, NABE president, Morgan Stanley chief economist, writing the January 2024 Business Conditions Survey results suggest broad improvement, with respondents reporting rising sales, profit margins, and capital spending, while supply chains are improving as well. While it's not entirely clear, what's driving renewed business sentiment, it could be the same thing that could be driving consumer sentiment higher, lower inflation, the prospect that recession may have been avoided, while the Fed could soon be cutting interest rates. All of those are a good brew for happy times, maybe. On Friday, the University of Michigan reporting the biggest one-month surge in consumer sentiment since 2005. Sentiment remains well below the 2019 level, but it has now rocketed up 2 months in a row. Now, there were some areas of concern in the NABE survey. 72% of businesses say they're passing along price increases to consumer. That's up from 65% on the prior survey. Hiring intentions were muted, and wage growth is still expected to be strong. So there are challenges, but guys, they come with both businesses and consumers more upbeat about the outlook than they have been.
What else should we be watching on this front? What are we going to get the feeling over the next couple of weeks, Steve?
Well, I think a couple things. Oil prices seem to be very important for consumer sentiment, and if you care about consumers being happy, keeping oil prices down, I think, is very important. And I think businesses are very attuned to inflation. I think as inflation comes down, and I'll just say one more thing, Becky. I've been covering these sentiment numbers for a lot of years. I don't care so much about the consumer sentiment numbers. I think people still spend when they're depressed.
Yeah.
I think business sentiment matters more. I think if you're sitting there deciding whether or not to make an investment that has consequence for the economy, how you feel about the outlook is very consequential. And so I'm happy to see these NABE business numbers be higher, and I'll be watching some of the CFO surveys as well. And of course, just the general outlook for the economy. The idea that people are more upbeat, I think it matters here.
If you're a business, Steve, and you've got 9% inflation, it's tough to raise your prices and get them to stick when you're doing that. But they can do 3 in their sleep. I mean, they're not going to, they can do. Right. I think as inflation moderates, and they love raising prices. I mean, we even seen the president say that, that's responsible for a lot of the inflation. It's just companies knowing they can raise prices, so they're doing it. But if all they got to do is match 3% on the input costs, you don't even notice. That's like 3 Doritos they take out of a bag or something. They can definitely do that.
I'm going to push back just a little bit on that. I understand exactly what you're saying, and I agree with you. No. I think that after you go through a time when you did well because you could raise prices, it becomes a more challenging environment to do well when prices aren't going up as much. And I think there's going to be some revelations about, who's good and who's bad. The story about the tide going out, who's wearing swimming trunks, so to speak. That if you get back down to a more normal inflationary level, that we're going to see who the good businesses are and who the bad ones are.
Or who's wearing one of those Euro Speedos? Because you'd have to be naked.
Oh my God, Joe! Do I have? Is that what you were doing over in Switzerland, Joe, when you went to the pool?
I'm thinking Faber. I'm thinking Faber again because he's like a championship. He doesn't need any drag, so I think he wears those things. I'm not kidding.
Joe, I was picturing you with knee-high socks and those baggy pants and going cross-country skiing over it. No, you won't do it.
What's the guy's name with the yellow one piece? What's his name?
Oh, Borat.
Yeah. Oh. I got the Borat thing going. Thanks.
Oh, you got the Borat thing.
Can't unsee that. Future.
Thank you very much.
Yeah, you're welcome. Futures climbing as Wall Street looks for the S&P 500 to build on all-time highs. So, look at some technical indicators. Katie Stockton, Fairlead Strategies founder, managing partner, and a CNBC contributor. So we had that good end of year run and then some consolidation. But are we back on track, do you think, for the S&P? And what is near term, intermediate term? How does it look?
Well, I mean, as of Friday, we have new all-time highs, and as a technician, that's the kind of stuff we get excited about, right? We have an unconfirmed breakout, so that would be confirmed.
Unconfirmed.
Wait for those 2
Come on,
weeks
girl.
above for confirmation, but assuming that happens, we can then kind of set our sights on the next measured move price objectives. We've talked about it here in the past. 6,100 from the breakout to new highs is a long-term measured move projection, which essentially assumes the trajectory of the trend off of the COVID corrective low will maintain itself. So it does seem a bit aggressive, as you can imagine. With that in mind, it was such a steep uptrend. But even so, it does dictate a bullish bias, and by the definition of new highs,
I can't believe she
means
said
there's
that.
no resistance left on the charts, and it does tend to generate additional momentum. Also, sentiment tends to shift. Maybe we're also seeing that on the economic front as well, in a way to justify the new highs. So we're excited about it, assuming that breakout is confirmed.
Apple is looking better. I mean, we need the magic 7, whatever they are. We need them to lead us higher, don't we?
Well, you know, Microsoft is bigger than
Yeah,
Apple, and
no,
it
retail,
looks great. I
about the
actually
same.
just posted
Yeah.
a chart of, yeah,
Caught
so
up.
it has this long-term cup and handle formation. It's a bullish setup, and then it also broke out from a consolidation phase. Apple is reacting to short-term oversold conditions near support, so that's what we would want to see. It is certainly disadvantaged as a chart relative to something like Microsoft or Nvidia, but I think we've seen breadth expand enough, and also participation among the mega caps strong enough to sustain the market, even if Apple isn't really participating. So, you know, financials, to a lesser degree, industrials, maybe healthcare kicking in here. I think that can pick up some of the slack if we do see any weakness from technology, but technology so far has exhibited upside leadership on up days. You saw that big time last week in the semiconductor sector, and Nvidia, of course, is the kind of poster child there with a big breakout of its own. But the semis tend to exhibit upside leadership in stronger tapes.
Can we figure out whether we get the rate cuts that we're expecting from the 10-year? Not necessarily, because we could just steepen the yield curve. With short-term rates,
Nvidia
could come
640
down,
is my
but the
target.
10-year could stay where it is. So
I've been
maybe
long in
that's
this
not what
thing.
we use, but what does the 10-year look like to you at this point? Are we headed back to 5% or headed to 3%?
I'll show you the chart.
I would say low threes seems pretty realistic on the chart, and I say that because the momentum shift is pretty evident on a long-term basis. If you pull the monthly bar chart, the uptrend going back to 2020 has now lost that upside momentum. So it took sort of a 3-year shift in momentum, and it is meaningful, and it does suggest that this oversold bounce or relief rally in yields that we've seen right up to the 50-day moving average should be viewed right now as counter trend. So we're looking for the downdraft to resume, perhaps at not such an explosive pace as we saw in Q4, but something that should maybe drift sideways to lower and ultimately take out initial support, which is about 3 3/4.
You think Bitcoin goes below 40,000?
Yeah, girl. Let's see what you got to say about that.
I do, but not for long. You know, I want to respect the uptrend behind Bitcoin and the series of breakouts that preceded this pullback. Of course, it is a sell the news event that we've seen in the spot Bitcoin ETF announcement. But what's been really interesting is to see the relative strength shift in favor of Ether since that happened. So I'm a little bit more excited about Ether right now in terms of its trend and momentum. But Bitcoin's pullback, I think, will ultimately give us an opportunity for those that want to trade it to add exposure.
32,000, baby.
There is support around 39,000. Well, 36 is kind of a key level for me because that's a Fibonacci retracement. It's also a support level based on our cloud model. So we'll see if that holds, but that would be the key level.
And you just, we just finished it. So the Fibonacci number, is that what you were saying? Both you guys. Yeah, you both mentioned that to me earlier. The Fibonacci 36.
I was looking at some of the trend lines.
That's work. All right, Katie, thank you. That's why you're on. Who was that guy?
Smarter than we are.
Yeah, is he a chartist, I guess, huh? I'm gonna look him up.
You have to give her some credit. She said Fibonacci.
Talk about from now on. What a switch. All right, thank you, Katie. See you later.
Coming up on the other side of this, former President Trump facing off against Nikki Haley in the New Hampshire primary after Ron DeSantis dropping out. New Hampshire Governor Chris Sununu is going to join us next. Conversation you do not want to miss. And then later, Palantir co-founder and investor Joe Lonsdale is going to be our guest. Squawk Box coming right back.
I might have to lower that. Could be 628. How did I get this? Ah, I got it on the daily. And there's another one right there. It could be 628. Let's see what happens there. 624.06.
Welcome back, everybody. We are just one day away from the first GOP primary and second nominating contest in the 2024 presidential race. Our next guest is both host and campaigner in his home state of New Hampshire. I want to welcome Governor Chris Sununu of New Hampshire. He endorsed Nikki Haley's candidacy last month, and he's hit the campaign trail with her ahead of tomorrow's vote. And Governor, thank you for being here with us.
You bet. You bet. It's been exciting.
Let's talk a little bit about this. First of all, what do you think Haley's prospects are in your state?
Well, look, she's already exceeded expectations, right? So she came in, there were a whole bunch of candidates in the race, every single one she is absolutely knocked out. We were hoping to build on the momentum. She had a strong finish in Iowa. The real goal is just to keep building on that so she can take more momentum into her home state of South Carolina, where there'll be 3 or 4 weeks or something like that between New Hampshire and South Carolina, a state where, as a former governor, she's won. She knows the people. She's had a lot of success there, delivering results. So that's really the goal. So we've achieved those goals. She's now the only candidate left other than Donald Trump, giving folks a very clear decision, and in some ways a very easy decision. And now it's about getting out the vote. That's really what this is. We want as many folks to come out and vote as possible. A high voter turnout will definitely help Nikki.
Governor, if she loses in your state and then loses in her state, what are the odds that she can stay in this?
Well, New Hampshire's never been a must-win state for Nikki Haley. No one's ever said that. She just needs to show a lot of success and momentum and then build on that into South Carolina. Now, that's a month away. I mean, we'll see where that goes. She has all the potential in the world to challenge Trump and beat Trump in her own home state, given all the previous success that she's had there. So right now, we're just focused on the next 48 hours, getting the vote out. She's the only one on the ground connecting with voters. She's doing the retail politics. She's making meaningful connections. She's going to businesses and craft breweries and town halls. And, we were at the hockey game yesterday, meeting hundreds and hundreds of voters. Those things really matter. Trump flies in, does a rally, and flies out. He's not doing the retail politics and retail connections. That's why she's had such success here to date. And over the next 48 hours, it's just about, again, kind of putting her over the top.
Why did you choose Haley over, not just DeSantis, but over former President Trump to begin with?
So look, there's a couple of reasons. You just look at her background as a governor. Like, governors get stuff done. They don't make excuses for not building the wall. They don't make excuses for not draining the swamp. Trump does that all day long. Haley, as a governor, knows you don't make excuses. You just get stuff done. And as governor, she was incredibly successful. You have the international piece. I don't remember a time when international issues were so at the forefront, probably since the early 90s, of America's importance in terms of being strong and bringing world peace, making sure we don't get ourselves into wars. She brings that expertise better than any of them. And at the end of the day, she's just genuine. I mean, she's just
She's
genuine. It's a genuine connection with folks. So she's a strong conservative, but because she's such a kind of a connected person, she has a broad spectrum of appeal to everybody. So that's what you want in a candidate: strong conservative values that then bring the young Republicans that left the party. We want them back in. Those Republican suburban moms who in 20 and 22 left the party, she brings them back in. So she makes this party bigger, and she, again, being a good retail politician, she has that connection. A little bit of that live free or die thing in her, if you think of it that way.
Governor, you can make sense forever. And I'm not sure if anything really changes. In other words, I'm nodding with everything you're saying. There's an op-ed piece in the Journal today, but there is one scenario, we just had Kyle Bass on it, saying that in Washington, D.C., it's possible you could get a felony conviction. That could change the landscape for President Trump. He didn't think Florida, didn't think New York, but maybe D.C. So that might change things, because 31%, maybe it does, maybe it doesn't. Maybe it emboldens the base even more because they think it's so politically motivated. But, you know, Tim Scott was going to never, even Ron DeSantis, when it was all said and done, turned around and, you know, finally endorsed the president. If it doesn't work out for Governor Haley, Ambassador Haley, whatever you want to call her, 3 months from now, will you be working for Donald Trump to get him elected if he's the nominee?
No, look,
Never.
this is going to work out. I've always said.
Let's say it doesn't. So what would you do? Who would you write?
Not even thinking there, Joe. I'm not. For me, that's a crazy hypothetical right now because my only focus is. No, I'm just saying we're not. I'm not thinking about that.
You will never say I'm supporting the Republican nominee. Those words will never come out of your mouth.
So let's be clear.
Good job, Joe. Call this
We're
out.
going to vote Republican in this thing. There's no question about that. We're supporting the Republican nominee. Let's not be silly. But the only focus now is showing that momentum that Nikki's built, getting her a win here, carrying that to South Carolina. That's the mission.
It's tough. I don't know. It's tough for everybody to figure out what to do, and everybody ends up looking like, you know, you used to be saying this. Now here you are. You just, and it's weird the way the inevitable.
Yep. Joe calls them out all the time.
You might end up.
I can't vote for Haley because she's a warmonger.
Yeah, Joe, this is New Hampshire politics. Nothing is inevitable. We always buck the trend. Watch what happens.
Okay.
Governor Sununu, thank you for joining us.
Live for your job.
You bet.
There it is.
Thank you, my friend.
Coming up on the other side of this, AI was a hot topic in Davos last week. We're going to hear from tech investor and Palantir co-founder Joe Lonsdale and get his thoughts on where the technology is headed and so much more. The futures right now in the green, 75 points on the Dow. Looking at the NASDAQ, up about 120 points. The S&P 500 looking to open about 18 points higher. We're coming right back.
Why can't I get that number up there? Ah, there we go. Good morning, retail traders.
Eastern.
I love you, Becky.
Coming up, tech investor Joe Lonsdale will join us. And in the next hour, Council of Economic Advisors Chairman Jared Burns.
Okay. La 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 la. La 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 la. Do 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 do. Good morning, retail traders. I'd be very hard pressed not to call this next stock a bull, but this is the sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. So I guess everybody knows what I'm going to talk about, right? NVIDIA. NVIDIA is the strongest stock going right now, and everybody talks about it, and I've got targets that I want to hit, and if we pull back, that could be good too. But we're definitely on a roll, and I'm going to bring up a chart pattern that I talk about a lot when I'm trading securities. I should find it here first before I pull it up. It's called the Three White Soldiers. Let's start this over again. Do. Good morning, retail traders. This is Washboardjim. I want to talk about one of my favorite trades right now and what I'm looking into and the one that I'm in. It's called NVIDIA. We're definitely the bullish one out there when it comes to AI. They've been wanting this number. They're going to get it. I'm going to give you my resistance levels and where I think it might pull back if it needs to have a small correction. But the chart pattern we're going to discuss is going to be the 3 white soldiers. 3 white soldiers leading out of the gate. 3 white soldiers sometimes come up and you get you a little bear flag coming in there and it could pull back to a support level. So this is the stock we're going to be looking at. We're definitely setting up for 3 white soldiers, and we could get one more in the next coming week. But the target right now that I want to hit on NVIDIA is going to be 624.06 and 640.57 long. Now this is on a weekly time frame. If you pull up the yearly, you can see it much better. As we hit resistance levels, that's 624, and then that next target's going to be on this trend line that we're moving up, and that's right around 640. So the pullback support on this is going to be off this first candle here on the daily, and we're going to go ahead and get rid of these, cancel them, and I'm going to put a new support right down around 580. I'll set me an alert right there to catch the bottom body of this here candle. I'll be prepared for that if it does pull back and hit that bottom candle part of that body. We'll take it to the 20-day 1 hour, see if I see anything different. Definitely like that position right there, and maybe another support level right here at 567. I mean, once it hits that target of 650, that's what they're all looking for. The fat cats, they've been calling it out for a year, for 8 months, and we finally broke the resistance level when it come time for the first of the year, which I messaged Jim Cramer. I said, we're going to hit that 650 now, and that was on the 31st of 2023. So we'll go ahead and put that support here, and I'll be set up just in case it pulls back to this yin-yang. What was resistance now becomes support. Same thing right here. But we're going to see if we can catch it off that 580. So I'm long in this one to 624. I'll probably shave some off and then see if I can get 640 out of it. If not, I'm going to go ahead and take my profit. I've been in this ever since $500, and we'll just see what happens. This is NVIDIA. Now, the way I like to look at this here is if we do have these 3 white soldiers come up, we're going to look for that candle, that next candle, and see what it represents. If it represents a bear flag, I'm going to go ahead and definitely sell my position. It can drop back down and maybe find support off that second crow or that second soldier and bounce back up. This is a highly momentum stock. This is not just a cheapy pump and dump kind of thing. So they've been long in this, and they really like this, and they'll probably start raising target prices on this once we hit that 640 area, 650. I wouldn't doubt if they throw a figure out, maybe 850 or 1,000 like they were doing last year. 1,200 was even said last year, and I'm just going, ugh. Wait until we break that 5 before you start quotating them kind of resistance levels. But it is a continuation pattern of a bull flag, and it could still keep going up. But I always like to see if it has a small correction. Look it up, 3 white soldiers. I'll put a little link down in the bottom of the content for you to learn how to trade these. This is one of my favorite patterns. If we sell off, we have 3 black crows. I'm going to watch that candle right after the crow and see if I can take it to the upside and sell it at the 3rd soldier. So that's the way it is. Have a great day, retail traders. Washboardjim talks about chart patterns, moving averages, and being in the now.
Magic wand, are we? How are we going to do that?
Well, I
Gotta
mean,
devalue.
you got to fire a lot of people. That's a whole other question.
I
I know we're running out of time, but I want to talk about this new university that you're starting. You have 100 new students that are going to start in the fall. It really is about free speech and free thinking. I ran into Neil Ferguson in Davos. He's one of your co-founders. You're doing it with Barry Weiss. Of these 100 students, what is their worldview?
Well,
for the most part.
I mean, we want to have one of our top universities actually bring people together who want to be part of the solution, who want to be thinking about a future that's more optimistic. I think our culture has gotten way too negative. Our culture has gotten way too censored. You have a lot of people. It's very easy to criticize the man in the arena. Let's all try to be the man in the arena. And you know, we're doing scholarships for the first 100. They're all getting to go for free. There's going to be 10 of them that get even paid $100,000 extra scholarships for the. But we're looking for the best and brightest. We want to have America's elite actually be part of something that's functional.
Did you guys see, by the way, Larry Summers going after Harvard again over the weekend, saying how unhappy he is about one of the co-chairs that's been appointed to this anti-Semitism group has a bizarre history, really, as sort of an anti-Israel. I don't know how you describe it. And so Larry was out there saying, how is it possible that Harvard is appointing this professor? He's saying the professor could be on the committee maybe, or could be a professor at Harvard, not a problem. But to appoint this particular individual to be the co-chair of this group was bizarre.
As Milei's been very clear at Davos, I thought he was the star there. You have anti-Semitism, you have collectivism. These things tend to go together. As Karp was saying, it's canary in the coal mine when a society is attacking its most successful minority, when it's attacking the Jews.
You better clean your liberals up.
Wrong with that area.
Joe, it's great to see you.
The true colors start to come out.
All right, when we come back, we'll get you up to speed on this morning's biggest stock movers, plus the latest in the ongoing situation in the Red Sea. We will talk to Admiral James Stavridis on the global impact, what this means for shipping. Stay tuned. You're watching Squawk Box, and this is CNBC.
One thing I know about liberals, they're hard-headed. I was one. For many years. I get sick of it. Okay. Let me see. What am I doing? Where are you? Dip. There we go.
CNBC.
Let's get to Dom Chu with a look at this morning's pre-market movers. Probably in a good mood. You're lucky. You're lucky. It wasn't a given.
No, there was not a lot. I will fire through those movers, and then we'll get to what you're talking about right now. So let's start here, Joe, with a check on Macy's. The department store chain behind its namesake brands, Bloomingdale's, Blue Mercury stores. It's up roughly 4.5% right now, just around over 30,000
Macy's
shares of trading volume pre-market.
cutting-
It said it has rejected a $5.8 billion proposal from Ark House Management and Brigade Capital to take it private. Ark House and Brigade, remember, partnered on a deal to pay $21.
And Macy's
a
had
share
so
for
much hard
Macy's.
times.
And
The
Macy's
story will never
Brigade
stop.
citing, amongst other things, concerns over how the deal would be financed, also over the valuation, the price being paid. So Macy's shares up roughly 4%.
I mean, years and years
Elsewhere
and
on the corporate
years.
side of things, shares of Archer Daniels Midland, they've shed nearly, at this point, 12.5% of their value, close to 170,000 shares of volume. The food processor, Farm Supply Company, is the subject of a probe by the Securities and Exchange Commission with regard to some of its accounting practices related to its nutrition business. ADM has also placed its chief financial officer on administrative leave, effective immediately, and lowered its profit forecast as well. Analyst teams at Goldman Sachs and Baird, amongst others, have downgraded the stock this morning, so watch ADM down about 12.5%. And we'll end with an analyst call on rails. Shares of both Norfolk Southern and Union Pacific right now, you can see catching a bid up roughly 1% in the pre-market, but on relatively thin volumes. Bernstein analysts have upgraded both railroad stocks to outperform, and they raised over both their price targets. They cited, amongst other things, Joe, better macro trends in freight cycles and elsewhere. So keep an eye on those rails. And now I'm happy to talk about some of those moves that you saw this week across all sports.
The best teams seem to get there, though. Doesn't it seem that way?
Yeah, the 1 and 3s, right, for both sides. I think this is the interesting part about this. Everybody. The AFC side seems way more compelling right now, right, with regard to the storylines there. It comes right back down to Lamar Jackson, Josh Allen, and Patrick Mahomes. And Patrick Mahomes is, of course, the defending Super Bowl champion in quarterbacks and whatnot. But, I mean, this idea that you could have this many top-notch teams, top-notch players, all of these great quarterbacks that are playing right now, I think it's an amazing thing. And, by the way, you got to feel good for the city of Detroit right now. Some of the best playoff success they've seen since the 1950s and 60s.
Good morning, retail
This is a
traders.
huge thing for the city as well.
Well, I was talking about Green Bay, too. You gotta
yes.
feel good for Green Bay and that quarterback. I mean, I think he might be it.
So here's what I would say, and I have there's a lot of I guess conflicting feelings I have here, right? Because on the one hand, yes, it was I was sitting there with some friends watching the game. Obviously watched it all the way through. It was excruciating to kind of sit there and go through it. At the same time, the Packers team looks really good. And this is a Packers team that, remember, smoked the Dallas Cowboys just the week prior to that. And Jordan Love is going to have a huge, bright future in this league. But it makes me also feel good that the Niners could beat a team like the Packers that really trounced the Cowboys the week prior. So I think, I don't want to feel so confident about it, but I feel like the Niners, they're pretty good right now. They just got to get Deebo Samuel sorted out.
Yeah, that's what I mean. This was without him, but I don't know. That running back is like a freak of nature.
Christian McCaffrey, I think, is the offensive player of the year. I mean, I don't vote
come
on this
on,
stuff.
he's
Sports
today.
today.
Or is that generous?
No,
I mean,
I don't.
Joe.
I'm not sure he is, but I can tell you that he's
got
probably
those
one of
legs, I guess.
That big 39-yard run, breaking so many
Called
tackles.
talent.
Yeah,
I think it might be called talent and speed.
I think it's some God-given talent. Yes.
Yeah,
I think
these are. You have that. You're not fast. You got your golf swing is so slow. That's your whole.
Well, then we didn't get to talk about it, and I hear the new music playing, so I'm going to stop. But that whole Nick Dunlap being the first amateur to win a PGA event since Phil Mickelson back in 1991, we could go through a whole other dissertation about that.
Yeah, I'm not going to go where I was thinking with what's going on in golf. Never mind. Thanks, Tom. Squawk Box will be right back. The U.S. military calling off the search for 2 Navy SEALs who were lost at sea during a mission to intercept Iranian-made weapons before reaching Houthi rebels in Yemen. The raid in the Arabian Sea was conducted on January 11th, and the Navy seized an array of Iranian-made weaponry, including cruise and ballistic missile components. Joining us with more is retired U.S. Navy Admiral James Stavridis, who is a former NATO Supreme Allied Commander. He's now Carlyle Group's Global Affairs Vice Chair and an NBC News Chief International Analyst. And Admiral, thanks for joining us. I mean, you add up all the things, all the trouble that Iran has been fomenting or causing, and the list is long, and, you know, they say, well, we haven't lost anyone yet. I mean, you can almost directly tie the loss of these 2 great men, these Navy SEALs. I mean, Iran is to blame for a lot of this stuff, but the Biden administration has a tough task because members of the Democratic Party say you have to declare war to even, you know, launch another strike against the Houthis.
Yeah, let's start with the 3 H's, Houthis, Hezbollah, Hamas. And I get it, it's confusing. It's one more wrinkle in this endless frustration called the Middle East. But you're right, you can forget all of those names and simply substitute the word Iran. Iran is the proxy, the puppet master, the leader of these proxies. And as we saw in the tragic death of these 2 Navy SEALs, by the way, fulfilling their mission, that's their job, to go and find that kind of material, and I would argue they are contributing to our security with their very lives. But you're right, Joe, the administration's choices are unenviable, particularly in an election year. No one wants to get dragged back into the Middle East. That's why there are speed breaks, both from the left in terms of, as you point out, do they need a war resolution? And on the right, funding. So it is a tough basket for the administration. But on the Houthis, to conclude, they have to be addressed. Otherwise, to the point of squawk box and business and the global supply chain, we're just going to see oil prices and prices of goods inexorably continue to rise. That's not acceptable either.
It's frustrating and annoying that Iran knows exactly how far to take things. They don't want the big conflict either. So, but they know exactly what they're doing. Just a thorn in the west side, and down the road, it might not always be like that. If they ever really did.
Stocks to watch on volume today. We got earnings coming out on Tesla Wednesday after hours. So this is going to be a fight between the Bulls and the Bears. I got a target of 217.50, somewhere up around in here. Support still holding at that 207.46 area. I got 56 is what we hit. So it still could be in play, but it's going to be a tough one. EV not getting a good name for itself here lately. EV in general. Because it's cold and it's wintertime. They don't hold the charge up well. I did a video here on NVIDIA. We got two soldiers coming out of the weekly time frame. I think this thing can still go higher, but I've got a support right around 580 just in case it don't. PLTR called this out Friday. Per swing, we come out of this flag. We've had some real strong momentum to the top side, and then she broke out today. We got a box to hit up here. The next resistance is right around 1780. I really used to bash the CEO of this company, but I listened to him over in Davos, Switzerland, and I kind of like the guy now. I mean, he's straightforward kind of guy. I mean, they're always going to get that government contract money for defense contracts. So, yeah, I think we're going to eventually break out on this one this year. Definitely was at a good spot. We had an inverse head and shoulders, and we broke out of it with a nice little resistance plunge Friday, and then we broke out of that flag. So keep that in mind. QQQ. My good friend Vegas called this one out down here a couple days ago, and we're still banging on this one here. Resistance level, we broke the all-time high, so it's here on out, it's up to you where she's going to go with the momentum. We got Mara pulling back. Bitcoin's kind of struggling a little bit right now due to selling the news theory, and we did pull back to a support level. I got 1377 for low entry to take this trade if we do pull back to that number. PayPal has really had some strong momentum here lately. 20-day 1 hour time frame, you can see the great run we've had on this. Support level is definitely going to be the top here at 66.62. I'd set an alert right there. We got Sophie. Here's another pump. This one's had a pretty good sell-off. People are talking about it. I think we had a 1, 2, 3 down here at the bottom. Resistance to break on this one here is going to be right around 8.817. And then if that breaks, we can run this up to 861. Support is going to be right here at 749 to get into that trade if it does pull back. Coin broke my support level. I had 130, 129.16 on the Fibbies. 50% pullback. We hit it. We bounced up a couple of days. Now we've pulled back some more. We could drop more to the bottom part of that Fibonacci, right around 38.20. The price is right around 118. DWAC. The governor of Florida stepped down, gave the go ahead for Trump. The Trump's not in the swamp. Haley is. Wall Street wants Haley to win. They're going to put her money behind Wall Street. And the progressive liberals want Haley to win because they know that she can be beat. So that's the setup. They're going to put the money behind Haley to get Trump out of there. I don't think it's going to work. To me, she's unelectable. But who knows? Who knows? When you got the government, you got not the government, but Wall Street backing her up, and then all the progressive liberals backing her up so they can go ahead and beat her when it comes time for election. K-Web, DWAC. Let's put this to the daily. Dang, man, I can't even get the daily on here. So we're using the weekly time frame. Support level, I have a low support of 22.44. We're definitely need to break the 28.03, and we did that. The next resistance is going to be right around 32. I'm going to bring us to the 20-day. Yeah, I'm going to stick with that 26.74 for solid support, but we could bounce right here. I'm going to put an alert right in that number. That's 27.61. We've got Boeing earnings coming out. We definitely started to reverse to the upside a little bit. Now there was another fire on a cargo plane that happened last week. It looked pretty scary, it flying up in the sky. You could Google cargo plane, Boeing, fire, and see what it looks like on YouTube. In fact, let's do it.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account.
I hate these commercials.
Genius Tasty Trade. It's the last thing Boeing needs in
Look
the
at that
wake of
fire.
that flight that lost a door plug in the air. You may have heard about the Boeing cargo jet that made an emergency landing, reportedly because of an engine malfunction. Now we're hearing from the woman who shot the video being seen around the world.
Oh my God, it's on fire.
It's shocking video.
Fire, fire, fire. Water, water, water. Oh, water. You burn me.
The cargo plane had just taken off from Miami.
So there you go, just taking off of Miami. I had to hurry and land that thing real fast. So that could be another dent in Boeing. But you got the fat cats again. They don't want this thing to go down. It has since they alerted it. They said it wasn't going to go down, but it did. It did hit my solid support at $200, under 200, and we bounced off of it. So now my new support is going to be 208.03 to take this trade and run it back up to the upside and try to break this bear flag. And that's Boeing. It's not in good shape right now, but it'll get pumped. TSM, another outstanding run on this stock here on earnings. I think we need to consolidate. It wouldn't hurt to put the fibbies on this one here. Just take it to the upside and bring it down from the break. Where I've almost got it at support at 108, but we could stop here at 109.85, 110. It definitely needs to consolidate in this outstanding run that it has placed already. I got a target to 120 on TSM. Now AMC's getting pumped big time. So this is one to watch if you're a pumper. It definitely got people pumping this stock at these levels. This is a me stock. It'll definitely get pumped. So if you want to go in small, I would, and then if it breaks, but I got a target on this to $5, 491. And if it breaks that $5, then we could get a higher catalyst. Now, like I said, this is a big pump. I personally don't get into Hollywood, but I know what a pump is, especially when I follow one for 5 or 6 years. It's a me. Meta came out last week with them glasses, that new thingamajigger. This thing still has legs on it. Support level right now at 382.28, and that's a big, well, that ain't too bad. It's $5, $6 pullback. So we'll see what happens with this Meta. Google's undervalued, but it's had its breakout too, along with all these others. This thing can go higher. We'll go to the 3-year, 20-year. We broke the tweezer top up here, and the long would be 152.10 at the all-time high. China's not a good play right now. Netflix earnings coming out. I think subscriptions are up. This could be one that we could go long in, but I want to catch it if it pulls back off earnings and then go ahead and take the trade. I'm not going to take the chance to run it up. Plus Disney, this is the big pump here right now. They're pumping the heck out of it. Wall Street is. They want it to break this resistance level and move up to the next resistance of right around the double top on the 20-day, right around 94.32. Those are the ones I'm going to be watching. There's a lot more going on here. Lilly, I missed the short on this one here. I'm so upset about it. It did hit my support level and bounced back up. So right now we're at a shoulder line, and it needs to break it to double top. CNBC might get back in here and start pumping this stock again. Yabba dabba doo.
Into the question of whether the rally can keep its legs, and I feel like this is a question we've been asking for a while, Mike.
For sure, Becky. And it was a long wait for between all-time highs for the S&P 500. You see the full span here. It was the first trading day of 2022. That was the last one. So you can look at history to maybe get a clue as to whether we can continue to the upside. And generally, when the S&P has spent more than a year below its former high,
I've been mocked about history repeating itself. Well, it does. That's what I do a lot of times when I'm trading stocks. I go back. I always say history repeats. It does a lot in the market.
What, of course, you had happen in here was 500 basis points of Fed tightening, a massive generational inflation shock. 10-year Treasury yields went from 1.5% thereabouts up to 5%, and now back closer to 4%. So clearly a lot going on there. This little breakout here, S&P 500 has definitely been flattered by some of the bigger tech stocks. So take a look at the equal weighted S&P 500, which did have a great run to finish 2023. And this is a one-year chart, so just the past year. And you see we're basically at these levels that we topped out on both early February and then in July. But it still doesn't seem like you've completely given back a lot of that fourth quarter rally. So hang in there. It shows the market is at least able to capitalize on relatively good economic news, which is generally what we've gotten, better than expected retail sales, jobless claims, things like that, and not necessarily hinge everything on whether we get a March rate cut, because those odds have come down pretty substantially in the last couple of weeks. Just in terms of, the big winners driving things, take a look at NVIDIA. Compared to the NASDAQ 100, this is only a 6-month chart. Wasn't able to pull it up. Trust me on this one. We're having trouble with the multi-line charts here, but NVIDIA has added $250 billion, $250 billion onto its market cap year to date. That's 3 weeks. That's about half the net market cap gain of total S&P 500. So obviously you're going to be able to complain that it's not been a broad rally this latest stretch, but I don't think that necessarily completely undermines the bull case, Ben.
Mike, that equal weight S&P chart was really interesting. The peaks and valleys,
Yeah.
I guess, especially between August peak down to November and then back up so quickly. Was that all Fed and economy driven?
It was largely, I would say, rate driven one way or another. I mean, so there's greater sensitivity below the surface of the S&P 500, it seems, to what yields are doing and whether people feel as if they're kind of gaining momentum to the upside. That's what was going on right in there. That was when people decided too much Treasury supply. We had this non-fundamental gain in Treasury yield. So a lot of it is that, but it does wax and wane with general confidence in the soft landing scenario one way or another. So it's a cleaner view of what the typical stock is up to.
All right, Mike, thank you.
Yeah.
Joins us right now to talk on set about the markets and the new all-time highs. Gabriela Santos is here, Chief Market Strategist for the Americas at JP Morgan Asset Management. Good morning to you.
Good morning.
So do the highs beget new highs, or does the highs beget some reconsideration about where to go next?
So over time, we do see all-time highs beget new all-time highs. So over the next decade, we do expect annualized returns of 7%. So that means we can spend a lot of time
tell us of the next decade. That's great. Okay.
No, but truthfully, I think in terms of the very short term, right, as Mike was just pointing out, a lot of this has been driven again by the Magnificent Seven. So it'll very much depend on what we get out of earnings that start next week. Not just in terms of the fourth quarter earnings from these big tech companies, but most importantly about the guidance for this year, where expectations are already pretty high. If you look at the multiple, their concentration in the index at all-time highs. Can the earnings actually catch up to their weight in the index? So that's at the overall level. What we're most excited about is actually the equal weight index or all those other sectors. And it will depend on right-sizing some of these expectations around growth without inflation and rates coming down.
So to the extent that you're telling people to rotate, how are you telling them to do so?
So first off, we're fine-tuning how we talk about investing in stocks, right? Specifically, we spent all of last year talking about the Mag 7. Well, they're 7 individual companies, right? We like some of them more than others. The second thing is to think more broadly about this AI theme. Last year was about pricing in the first winners to monetize this transformative technology, but this can start to sprinkle through to other winners, and especially looking at...
I've been through a lot of bubbles. And this excitement goes almost to every bubble that I've seen, I've went through. I remember the dot-com era. It's just when you get up to the real high levels, like I said, this is probably the strongest bubble that I've seen. Well, I mean, the dot-com era was huge. When they invented the computer and the internet, and that was a pretty big transforming position. Then we had the cloud. that was another bubble. And now this AI, it's always been tech. Tech has always been the leader in the market, in my opinion, ever since I've been watching it. I've always been leery of energy and healthcare, but tech has always been my favorite trade for the last 20 years, tech.
Some of them, very much. I'm not allowed to talk about.
You're not allowed to say which ones?
No, I'm not an analyst, actual corporate company
She is
analyst.
an analyst, folks.
So
She's
I
just
am
not
allowed to
stop.
publicly mention company names.
Right.
But we do like, actually, 4 out of the 7 quite a lot, and so we would want to actually overweight them versus others that we would want and prefer to underweight.
Right.
And it's exciting this year, you're actually seeing more of a differentiation
Wait a minute,
between them than you were last
You
year.
like 4, but you can't tell us which 4?
It's like a secret.
You got
It's a real problem.
I don't have the license
But you
that
do
allows
like
me
4?
to tell you.
Would it be?
As JP Morgan
Would it be in
Asset
hindsight the 4 that do the best 6 months from now? Were those the ones you like?
No, our portfolio managers
But you do
look
like 4.
forward.
But then you have to tell us, or you have to kill us if you told us.
I'd have to.
Tomorrow, can you
Take a
have one of your colleagues come on and tell us about which 4?
Yes, we can.
Oh, we can organize that?
We can organize.
Could they message you right
my
now?
people talk to your people.
Okay.
They can't message you right now to tell you what? No. Okay.
I do know which ones they are.
They can give you dispensation. I
But
can
you
give
have
you
to tell us.
dispensation right now. Separately, though, in terms of your expectation of what the Fed really does and how that's going to impact everything.
Look, I think we're just, the market gets excited, you kind of overprice rate cuts. Really, the Fed is going to start very gradually. They're just talking about fine-tuning, cutting nominal rates to keep real rates stable. And then down the line, we don't think this year, but next year, maybe the year after, as you start to see the economy softening, then they start to pick up the pace of rate cuts. But every investor we talk to, whether it's March, May, June, is just fine-tuning in the short term. Ultimately, we're talking about being on the other side here, rate cuts, and that's much more of a favorable environment for bonds, for stocks, and it really increases the opportunity cost.
But when do you think
of
all this
cash.
happens?
We're thinking more mid-year. That's probably when, especially the inflation data, would give them enough ammunition. This Friday, we get PCE for December, 6-month
Got
annualized.
GDP coming, I think, on Thursday, right? Wednesday, Thursday.
On Thursday, I believe, Wednesday or Thursday.
Yeah.
And really, the data this week is set to confirm what we got everybody excited late last year, which is that you can have growth.
Right.
GDP, we expect at 2.4%. At the same time, that you actually continue seeing disinflation. So we're right to be excited about rate cuts. It's just in the short term, it can drive some noise on the short end of the curve about when it begins.
Do you not fear that the rate cuts are only going to come if things are worse?
No, because I do think that was the most important thing Chair Powell acknowledged at the December meeting. It's okay. We can have growth and continue to see disinflation. Structurally, nothing has changed in this economy that makes inflation sticky at 3%. We don't have a wage price spiral. We don't have inflation indexation in this economy. So why wouldn't it normalize with growth at trend at 2%? Okay. And we think we'll be there in the middle of the year.
Gabrielle, thank you for coming in. And thank you for calling.
Good job,
people,
Gabrielle.
Calling our people so we can find out about these
the
4 wonders of the world. That's what it's called now, the 4 wonders of the world.
I don't want to know. That'd be a big letdown. Now I know that there are 4. Yeah, there's 4, but we just dust them.
It should be 7 wonders of the world.
What 4 do you think it is, Andrew?
4 horsemen.
Which 4, if you had to pick?
Not of the apocalypse.
Which would be your 4? Which would be your 4 favorites?
I'm assuming that she's going to say, here's what I'm assuming. I'm assuming she's going to say Microsoft, Apple,
NVIDIA?
She might actually say Netscape and Meta.
Nope.
Not Netscape, okay.
Nope. NVIDIA and Meta, you idiot.
She said Netscape.
I'm just.
That's why. You know what?
I'm either.
You shouldn't be doing it either. Because if she said Netscape, we would.
And I'm young. I'm young.
Right.
I'm either pulling a Trump or a Biden right now.
Yeah, exactly. Or a combo.
How about that?
Combo.
That's a good one. How about Lycos?
You know, it can happen to the best. I do some things occasionally, and it's like, it makes me feel bad for
Things have
I need more
to
coffee. I'm jet lagged.
We all
I'm
can't.
jet lagged,
It's not
folks.
just age. It's sometimes you're
And it's being on
distracted.
camera all the time.
Sometimes you're distracted. You get distracted.
Yeah.
Okay.
Netflix.
Thanks.
How did I do, by the way?
You did great, Aaron. Three of four.
3 to 4?
No.
No. What?
Voted 2 and bad, I suppose. 50.
Two and how much? See how much better this is not knowing. Coming up, we're going to get into the state of the economy with White House Council of Economic Advisors Chair Jared Bernstein. He still comes back on, and he knows we're going to ask him some of the polls and things like that. We'll see what
Jared.
what his story is today. First, as we head to break, check out the shares of JetBlue and Spirit Airlines. The companies say they're appealing a federal judge's ruling that blocked a proposed merger. Judge Pyatt said that it would mean higher prices for consumers that are sensitive to higher costs. Stay tuned. You're watching Squawk Box on CNBC.
Didn't Save have a run Friday? Yeah. I see it going back down. Somewhere around 535. Maybe. 6 is the magic number. $6.23. I don't want to get out on the road here in Missouri. We had a nice storm back in 2007 that paralyzed this city for 14 days. And I don't want to see that happen again. It was cold, no electricity for 14 days. I slept with my dog, had a chocolate lab. I said, "Daddy, do I get to go to bed with you and keep you warm?" He was my warmth. 0-degree temperature for 30 days. It was devastating. Electricity lines down all over the streets. Every time I heard a tree crack, I figured it was going to hit my house. It happened about every 3 or 4 minutes. You'd hear a crack and you go, "Oh my God." If you ever heard a big tree branches crack, I'm talking huge. It's a scary sound. One right after another. Trees down everywhere. It's very bad. I got a picture of it. Ice. Who needs? And then I moved to Hawaii after that. I said, I can't take this anymore.
Got a couple of big economic data points on the way this week that the Fed will be watching closely as it contemplates its next rate move on Thursday. We'll get the first look at fourth quarter GDP. And on Friday, the Fed's preferred inflation gauge. Joining us now on the economy, White House Council of Economic Advisors Chair Jared Bernstein comes on good or bad, thick or thin, no matter what, and you always put a pretty good light on what the Biden administration has been trying to do.
These branches
Thank you.
would fall on top of the cables.
Go back years. You were
yes, we do.
These trees, branches are hanging down to the ground.
By talking about some of the things Jamie Dimon said last week, and it almost sounded like he was normalizing.
That's about 3 inches of ice.
That's what a lot of people, Democrats, said. They were mad at him for this. But what he was really doing, I think, was giving some tough love to Democrats. So, and I was going to start with that too. I know you're going to say everything's great with Bidenomics, and retail sales was because of Bidenomics. And then I'm going to say, then why do so many people not feel financially healthy. Jared, the latest poll was 13%. It's an ABC Ipsos poll. 13% of Americans feel like the Biden administration has benefited them financially. I think you got to own that and try to address it.
It makes perfect sense.
They don't know what, you know, they don't know what.
The rich have got filthy rich under the. It's trickle down economics. They printed $6 trillion. Just imagine it. In 3 years. All that goes straight to the top 1%. Then they trickle it down. We get a little piece of it. And Democrats are easy to fool. This guy's a big liberal. I don't like listening to him.
Say that consumer sentiment has improved amid a drop in gasoline prices.
Oh God, the drop. Gasoline was at $4.50 a gallon, you idiot, and it's still up $1.
Been listening to your discussion this morning and hearing more optimism about that. We've maintained a strong job market, easing prices, rising real wages, and now we've got this stock market result, which I would argue is no accident. It's based on an economy that has continued to defy expectations.
And the only people that got rising wages is union workers and the government.
Your warning and Jamie's warning, we take to heart. But the question is, are we on the right path? And I think the sentiment indicators are clearly beginning to reflect that.
I guess the market took a couple of years to hit the highs that we had hit. So we are matching those. And that is certainly true. But I'll tell you what
I was wanting to go out and get some chicken this weekend. So I went to the local grocery store, and a 6-pack of chicken breast was at $33. At one time, I could get it for $12. Chicken breast. 6 of them. 33 frickin' bucks.
Jared, and it was so nasty that now it's come down. As you say, gas prices have come down, inflation has come down, but people are still spending 30% more at the grocery store, even though now
good job, Joe.
It's still in there. And wage gains, real wage gains didn't start until mid last year. So people are still, their buying power is less than when President Biden came in. And you just have to acknowledge that and not say everything's great and that Bidenomics did all this.
As I said in my first set of comments, and as the president says, every time he talks about this, prices are still too high. We very much agree with that part of your rap. But let me tell you where
And I don't think they would be that high if they didn't go out and spend this $6 trillion.
So on fiscal policy, absolutely, the American Rescue Plan was essential to get shots in arms and checks in pockets to get us to the other side of the crisis induced by the pandemic. And remember, when we came into office, there was about a 0% vaccination rate across the country. So getting that program going relative to our predecessor was essential for reopening the economy. But at this point, there is zero or even negative fiscal impulse. And that's a really important term in this context. What it means is the change between fiscal activity last year and this year. And so fiscal impulse really isn't contributing much to the economy's growth at all. And why that's important is because we kind of have this virtuous cycle going. We have a 70% consumer spending economy. When you maintain an unemployment rate that's been below 4% for almost 2 years, and inflation is easing as much as it has, and that's the other part I want to push back on, those real wage gains, which have been year over year.
It's because people are working 2 jobs, you idiot.
We're spending on the private side. If you look at investment, private investment up massively in terms of investing in manufacturing facilities. And again, the president's fingerprints are very much on that inflow of private capital investment. Now on inflation,
I'm not complaining because I'm taking advantage of trickle-down economics. I trade on Wall Street. But I don't have one friend that does what I do because they're all progressive, they're all liberals. They don't like the fact that I trade stocks.
In terms of the president's handling of the economy, 31% approve, and this was just 3 days ago. So there's still that disconnect, and I see a lot of foot soldiers in mainstream media on different networks. Again and again, they almost sound like you. They bring up 10 reasons why Americans really aren't feeling the right thing. They need to be told what they're actually feeling about their economic situation. Do you think it's going to improve you think it's going to come around? You're not going to have to try to convince people that they're wrong about how they're feeling by November? Do you think that the consumer...
ever try to convince anybody that how you're feeling is how you're feeling. So what I've tried to report to you today is people's own statements on how they're feeling in terms of the sentiment poll from University of Michigan. We just saw the biggest 2-month increase in that poll about how people are feeling about the economy since 1991. That's over a 30-year span. So I think you have to incorporate that into your discussion. Now, is that index or any other index where we need it to be? Probably not. And therefore we have to keep working. But the question is, are we on the right path? Are the sentiment indices moving in the right direction? And yes, both that and the Conference Board Index also moved up. Now, on these polls, I do think it's important to ask people the actual components of Bidenomics. So 82% support capping insulin costs at $35 a month. That is in the economy. That's not an aspiration.
It's not going to affect me, man.
This president. Over 81% support giving Medicare the power to negotiate lower prescription drug prices. Again, that's in the economy. 80% support incentives to create manufacturing jobs, setting up domestic production in this country in electric cars and EVs and EV batteries and clean production technology. Those factories are being built, and that's the inflow, $600 billion of private capital coming into the market based on some subsidies from the programs that this president has managed to legislate. So it is not a surprise to me that the market is at an all-time high, that sentiment indicators are starting to tick up, inflation is easing, actual prices are coming down on some of the things I just mentioned. But we need to keep on that path. We have more work to do, but we're headed in the right direction, and consumers are starting to feel it based on some pretty important metrics.
Seeing the actual definition of stale.
I'll be right back.
That's not a.
Can't take much,
that's a bad. No longer fresh or pleasant. The word stale.
In describing you?
Yes, that's what he did.
No, not you. Not you by a million years. You're this argument.
My ideas are fresh. You
No,
fresh and new.
You didn't mean me.
No.
You didn't.
I think there's this. You know what I mean? It's actually a good question. You know what I mean? I mean that there is for months.
Some of the data I'm giving you think is stale. Well, you're right. It was
I think
from 3 days ago. It's like 3 days ago.
For months,
you got a tough job.
Hold on a second. For months, there's been this, very hard push that there was this absolutely unclosable, gaping hole between economic indicators and how people feel, and that hole still exists. I'm not saying it's filled up. The question is.
Now tell me we gotta go. We gotta go. There's a wall between CNBC and CNBC.com too. Jared, it's a China wall.
Right. I see.
Kind of a China wall.
Citing your
Thanks,
own
Jared.
there.
No, you're.
It is not looking good outside. Ice. Ice. Who needs ice? Take me to the porta potty. That'll be nice. Let me see if that song's on here. This is a song I helped wrote. Porta potty on ice. Ought to play it for y'all. No, it's not on here. I figured it would be.
Still to come this morning, former Council of Economic Advisors Chair Kevin Hassett will join us with his argument that the markets think the Fed is lost. We're going to talk about what he sees here. We'll get him to explain that idea. Stay tuned. You're watching Squawk Box, and this is CNBC.
Are you looking for winning option trade alerts with high return rates and a 6-month satisfaction guarantee?
Well, they're selling hot coffee and iced cold tea, but that's not what interests me. And ice, who needs ice? Just let me in a porta potty,
that'll be nice.
And tell me, why is everybody in a Stella? I'm about to turn your bluegrass yellow. I say we start going in by twos, cause I've got the shit can blues. Well, I'm holding it back with all I've got. If it was just a little longer, I'd tie it in a knot. And ice, who needs ice? Just let me in the porta pot, let it be nice. Now tell me, why is everybody in a Stella? I'm about to turn the bluegrass yellow. I say we start going in by twos, cause I've got the shit can do. Well, you can call it a thunderbox, call it John. Call up the cops when I pee on the lawn. Ice, who needs ice? Just let me in the porta pot.
That'll be nice.
And tell me, why is everybody in a Stella? I'm about to turn your bluegrass yellow. I say we start going in by twos, cause I've got the shit can do. Well, I spied me a parrot up in a tree, and he was yelling, Stella, just like me. Ice, who needs ice? Just let me in the porta pot, let it be nice. And tell me, why is everybody in a Stella? I'm about to turn your bluegrass yellow. I say we start going in by twos, cause I've got the shit can lose. Well, this little old lady, she tapped me on the shoulder, said someone's been peeing in a handbag holder. Ice, who needs ice? Just let me in the porta pot, let it be nice. And tell me, why is everybody in a Stella? I'm about to turn your bluegrass yellow. I say we start going in by twos, cause I've got the shit can lose. Well, I wish I could shit like the worms in the trees all night long and wherever I please. Ice, who needs ice? Just let me in the porta pot, let it be nice. And tell me, why is everybody in a Stella? I'm about to turn your bluegrass yellow. I say we start going in by twos, cause I've got the shit can lose. Yeah, I've got the shit can lose. Well, I've got the shit can blues. blues than anybody in line behind me. They got the shit can blues times 2.
In a new piece in the National Review, our next guest warns of the possibility of Federal Reserve staffers pushing a recession narrative in an election year that leads the central bank to cut interest rates when that's not the appropriate move. Joining us right now is former Council of Economic Advisors Chair Kevin Hassett. He's now the Brent R. Nicholas Distinguished Fellow in Economics at Stanford's Hoover Institution. And Kevin, first of all, thank you for being here. This is kind of a complicated thought, so let's try and walk through the process on this. You think, basically, the market is looking for rate cuts that shouldn't be coming this year. We've heard that from a lot of economists, but you're kind of playing through the ways that the market could be right. What do you think?
Right. I think that there are really two parts. The part one is that inflation really isn't under control. If you look at core CPI, it's hovering about 4. There's a long track record that wage growth, which the Atlanta Fed wage tracker has at 5%, is kind of a floor for inflation until wage growth starts to go down and unemployment goes up. And so inflation's not under control. And so you wouldn't normally expect to see the Fed cutting rates. But then also GDP growth has surprised me and a lot of observers on the upside. Right now, GDP Now says fourth quarter GDP is going to be about 2.5%. We just had kind of a blockbuster retail sales number. Michigan survey said consumers are getting more confident again. So there are all these strong signals about economic data, especially like initial claims below 200,000. And against that backdrop, the idea that the Fed would start cutting rates at all seems preposterous. And if you look at futures right now, they're expecting rate cuts at every meeting from May on. And so I think that what the markets are saying is, geez, the Fed's going to do something that's inconsistent with the economic data. And the only explanation I have for that is that they are worried that the Fed might juice up the economy ahead of the election.
I mean, some of the people that we hear buying into this narrative of all these rate cuts think that the economy is going to get weaker. Other people seem to be MMT, modern monetary theory folks who say, well, we've proven that there's no bad that comes from this, so we should go ahead and cut rates as far as we can to get the economy juiced as far as we can. I haven't heard too many people come up with this theory that it's going to be Democratic staffers at the Fed who are pushing a narrative that doesn't exist in terms of a recession.
Right. Well, the bottom line, though, is that inflation is not under control. The Fed's job is to get inflation under control. And if they cut rates with a kind of strong economy and high inflation, then we have to come up with a theory of what the heck are they thinking. Now, Becky, I'm sure data can turn. You and I have been talking, for 20 years, and there have been times when we've been really shocked by the jobs number that came out when I was up at the in New York. But the point is, the odds of a big economic surprise between now and May are not 90%. But 90% is what the Fed funds futures are saying the odds of a cut in May are. And so I don't know where numbers that high with that much certainty for rate cuts could possibly come from, because the economy is uncertain, right? So maybe it's 50-50 it gets worse. I don't think it's that high.
The other theory that's been thrown out, Kevin, is just this idea that we're going to have problems that come up in the banking sector at some point because commercial real estate or some other big kind of bugaboo comes out and you run into real trouble, and that causes financial system concerns. I guess the other reason would be we've got this huge federal budget deficit that needs to be financed, and high rates hurt that and have that impact too. So I've heard all of those kind of theories out there. But the Democratic staffers one, that's kind of new, especially when you look at somebody like Jared Bernstein, who is the CEA chair now, who's basically, their big argument is trying to say the economy's really great because they want to convince voters that things are great and to re-elect their candidate.
Right, and the fact is, and I mentioned it in the National Review article that you cited, that 95% of political contributions by staffers at the Fed go to Democrats. And so I say that, as you know, in my article, I say I don't think this is going to happen.
Did you hear that? 95% of the contributions go to Democrats. You know why? Because the $6 trillion was printed. It went into their hands. Nancy Pelosi made $500,000 in 2 months off NVIDIA. Just think about it.
What's going on, and anxiously I'd be saying it looks like They've lost their independence, and that's where the word lost comes from, the title of my piece. I think that if the Fed does start cutting rates with data where they are right now, then the Fed has lost, the political independence of the Fed is lost.
Okay, let me throw another theory out at you, and this is one people have brought up on the show. That is that they would start cutting rates now rather than later because they don't want to look political later if they were to cut rates closer to the election when the economic conditions might warrant it more.
You know, I think that what the Fed needs to do, what do they say at every meeting? We're going to be data-driven. They need to be data-driven. And data-driven is not an election date that was set when George Washington was president, right? Data-driven is we look at the data and inflation is down below 2 and GDP growth is slowing. And
Kevin,
we're seeing...
if they did look at the data, let's say October, and there was the potential for an idea of a cut based on the data, and they went ahead with it, people would say they were political then, too. I mean, it just seems like it's a catch-22 for the Fed no matter what they do.
You're right, and the Fed usually, as you get close to election, just doesn't move. And so history is on your side with that argument. But the point is, again, like, what are the odds that the data really goes south? The odds have to be very high, like 80, 90% to start moving in May, given where everything else is.
Well, let me ask you this. If conditions remain where they are now for the next several months and the Fed does nothing, stands pat, and then all of a sudden you get into some sort of a economic downturn or even a fiscal or a financial system conditions warranting it, some concern around that, would you defend the Fed for cutting rates then?
Yeah, and I'll make a commitment with you right now. I'll come right on Squawk Box and say, hey, I've been looking at the data, and they're doing exactly the same thing. You know, I think that that's what central bank independence is all about, is look at the data and do the right thing. Be an umpire at a ball game that's being checked by the computers. You know, that's what we want out of the Fed.
Okay, fair enough. Kevin, thank you very much. Kevin Hassett.
Thank you.
Yeah, if you heard what Becky was saying, is the way I trade. I always try to be the devil's advocate of anything that these guys say. And she was just doing it right there. You can be fed a lot of information, like when Jared got on here and everything's great and we're all booming, and it's not the case. The top 1% are what quadruple, maybe even 4 times what Buffett, for example. Back during the Obama years, he was worth a small amount of billions. And by the time Obama got out of office, he was worth $85 billion. The 1% make a killing when the Democrats are in office, and that's why 95% of the Fed chair votes and donates to the Democratic Party. And it's always like that every election year, because they print that money. They've been printing so much money ever since 2007, 2008. It just hasn't stopped. When Bush was in office, I think it was like everybody owned $50-some thousand to the federal government. Everybody from newborns to the elderly, and now it's over $100 grand. We're 34 trillion, and that's not counting it'll be 36 by the time Biden gets out of office. So I always got to try to play the devil's advocate. That's what makes me a smart trader, is I can't fall for what they say. I have to use it and then think, okay, what's the opposite of what they're saying? I think that's probably some of the best advice I can give anybody besides patience, is always be on the offense of anything that they say, because they're just selfishly greedy. Oh, that's cool. I like how you got that.
Eastern.
Welcome back to Squawk Box. The futures continue to be in some positive in the green this morning, and 86 points. Now the Dow is actually not.
Let's see if they got that card sold out.
Boeing was adversely affecting the Dow earlier, and the NASDAQ was diverging. Let me just see if Boeing is slow down a little bit.
Okay, meantime, tech giant Microsoft saying it was hacked by a Russian state-backed cyber group. In a blog post, the company saying that intruders broke into corporate email systems and gained access to accounts belonging to members of its leadership team, as well as cybersecurity and legal team employees. Microsoft saying the hacking group is the same one that was behind that huge 2020 SolarWinds hack. Here to weigh in on all of this is Sentinel One Chief Trust Officer Alex Damos, has formerly led the cybersecurity efforts at both Facebook and Yahoo. Good morning to you. When you hear news like this, you start to think that, Satya Nadella's email may very well have been hacked. You can go through the whole list if you think that when they talk about leadership. What does this say to you, and how dangerous is it really?
This is pretty dangerous. So this is the second kind of major announcement of an email hack by a state-sponsored intelligence agency. Last one was September. In that case, it was the Chinese broke in to Microsoft. Now, that was a much bigger hack in that we know for sure that the Chinese government got access to thousands of accounts, including the Secretary of Commerce, including members of the State Department. In this case, it does look like it's more contained. What's a little frightening here is that of the three major intelligence agencies of the Russian government, this is the SVR, and they are the hardest to deal with. They're the most subtle. Some of the other ones like GRU, for example, are somewhat famous for smash and grab operations, for causing lots of damage, for not caring if you know it's them. In this case, the SVR is famous for the SolarWinds hack, which is something that they took years to plan and to pull together. And it looks like this could have been the start of a pretty significant campaign, because one of the things they were looking at were the emails of the security team and security leaders, so they could see what Microsoft knew about their activities.
So, Alex, does this suggest to you that Microsoft is somehow more vulnerable than others? I mean, we have not heard about such attacks, for example, at Apple. I just raised that as a question, or necessarily at Google. Is it because these hacks are happening at those companies and they're not disclosing them? Are they less interesting to the hackers? Is the security better or worse at these companies? And how do you sort of baseline what's really happening?
Yeah, so Microsoft has a very good security team, but they're also incredibly highly targeted. Really, the people we should compare them to is Google, because really the only company that hosts as much email and as much important data as Microsoft is Google, and to a lesser extent Amazon. And neither Google nor Amazon have had these intrusions announced in the last year. Does that mean it never happens? No. Google in particular is kind of famous for really turning up their security. An equivalent attack happened in 2009 when the Chinese government broke into Google, and that kind of really changed security across the entire tech industry. This is not a great look for Microsoft, especially because it looks like, from the small amount of information they gave us, that this was a pretty simple kind of attack called a password spray, something that can be prevented by two-factor authentication. And Microsoft was not enforcing their own policies on certain systems. They've promised to do better. It's hard to judge how big of a deal it is until we get more information. And to me, the bigger deal here is that Microsoft dumped this out with a small press release and an 8K on a Friday evening after the markets closed. They clearly wanted to bury the news. They clearly don't want to talk about it. And that's a real problem. One, because Microsoft is possibly the most important tech company on the planet. Again, up there with Google and Amazon, of the same kind of importance of the data they hold. And second, the SVR is going after hundreds and hundreds of American companies. And with Microsoft not being transparent and not being open about what's going on, it does not rebuild the trust people have in them, nor does it allow the rest of us to protect ourselves.
Can I ask a question related to that? You know, you talk to security professionals, peers, colleagues of yours that seem to have sort of completely different reactions to this. You have some people who will have the reaction that you're having, and then there's others that say, well, actually, if they came out and disclosed with great transparency, with even greater transparency, let's argue that they've disclosed something here, but if they were disclosed even more, they may not have already patched it properly, and that or done the additional work, and that it makes them and their clients and everybody who has Microsoft an even bigger target. Do you buy that?
In this case, I don't. So that is an equity, right? When you're in a breach, when you're actively knife fighting with an attacker to try to get them out of a network, and this is something I do all the time for dozens of clients, it is difficult to decide when to announce because you don't want to say before you know what the attacker is doing and you have what's called containment, that you know that you've mostly kicked them out or completely kicked them out of the network. The Microsoft statement makes it pretty clear that they have figured out what the root cause was and that they have containment. So in this case, I don't think there's a good argument that Microsoft should not be fully and completely transparent about exactly what happened, which they still have a chance to do, but they never were about the Chinese attack. That was in September, and we've never gone all the technical details of what happened there, which is a real problem because the bad guys work together, right? The SVR, the Ministry of State Security of China, they're getting better because their teams share tools, share techniques, share tips. But Microsoft will not share with the rest of us exactly what happened, which makes it very difficult for us to protect ourselves.
Why do you think that is? And let me ask you maybe even a more provocative question about Microsoft. Historically, Microsoft, especially after the antitrust case, has been seen as a friend of, or tried to be a friend of the government, the public, has tried to sort of, there's a perception that they're out there trying to be more transparent and the like, perhaps than even other companies. Do you think that's true or not?
Yeah, so you're pointing out Microsoft has an extremely aggressive government affairs strategy. They are one of the largest tech companies represented on Capitol Hill. You see their executives like Brad Smith testifying all the time in Congress. And you're right, part of that is antitrust. Part of it is the U.S. government is a huge customer of Microsoft's. Again, when the Chinese broke in, their target were U.S. government accounts. And so they want to maintain the trust and maintain Congress's interest in Microsoft continuing to be a multi-billion-dollar vendor to the government. I think in this case, they're very good at making themselves look like the good guys. They're very good at kind of covering up over their mistakes and blaming others. And we saw this during the SolarWinds attack that you mentioned. We call it the SolarWinds attack. But Microsoft actually had a significant component of mistakes that were made during that big, complicated campaign against over 100 organizations. And they very successfully sent their people to Hill to frame the whole thing as the responsibility of this much smaller company, right. SolarWinds. And so, yes, I do think that that's happened multiple times in the past. And this is consistent with their strategy of making it look like they never have security issues.
Alex, that is a longer and important conversation. I hope we have an opportunity to talk to you more about that next time we see you. Alex, thank you again.
Thank you.
When we come back, a lot more on Squawk. We're going to talk markets and get you ready for the Monday morning opening bell. Just about a half an hour from now. Stay tuned. You're watching Squawk.
Yabba-dabba-doo. Jimmy's all excited. Bitcoin ETFs. Let's see what they're doing today. We're definitely bound to almost hit the bottom of my support box. Oh, let me think. Let's change this to 30 days. Do I have a 30-day on here? No. Let's put one on here. How in the hell did I do that? Forgot. Add, there it is. Oh, that was the gap. Yeah, that's why I like that spot. So we got a gap play on this one. $19.31. And we almost hit it. 1940. HIBT. Put it on the 30-minute. We got a 1, 2, 3 here. Inverse head and shoulders. 24 is resistance to break. Support level is 23.26. So we'll wait on that one. GBTC is an old timer. If I remember, this goes back a few years. Yeah. That's a bear flag. So we're going to put a support right there on top of that candle. 36.20. So I can drop $4 more. BITB. Another new one. Back to the 5-minute, 5-day.
Welcome back, Squawk. We got a news alert for you.
Definitely
Gilead,
support.
saying its late-stage trial of its drug Troveldy failing, I should say, to meet the primary goal in a second-line lung cancer trial. The company saying it plans to discuss the trial results with regulators and present the results at an upcoming medical meeting. You're looking at that stock down this morning, a little over 8% on the back.
This has had a good run, too.
Just over a half an hour to go till the opening.
This is
bell on
why I
Wall
can't
Street.
take these
For more on
trades
the markets
anymore,
week
man.
ahead, we want to bring in Sylvia Jablonski. She's the CEO
News
and Chief Investment
kills
Officer
'em.
at Defiance ETFs. And
This had
Sylvia,
one heck of
we
a
are
run.
talking about the markets closing at new highs. How do you feel about those things? What do you expect stocks to do this year?
Good morning, Becky. Great to be here today. Well, I think if you look at where we are now, it actually took us, close to
Becky looks like a farmer's daughter today.
S&P 500 highs, that 4,800 number. So I'm very, kind of happy that we're here. And I think that the market is poised to continue to rally and do well this year. I think AI and I think rate cuts are the big story. So we got that soft landing. The economy is fairly stable and employment is pretty good. And those things often define a bull market. And then on top of that, this great innovation that can push the market forward with the AI theme. And, arguably rates coming down towards the latter end of the year will help companies grow and scale and improve on profits and growth. So I'm optimistic.
Yeah, optimistic to the rate of maybe 8 to 10% returns when it comes to equities?
I'm not going to get caught in this bubble. I've seen way too many of them. This is a good one, but
AdWord, and I think this year is when it starts to become applied to different sectors, when it starts to broaden out to things like supercomputing, semiconductors, beyond NVIDIA and AMD, and the tech stocks. To me, Mag 7 are AI stocks now. They're not tech stocks anymore. The whole, shift in technology is going to be quantum computing and AI for the next couple of years, and that has, power and fuel for growth.
Often we look at the money on the sidelines, and usually we think of that in terms of cash. But this time you've got money on the sidelines, not just in cash, but in treasuries too.
Yeah, so that's super interesting, right? So I think that's also another argument for why the market can rally. You have $6 trillion sitting in savings, slash treasury slash cash. And if you think about that, a lot of investors that we talk to are still like, oh, I'm fine parking there. 5% is pretty good. But when you start getting the S&P and NASDAQ, getting these, high double-digit 20, 30, 40% returns, and if you can get another 8 to 10% out of that this year, all of a sudden that 5% sounds less interesting. So I do think that if that money comes off of the sideline, then a lot of investors will start shifting sentiment when rates get cut, into the market. You also get a rally, and you get a broadening of the rally too. I think there are a lot of stocks that were just beat up and haven't fully participated yet.
so everything's about selling into the news. What happens if they do cut the rate? Or is that going to be a mark for selling into the news, or because they've already priced it in, overpriced it in? And I got to ask myself that, because they're all harping about. I mean, just look at AMD. $74 all the way to $174 in a year. 71 to in this 4-day run from 150 to 175.
Time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Stocks look to add to Friday's all-time highs as Q4 earnings kick into high gear. And we get a boatload of key data later in the week. GDP and PCE 10-year 408. Our roadmap begins with the record rally. S&P is poised to build on its all-time high as investors await the latest GD print this week.
Plus, we got tech on a tear. The Mag 7, they continue to outperform, and NVIDIA, of course, is leading the pack. That stock is up more than 20% this month alone. And 160 to 180,000. That is at least the estimate for Vision Pro pre-orders over the weekend from one widely watched Apple analyst. We're going to find out why she does remain cautious on this.
Let's begin with the markets and their record run. Jim, reflections on Friday?
Well, I got to tell you, the Super 6 is so strong. It's amazing. Catch that? Super 6.
Super 6.
Because Tesla's no longer.
Oh, you're Xing out Tesla.
I'm not X. Oh, I like that. I am Xing out Tesla. Oh, you are so clever. You live ambitiously like I've never seen you. The most ambitious person ever, and your kids are ambitious, so everybody's ambitious. Fantastic. I think that there's a capitulation going on. My friend Ben writes this, who's at Melius. He now says all you have to do is say that you're somehow connected with NVIDIA, and he's got two others. He says that right now, of course, everyone but Microsoft is, but Google is next to say that they are next to godliness, which is NVIDIA, and then Amazon. David, you were correct in pointing out that NVIDIA's run rate so far, they are ambitious.
Wait, who's NVIDIA's?
Melius, which
Yes.
is really good, is saying that when you're really, let's say your stock's languishing, you just say that you're close to NVIDIA.
Oh, yeah.
ServiceNow reports this week, they're close to NVIDIA. See it? If you're close to NVIDIA, then boom.
Then boom. Look at that 21% move in the stock.
But that is, I'm saying that's the essence of this market right now.
Right.
It's AI, and this is the epicenter. This is the sun.
It is, and as we've said many times, despite what were was outperformance likes of which we have rarely, if ever, seen on the earnings front from NVIDIA last year, the stock did not respond for a number of months.
Was it 400?
And then came into this year with a far lower multiple than it had previously as a result of course, far higher earnings.
Correct.
It's made up for that, though, Jim. And I don't know, if you think perhaps it's run a little too fast. Too far.
Well, I mean, look, I think that the thing that's happened, Carlos, is that people are now saying NVIDIA is not hardware, NVIDIA is software, which then puts it in the sainted enterprise software category, where if you can do anything for enterprise software, even if you're hacked, you can do it.
I did know Jim Breyer in Davos last week said that, and I thought that was interesting.
Jim Breyer was really
Jim Breyer had the great call. If you guys remember, when we were in California last May.
Yes, he said I sat down with him
before the huge blowout. He had that great call on NVIDIA.
Well, he was asking me about my dog.
And he's talking now about software.
My dog, the stock was at 50 when I named my dog NVIDIA.
We're aware.
And Jim Breyer was aware of that.
We're aware that you've had a great call on NVIDIA.
Well, NVIDIA is one of those companies that the Chinese...
It went on for 6 months. Come on.
We do. Do we have a picture of what...
I seen that smirk on his face.
Can't get the top chips. Look at it. David, have you seen this?
What, Jensen? Yeah.
Yeah.
Let's take a look. What's going on? They're all dancing. There he is. Oh my.
I think his head is put on top of that. That's
just a man living his best life, right? I mean, he's got nothing on Ballmer, though.
No, but you see, he's not an angry guy. He comes in peace. Ballmer was somewhat angry. Anyway, I don't want to get too sidetracked.
No. That's his first visit there to the mainland in 4 years.
Yes.
And then meantime, you got this piece about the Chinese racing to buy semi-cap.
Isn't that something?
To get in front of...
He didn't mention my name.
Restrictions.
I don't think there will be, but I know...
So Kramer pumped NVIDIA for 7 months, and I messaged him on the 1st. I said, Kramer, you're going to get your 650 this year. Finally, I was bashing him all the way through. And, man, quit pumping this stock past 500 until the end of the year.
Often without a shirt. This is not the first time I've seen him without a shirt. Did you know that?
I would. Yeah. Oh no, I know. I think you had a picture with him without his shirt on. Didn't you? There it is. Yeah. There it is.
Yeah, he's standing on a box. Just so you know.
Sure he is. All right, back to chips. Which
I'm going.
Jason may have eaten a lot of chips.
I
in
think
his,
AMD
in
and
his life.
ADM are worth talking about.
Well, ADM is certainly worth talking about, but I did want to get back to the idea that competitors are starting to try and figure ways around NVIDIA. I mean, Sam Altman's going in the Middle East to find people who can back a new chip venture and then get TSMC to make the chips once they design them. This would take a long time. There is no shortage of those who are like, all right, we got to figure something else out here.
Well, it's just that it's highly unusual, other than when Intel first came up with the 286, 386.
Tesla.
Pentium,
to have this kind of a lock.
Yes, a lock. It's a lock. It really is. It turned out to be more of a lock than a kicker who can't. Never mind. Kind of a wide right situation.
Well, Jim, all of this is forcing some to rethink the tone and color of the markets from here. Ed Yardeni over the weekend rolling out a new probability, 20% he argues, that we end up in a melt-up with some elements of irrationality.
He did the party like it's 1999 piece, and that was that coupled with Ryan Dietrich this morning on Frank Collins' excellent show talking about what happens when you have a 2-year gap between all-time highs is just extraordinary. And then, David, I don't know if you've caught, but still, no matter what, in an election year, market goes up.
Yeah.
So YouTubers, Tesla, I'm going to be looking at the 220 call, and I'm going to be looking at the 200 put. And we're going to see if I might get both of them. And then when I see a move, I'll get rid of one of them. But those are the two I'm looking at. There's a lot of bears on this right now. And I kind of said why in the catalyst in my pre-market video there. Yesterday's video, why. But I'm definitely going to be watching it because I think people are going to be surprised either way. Now, what happened just now? See, everything went blank on me.
I think that's a true statement.
Although we're going to get a bunch of transports this week.
The rails are
airlines.
so
We got a
much
couple
love.
upgrades of UNP and
American Airline, UNP, Norfolk Southern. I say watch. Here's one that's being slated. I think CSX could have a great quarter. I don't think people realize CSX is doing so much that's right, but everyone loves Norfolk Southern. I think Norfolk is a very good company. Union Pacific, we have that new CEO people like, but you're gonna have CSX on Wednesday, and I think that's gonna be. Could be a breakout.
Yeah, Bernstein upgrades two of them, saying they've been on the sidelines since 22, and that we're at the end of a certain part of the freight cycle.
Well, JB Hunt got an upgrade today. That's also part of the freight cycle.
Yeah, on your intermodal stuff from Friday.
Yes.
Yeah.
So I think that you need that. We need something other than the Super 6 because we're just going to run out of steam unless we're once again in that kind of.
You just dropped Tesla, huh? You just kicked it to the side. You axed it.
Well, we haven't mentioned I guess we could mention Adam Jonas of Morgan Stanley today cuts forecasts for EPS, for pricing, for margin, for free cash flow.
That's what made me go Super 6 when I read Jonas. And Jonas, for all of his showmanship, let's call him that because I like him, really made me feel like the EVs, it's pause or is it done? It's either pause or done. Now we do know
this price target is still $345.
Well, yeah, but that's.
I mean, why do you?
So you can say it if it's really good.
Challenging year, Now our price target is only still $120 above where the stock is.
What is supposed to lower by 100? I mean, look, he's saying that there's still some AI and robotics thing going on, but I thought this piece read, this Tesla piece, this read like, look out. You're not going to have a great quarter, so therefore I had to drop it from had to get rid of Mag 7 when Super 6.
These for the price cuts coming, posted expiration and weakening of EV incentives.
You should read this before the show, Dave. You should just say, expiration,
I know. I
weakening
see
of EV.
you got it all underlined. I read it. what stood out to
What
me
are you
is the
so
fact
grumpy
that
about?
Nothing. I don't like it when they're somewhat negative and they still have a price target that's 60% higher than the
Look,
current
I
stock.
mean, Tony Sacconetti has got this piece. It's like, you know, it's kind of Apple, not good.
But does everybody know that?
But yes, wasn't that brilliant? No one, does everyone really know how bad Apple is? Meanwhile, I'm trying to get the Vision Pro. It was sold out. You had to get it in March, the day that they put it on sale. If you went to get it, they already told you it's in March. It's not till March.
Yes, we're watching the shipping delays. By the way, pretty signs of a fairly strong start for the item since pre-orders began on Friday. Analyst Ming-Chi Kuo estimates 180,000 headsets were sold over the weekend, and that exceeds the earlier forecast of 60 to 80. Adds, though, that shipping times remain unchanged 48 hours after pre-orders open, and that's an indication, they argue, that demand may taper off after the initial burst.
Well, there is a high price point, but you know that's the kind of thing. I mean, that's just the usual. Apple doesn't have it together. I mean, why would Netflix and YouTube not want to be part of it? First I thought it was like maybe because they didn't think it was any good. Now I've come around to thinking they don't want Apple to be in charge. Once again, they just don't want to cede anything to Apple because whatever Apple wants to go with, well, I think it wins. I think that those numbers showed me if you can't get it. Look, the ship date is March 1. That's what I mean. We have someone on our staff that went to buy it. Put himself on the list. He's not going to get it until March 1. Dylan Reebok, he's terrific. He went up there, went up to the world headquarters of New York, whatever it is, said, I want to be on it. And they said, okay, look, you can sign up, but you're not going to get anything until March 1. So the analyst suddenly says, well, there's like...
Oh, coin did hit 118.
How can someone, how can they already say something is kind of like tepid? At 4,000 fully loaded, what happens if they lower the price?
Well, at some point, one would hope they will. If they actually want to sell more of it.
They may have to.
That's a very high price.
Although Kuo's arguing 500,000 shipments this year is doable, given this initial
still
outing.
That's a big sales number. I mean, for any other company, obviously for Apple, will barely move anything.
A lot of Samsung ads this weekend. What is that?
That's a company in South Korea.
Oh, I saw a Samsung.
They make phones and chips, a lot of chips. They make a lot of other stuff.
No, I mean, like if you break your phone,
yeah.
Which of course that means you have to drop it what from 32,000 feet? Because if you drop from 16,000, it doesn't break. If you go at full height, 40,000 feet, and drop your phone, you get a Samsung. Yeah.
There are a few ads for the Vision Pro this weekend as well, as you know.
Yeah, a lot.
I thought that was great. Look, if you just go by, then there was like a drug ad that my wife said, why are they advertising a drug ad that involved
Just don't.
What was going on? Like, because of Taylor Swift, women are suddenly watching football. Will you stop? Who are these companies?
I don't know.
Well, what's interesting is that, I don't know if you noticed, none of the big four automakers, U.S. automakers, are buying Super Bowl inventory. It's all going to be Kia and Volkswagen. First time in like 23 years.
It's amazing. You know, I know that, well, I guess Ford's, you know, they got a hybrid. People suddenly love hybrids.
They got a hybrid. BYD's not buying any ads in the Super Bowl? Largest maker of EVs now?
What do you think if President Trump, which you can still call him that, you know, because he was president, what would be his
most
tariff?
likely will be again.
What was his tariff? What do you think his tariff's going to be on BYD?
Well, it's not going to change. BYD's not going to be able to bring automobiles to the United States, right?
Oh, you mean he'll just outlaw them? That's cool.
Don't you think?
That makes a lot of sense. Hasn't really articulated that position yet.
But it's one of the reasons why Tesla continues to drop price in China. Well, it's that competition domestically, I mean.
So you still think there's a Mag 7 thing? You're sticking with Mag 7?
It's interesting that you just decided to get rid of them from the Mag 7.
Yeah, he was Robert Fullen, Tesla. Musk was just Robert Fullen.
Man from Uncle?
Yes.
You're going to add somebody to replace Tesla in the
He
Mag
begged
7?
not to be the first of the 7 to be killed. So Sturt just put him as second of the 7. See? Eli Wallach.
Eli Wallach.
He was not from your borough.
Eli Wallach. He was in that Wall Street movie. I was flipping and I always saw that. Remember
Is that one that you were in?
Yeah, the one I was in. The one we were all in. We were all in that.
How about the one that you're in the plane? What was that one that was so great when you're in the plane? That was the best one.
I was in a plane?
Yeah, you were talking. Someone was like talking to you in a plane.
Oh, Dumb Money. The recent one.
No, it was the one that was the guy from Brooklyn was in. He was just like he screwed up, the red-haired guy. You know, I had a great cast.
You know, I've been in so many movies.
You have
Carl.
been.
I'm gonna go consult my own IMDb.
Margin Call.
Margin Call.
You were
that was
so
a good movie.
Did you get any money from Margin Call, or did you get as little as I did for Iron Man?
No,
I got a hack. Everyone else got $500,000. I got a hack.
An arbitrage. I think it was.
God, he's just, you know, jeez. But
when we come back, we'll get some news. There's plenty to talk about regarding Boeing and Citi, ADM, and Macy's. Got some calls on Depot and Lulu this morning when Squawk on the Street comes
Home Depot. Home Depot's dropped some today. Downgrades Home Depot, Oppenheimer. Cautious stance. Lowe's downgraded. Wonder if they want to buy it at a cheaper price. Oh gosh, here's another one. I just haven't ever seen stocks run like this before. It's hard to get used to. DWAC. My man Preston's opened up a new pizza place today. McDonald's. It's strange. We got all these illegal immigrants coming over the country and all the homeless people out there that aren't being took care of.
Some pre-market gainers include Western Digital. We've had a couple of bullish calls last couple of days. Today it's Morgan Stanley. They make it a top pick, replacing NVIDIA, they say, where we are still positive. Prior target was 52. They go to 73. We'll get Kramer's Mad Dash countdown to the opening bell on when Squawk on the Street continues on this Monday.
Do 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 do. What's it? AAL was upgraded today. Dow. Oh, I forgot about Dow. FSLY was upgraded. SHLS. Well, AAL and Sprint. Or is that? No, it ain't Sprint. It's oh yeah, because of earnings. Jim Cramer's Bank of Minnesota. Lulu was downgraded. Toll Brothers.
All right, everybody, get ready because we start trading for the week about 8 minutes from now. But that doesn't mean we're not going to get a mad dash. Right. Let's talk a little city.
Yeah, now, the premise, and the reason why I bring this up is Carl said something very interesting, which is really, the market's very limited. Healthcare, right? And then the Super Six followed by others, the fellow travelers. This bank, okay, Citi, is loved by one of the great showmen of the banking industry, which is Mike Mayo. And he did Citi, #1 pick, Warren Buffett Sports Restructuring.
Mike Mayo sat at the very beginning of the year with us and went through all the reasons why. Right. Basically just, he kind of indicated it would be hard, if they follow through on their plans, it's going to be hard for them not to do something positive.
Right, has not backpedaled on guidance. The reason I think it's important is that the banks really laid an egg. Even the regionals, I thought, would be a little bit better. Comarket's downgrade today. We need this group as a leadership group, and it's done nothing, David. So now we're what? We're only going to be led by
Are you more of a believer, though, in James Frazier? And does Buffett chiming in here kind of change your, or not change, but...
well, maybe he thinks that the tangible book value and he can explain why the common stock's so below the tangible book value. I can't. But I do think that this group bombed, and now what we need to be saved by the rails and aerospace. I do think that Larry Culp's going to put up a great number tomorrow, GE. They had good ads, by the way, though. GE moving and separating. I mean, I judge everything by the ads because you see them 738 times.
Yes.
They don't, it's just what's called heavy rotation.
You're heavily influenced by advertising.
I am.
Yes.
I am. I'm going to buy a GE plane.
There you go. All right. Be nice. Can I get a ride?
No.
Oh, making sure. All right, we got an opening bell now. About 6 minutes away. Imagine that. The time goes so fast, doesn't it? Don't forget, by the way, if you do miss us, you can catch us anytime and anywhere by listening to and following our podcast. It's called the Squawk in the Street Opening Bell Podcast.
As we get set for the opening bell, here's a look at the top 10 performing names in Jim's charitable trust since the last S&P high back in December 2021. Jim, there's Lilly at the top.
Yeah, Lilly is something I'm really sticking with. Still very, very big, of course, because it's moved up so much. NVIDIA, obviously, we love that. Palo Alto's done cybersecurity. We had that Microsoft breach this weekend. But Eli Lilly remains, to me, the champ. There's a lot of companies that really wanted to say that they've got a once-a-month shot for weight. But Lilly's working on that. A lot of companies say they've got a pill. Lilly's working on that. A lot of companies say they have something that only loses fat, not muscle. Lilly's working on that. So, and Lilly is one plant, and then a second plant that's going to be in action. You can't, look, you still can't get there. It's very hard to get their stuff. They're still in back order, but they're the winner. And I think that people keep wanting to chip away at what they have. But David Ricks is quietly so much more competitive than people realize, the CEO. So all of these different offerings that people talk about, that's like everybody's offering something. It's like NVIDIA. These are the two. You can't beat Lilly and you can't beat NVIDIA. Not right now. They're too far ahead.
Big piece in the Washington Post about drug prices. They say that the White House sees it as a potent issue that they're going to talk a lot more about in the coming months.
One more minute.
Will political risk creep in?
You know, I think they've already determined, David, the IRA, not the IRA like the Trump's IRA, but the IRA did have a provision that allows Medicare to negotiate.
Yes.
And, you know, all you got to do is keep pressing that. They already have. The door's open.
Right.
And there's a lawsuit, but they can, if they just talk about that, you know, Merck is trying to fight this, but that...
You got some uncertainty in these candlesticks right now. There goes the QQQ. SPY just had a pop. $23rd. The 485 strike. And the 483 put. ADM's got some drama. Disney popping. We just hit my resistance level on Disney. Boom. Spy. Out of the SPY right now, so we're going to wait for the pullback. I'm going to trade this every day. Support. It's going to be this previous 1, 2, 3 bits at 484.42. Then we'll get back in them. Actually, we'll take it off that wick. 484.45. Here we go. Back in at 125. 485 at 125. Right to it. $137. Take it, take it, take it, take it. Now we got to let it consolidate. We could hit the VWAP. So my next support level, I'm going to bring it to the VWAP. Let's see this thing drop. Disney hit my resistance of 94.31, talked about in the video. Set my previous support level down here at 93.29. You'll have more volatility with Disney. The QQQ's off the 200. Tesla. Tesla hit my resistance today. We got to break that resistance line. Today's losers: Baidu, Boeing, Humana, Microsoft. Today's winners, percentage-wise: DWAC hit my 32, baby, nailed it. They won't bring this up on CNBC at all. Okay, we pulled back and hit support on the SPY again. Watch her closely here, SPY. 118. So far, we're still bullish. Now, as we go through the, as I got one real good trade, two real good trades. Every time you go out, it gets weaker and weaker and weaker. So the risk is a lot higher now on my third try. You got to get in at the first time, and that's the best time when you're scalping these right at open. Now, if I get a nice pop, just even on one candle, I'm going to probably sell it. I got to see what's going on here. The office won't open at all today in case you're planning on coming in later. Great. Okay, get out. Take your profit, or you can extend the run, but I'm getting out right now. Sell it if you're in it. Now, I'm not a licensed broker to tell you when to get in and get out of a trade. I'm just giving you trade ideas on how to trade. But we took that off the VWAP. Now, I'm done for the day. I've not worked, what, 15 minutes? And I'm ready to go to the bank. That's called the beach trade, YouTube. The beach trade. That's my retirement plan. Let's get in here, get in and out of these stocks real fast for the first hour of the day when all the momentum is there. And now we got to wait for chart patterns. We got to wait for a knife, snake. We got to look for a chart pattern. Do you see what I see on this here SPY? You see the pattern. I'm going to point it out to you. We talked about this for the last 3 weeks. It's called an expansion pattern. Megaphone expansion pattern. This can come up and hit this for the third time, and then we have an expansion back to the downside. So we catch it down here on the third time. This here snake let out with 2 hammers, 3 hammers. So that was real easy to identify to take this trade off the VWAP. These are all 3 bullish candles. Now as you start to see these are bearish. You have the upper shadow over the body, and you have this shooting star that's going downhill, inverted hammer. Just like this one right here. Inverted hammer, knife. Inverted hammer, knife. And we catch it right here. We set you an alert. Then I'm going to go get butter my toast and I'll be right back. We could break out. These guys are really bullish right now. Now I can relax and let the pattern form. We just hit the top of that expansion pattern. Now buy a put. The SPX, the 4885. Then we use the VWAP here on the SPY. SPX Lotto 4850 at 350. I'll set a tight stop on here. Ah, darn it. We're going to see here. I'll grab one more. And right now I'm at 340. It could be a mistake. Well, I didn't put in there. See what these animals are going to do here. There's a lot of good buys on the tape. I'm going to raise my support level above the VWAP. DWAC, we got to keep above 30 bucks. Sophie's up. Nailed that one. 817 resistance. PLTR mailed that one. 1778. The AMC pump is working. Okay, here's my knife on the SPY. Not moving as much as I want it to at all. Let's see if we can... I mean my SPX. Excuse me. Okay, we're at 370. Average is 340. 390, get ready to take profit. $4. We're going to hit the VWAP and get out of the trade. You ready? Now. Done. Yeah, we gotta wait. Forgot what I mentioned on AMC. This stock is only going to be run by $491. $491 on AMC, resistance at the 200. We hit 481, so that's going to pull back here. We got 3 soldiers. Tesla hit my target of 417. No, here's Mrs. Snooty.
So much on the negative side of things. Rick Santelli, thank you very much.
She's built well, though. So if you all traded Tesla, we did hit one of my resistance levels that I talked about in the video. Forgot what moved. 9 on the, was it 9 on the weekly? Now where's all my frickin' moving averages? Oh, okay. There's the 200. I think that's what it was. Can't remember. I gotta go back and watch it. How in the hell? Can't remember. God darn it. SPX at 520. I did it again. Son of a gun. Right to the expansion pattern. I did it. Oh, you idiot. Gosh. This expansion pattern is a beautiful pattern. It here since the first. Dadgummit. Jimmy said it would pull back to the 3B. Megaphone, baby. Go back, go to my library. And I talked about how to play the megaphone. Megaphone pattern. I might have another video on it too. Yeah, that's the one there. They better tell her they'll be closed today. Huh. Tesla did hit my resistance level.
Uncertainty over Fed policy, the concentration of the rally, elevated valuations, maybe an economic slowdown might suggest further consolidation is ahead. Canaccord Genuity Chief Market Strategist Tony Dwyer is with us today. Tony, great to see you. You've done a really nice job of not getting too emotional on either parts of the swing in the past year, I'd argue. What do you make of this last push?
So which market? I think Sarah just did a great job of giving the recap of the Fed policy and the inflation expectations bumping up. But Carl, you know, the Russell 2000, which is up about 2% today, was down 7% from the peak as the S&P is making a new high. So that brought
That guy's been
we came into the year thinking it was opposite from.
He's been snorting helium. Can you hear it in his voice? The helium? Anybody ever do that?
I thought they would be. And that was totally outrageous at the end of the year.
Outrageous.
So in the third quarter. So at this point, there's such confusion about what the Fed policy is going to be. And as Sarah suggested, it's going to be data driven. We got a lot of data right ahead of us.
But your job is to make a call. I mean, it sounds like you're reticent to make a book.
I got a lot of slack today on, not slack, but buff on my Tesla call this morning on my video. It's going down, brother. It's going down. I've been calling that 207 from ever since we were at that high. What? At 265. I said, wait, 210. And then I readjusted it to 207.46. So if this decides to have a little bit of mustard, we got to break this next resistance on the 1 hour time frame. And if we can break that, we will move to 227. But the long right now is 220 to 222. Now it can come back and hit support again at 214 and retest the 218, 217 area. So if you took the trade, I'd think about a little bit of profit here. Earnings don't come out until Wednesday evening, so it could be, again, a sell into the news event. but they always underestimate. It's just not the best time of the year to be trading this stock, one. It has its cycles. You're going to get a lot of bad publicity about EV cars because they don't do well in the winter. They absorb, I mean, just to turn on the heater, you're eating a ton of energy. So they've got to figure out something to keep. I always said they ought to have the generator in the wheels and let the wheels crank and build that electricity up in the battery. I don't know if they can't do it or if it's just a dumb idea. I mean, windmills do it. Why can't a wheel do it? Why can't a tire do it? Especially when you got 4 of them going. It just seems like that'd be a good way to generate electricity. But I'm not a scientist. Although I did create a volcano one time. And I did invent something. What was that? Years ago. I can't remember what it was. It had to do with baseball. So we'll see if it holds the support level. Amazon, I'm bullish on. Google. Let's see who had the biggest. God darn, SPX up 25 bucks. FSLR, I called this one out last week. FSLR. You know why I called it? That's why. 1 bits, 2 bits, and a freebie. One, 2 bits, and a freebie. Goldman Sachs is breaking out. FedEx, 1, 2, 3. Meta broke a new high. Airbnb 1, 2, 3. That make it so easy for you and me. Oh, now what I lose? Just don't be doing that again. I don't want to be losing shit on here again. Apple, we hit 194.26. 197.51 is next. Now they're very bullish on this. Boeing's about to hit resistance. You got to understand, I nailed the bottom, but then you got to think and play that advocate. These guys are bullish on Boeing. They called it wrong. None of them called support. None of the fat cats. They were 220. They were happy with 220, no lower. We were going to start to move up within a week. Bullshit. So when you hit a target that you call, if you chart it and you're satisfied with that, they're going to buy the dip because they're in this trade at 220. And I wouldn't doubt it 100% if they sell some of their junk right now. You got to think like a fat cat. If FAA calls for door plug checks on second Boeing jet. Like I said, this stuff ain't over with yet. Pelotar in the news. Jimmy called that one Friday.
We think that Palantir has done a really nice job in terms of getting their momentum going in AI, but we like other stories better.
What do you like best heading into earnings, given the tougher setup, but also the second half ramp in AI revenue?
Microsoft's our top large cap name in software. Amazon's our top internet name. And then we like Salesforce.com for margin improvement. Their margins are at 30.
They're just following the train there. Everybody's talking about Microsoft now, just like they were when they were talking about Apple back at the first of the year. There's all Apple, and then they got knifed. So now everybody's pumping Microsoft. And Microsoft, I'm going to keep saying it, it might be its time, but it's always been a lagger for years. And of course, they're going to pump it. We're pulling back to support here on Microsoft. You might have a good scalp. Let's look at Microsoft. Come on, you piece of... $400 strike. Get ready. I gotta go pee because I can't think straight here. We got a snake. 1, 2, 3B. Right about 3 for a starter position.
How people dress, right, and what's changed there. And you hear a lot about quiet luxury, and I think in times of uncertainty, consumers are gravitating towards brand they know, products they trust, and so we're seeing that clearly evolve as consumers move to more sophisticated casual dressing. And then I think, we've just learned to build a bigger agility muscle, right? And obviously we have supply chain challenges as we speak with what's happening in the Suez Canal, and I think one of the new muscles that this company has developed is this ability to just be nimble and be agile, stay true to who we are.
We got a squeeze coming, baby.
How is that affecting you? The tensions and the attacks in the Red Sea, the shipment delays.
So we've built over time, and COVID was a big enabler for this, a relatively resilient and flexible and diversified supply chain. So the impact for us is not material. It's a disruption, of course, but it's not material.
Where are you investing? I feel like geographical diversity has been a big
Geographically,
focus.
yeah. So our core market is the U.S., right? So we want to make sure that we're driving that successfully. China, as you and I have talked in the past, is a major opportunity for us. China today is about 6 to 7% of the company. Pre-COVID, it was around 3%. So we made good progress. But when you compare the penetration of luxury companies and China, it's more 20, 30, 40% of the business. So I think we have a lot of runway in China. Southeast Asia in general is a significant white space opportunity for us. And then we're starting to plant seeds in India. I know that's a topic this week, right? But with it really a lens to the next 10 years and the next 20 years to make sure we're building the right brand positioning, the right brand equity, so that we can benefit from that in the many decades to come.
China's been a really good story for you and a growth driver, as you mentioned, even amid questions last year and going into this year about the strength of their recovery, how much China's willing to add stimulus to juice retail sales and economic growth. What are you seeing on that front?
Yeah, China's been has been consistently strong for us. You saw that in our last quarter release.
Oh, come on, guy.
Doing really well there is we're very focused. We focus on top 6 cities, right? Taipei, Hong Kong, Shenzhen, Chengdu, Shanghai, Beijing. We are building consumer-centric ecosystems with a flagship store, polo boutique, surround sound digital, quality wholesale.
Who is this guy?
Front,
oh, Ralph Lauren. Okay, I understand now.
Expensive cashmere sweaters are actually loved by our Chinese consumers. And so we're leaning into that. We've also seen really nice diversity in terms of the makeup of our customer base. It's a younger consumer, more diverse from a gender standpoint. And I think the team is doing a great job bringing our purpose to life, which is global and universal, and weaving that into the Chinese culture.
You said the most high-end cashmere sweaters.
Yes.
How much is a high-end cashmere sweater?
Oh, there's a broad range, but if you're ready for it, you can spend $1,000 or more.
Oh God.
I'm asking because I do wonder why Ralph Lauren doesn't get the valuation of some of the European luxury companies, which it feels like you're trying to play in that area and competing against.
Yeah, so we've made good progress on valuation. Obviously, we want to continue.
See,
to
Jimmy?
that, and our goal is to be associated with the key luxury players.
Jimmy said make a business decision here on Tesla. We have a double top. Breakout, pullback, double top, tweezer with an inverted hammer. So that's a tweezer double top. Now we're at the 200. So if it wants to stay bullish, it has to do it here. And I'm Microsoft going down on me a little bit. I'll be right back. I'm going to hold on to this. Yeah, for a second. Now you don't have very much good luck with Microsoft. Get ready to add right here. Now I've got 2 orders in. I'll be right back.
No, and I think he has to continue to elevate the brand in places like North America, where outlets were a big part of the story for a while. And before he came in, it did go very mass market into the wholesale division. He's trying to work on that in an effort to boost margins.
There you go.
It's called in retail.
It's the pure play luxury brands have that moat where they don't have to discount at all.
No.
Still to come this morning, have we hit peak oil? We'll find out what the CEO of Aramco is saying about that and oil demand when we return from a break.
Three black crows with a long leg doji. Some call it a shooting star. Now we got to go to the upside here. Microsoft. Disney hit my alert. Yeah, they mentioned ADM today. I'm going to add that to my watch list. I don't want to take this loss on Microsoft. I never was good at trading this. Well, I did when it was at 154. Yeah, that's definitely my support level. I'm gonna go get my lunch started. If we go much lower than this, I'm gonna take out and get off of it.
Welcome back. I'm Pippa Stevens with your CNBC News Update. A judge postponed Donald Trump's defamation trial for at least one day. The former president was expected to testify today in the case, which will decide how much he will have to pay for defaming writer E. Jean Carroll. Both had already arrived at the courtroom when the judge put the trial on hold because a juror and two of Trump's lawyers weren't feeling well. Family members of hostages held by Hamas stormed an Israeli parliament session today after Prime Minister Benjamin Netanyahu told them there is no real proposal from Hamas for another hostage deal. An estimated 130 hostages are still being held in Gaza. And New Hampshire Democrats say voters in the state are receiving a robocall imitating President Biden's voice, telling them not to vote in Tuesday's primary election. The president actually won't be on the ballot because the Democratic National Committee mandates that South Carolina's primary is the first sanctioned contest of the 2024 nominating race.
What?
However, local supporters started a write-in campaign for the president. It's not yet clear how many people received the robocall. Sarah, back to you.
Peppa, thank you. Energy, a big topic for business leaders at the World Economic Forum in Davos this year amid growing geopolitical tensions, conflicts abroad. While I was there, I had the chance to sit down with the CEO of Aramco, the world's
Dang, they were shorting the
biggest
shit out of
integrated
this.
oil and gas company, to discuss, amid all of this push toward clean
Somebody
energy
put a
and
big order in.
EVs, whether we've hit peak oil. Listen.
Let's look at 2023, last year. People talked about peak oil even before that, but last year we were 102.5 million barrels. 2024, they're talking about another 1.5 million, 104.
Lot went through right there.
2025, they're talking about another 1 million barrels. So there is growth. But you see, at the same time, you see, if you go back 40, in the 90s or the 80s when I joined, 80% of the energy used was from fossil fuel. Today, it's 80%. But the scale is higher.
Wouldn't go there on peak oil. I also asked Nasser about global oil demand right now. Here's what he said.
If you look at the forecast, they're talking about 104. This is in the middle of economic headwinds. Still, we are not over what the economic situation we are in, but still, it's a healthy growth. If you think about it, even last year, we have grown by about 2.6 million barrels. So if you talk about 24 of a growth of 1.5 million barrels, that is significant. So there is a demand, and there is a significant growth, and that's what we are seeing from our customers.
Healthy growth, significant demand. For the full conversation, you can tune in tonight for a CNBC Leaders special at 8 p.m. Eastern Time. And guys, he's been at the helm here for several years, including taking this company through the world's biggest IPO, which happened regionally as opposed to some of the expectations leading up, got them through the attacks by the Houthi rebels, the drone attacks. I mean, we went through leadership, and because we had a long time to talk about it, we really got to have a window into not only his leadership, but how unique of a company this is. Remember, one that is, what, 98% owned by the Saudi government?
God darn SPX.
Doesn't make the decisions on oil
It's at
production,
$6
right? Because
now.
they're the OPEC producer, but has made a lot of other really important decisions leading and guiding this company, including toward this future where they are having to diversify into chemicals, for instance. It's renewable energy, and how he's thinking about doing that.
I mean, they're enormous in chemicals as well.
Huge. Yeah, I think he's done $95 billion worth of deals to bring Aramco more into chemicals and refining.
No, it's like sitting down, well, even more so with Darren Woods or
Mhm.
Mike Wirth. I mean, they're running an enormous company, one of the largest market caps in the world.
Right, but one with some interesting geopolitical considerations as well, because of the Saudi government, but also because of China, and they're very bullish on China, and they've tightened the relationship there with China and with some of the Chinese oil companies as well. So we talked a lot about that, what he's seeing both economically and geopolitically.
Okay, let's get her back up there so I can get out of this thing.
Yeah, of course. What time?
8 p.m. Eastern tonight, CNBC.
All right. Let's stick with energy here. Still, as you take a look, so we're going to join Sarah at 8 p.m. Still a top pick for many across Wall Street. That is overall energy stocks, despite what's been a kind of tough start to the year. Let's get over to Brian Sullivan and the CNBC team. They've been collecting all the names to watch here. And as you see, Brian joins us now with a bit of a breakdown. Good morning.
Hey, good morning, David and Sarah and everybody. All right, well, we're going to start with energy, but then I've got a little surprise for you guys at the end. We're going to show you all the stocks in any sector that are on 4 or 5 top picks lists of Wall Street firms for the year to give you a little investing edge. Quick note, this is taking a lot of time. A big shout out to our colleague Mike Bloom for helping me sort through literally mountains of emails over the past month. Could be a stock or two that we missed. This was a massive list, but we think this is a pretty good list. All right, so now to the names that are on Wall Street's top picks list. And since I cover energy here at CNBC, let us start with that sector. Makes sense, right? And all the stocks appearing on at least one top pick list for the year. And it's fair to say, guys, that energy is not overall well loved. There are only 23 different energy or energy-related stocks across more than 35 firms that we track on any kind of top picks list. All right, the first list is the more pure energy stocks, oil and gas companies. You got Exxon, Chevron, okay, we know that. You got Coterra, the original FANG, Diamondback, Civitas Energy. You got 2 Canadian names making the list, Suncor, Canadian Natural, also service firms, SLB, formerly Schlumberger, Halliburton, and Transocean, and wind companies as well. You got Solar, First Solar, and GE on the wind side. Now to some of the more energy-related stocks appearing on Wall Street analysts' favorite picks of the year. Some names like Air Products and Linde. You say, well, why are those on energy? Because they're both hydrogen plays. You got chemical companies, Huntsman and Methanex. Pentair, they help oil and gas firms push water through wells. Darling does biofuels. Energy storage company, Fluence, pops up. Wesco services utilities. Altus, a smaller cap renewable energy name. And
Come
even
on.
EV maker Rivian is on at least one top pick list this year.
Okay, good.
Guys, there are the 23 energy or energy-related names most loved by Wall Street this year. But you know, as I said, I'm not just tracking energy stocks here. In fact, there's a number of names. So here's what we did, guys. We went.
This guy I love the most because he's funny. He has wit.
Or best bet type lists. Okay, for example, Exxon and Chevron, they're on 3 different firms' lists, but there are stocks showing up on 4, 5, or even more top picks list. We spent a lot of time breaking them out. Some of the names. Only 14 stocks that are on 4 or 5 different firms' lists.
Man, that would have been a great play today.
Some names you don't, guys. Apple, obvious. Bank of
I
America.
really regret not holding on to that.
CSX. Look at DR Horton. Howmet Aerospace. That was a big surprise for us. They're on 4 different lists. You got JP Morgan Chase, Pinterest, Morgan Stanley, Nike, Salesforce, T-Mobile, Uber, and Wynn Resorts, all on 4 or 5 different favorites lists this year. And guys, tonight, on Last Call, we're going to show you the stocks that are on 6 or more top picks lists. There are 6 of them, including the one stock most loved by more than 10 different firms on Wall Street. That's Last Call. It goes from 7 to 8. So here's what I suggest. Watch Last Call from 7 to 8 and then roll right in to Leaders with Amin Nasser. How does that sound?
I love that, Brian. It sounds like a perfect evening. What could be better?
Being at home.
Being at home. Watching you. Brian, thank you. And then me.
Okay, Tesla double bottom.
For more on the energy picture and my conversation with the CEO of Aramco, be sure to tune in right after Last Call to CNBC Leaders, 8 p.m. Eastern Time. Don't go anywhere.
I'm still in the Microsoft. I'm up on it. We're at 186. I want to see if I can get this to $2. Now Tesla, double bottom. We got a snake, so this is how we're going to trade it. It's a perfect demonstration on how we're going to trade the stock. If I'm bullish on it still. So we got to wait. We got to look for the breakout, then the pullback. You don't want to rush into something that's going down like this. You got to wait, be patient. Now our double bottom is right here. So we're going to put that alert in there. Put the price line right on the body of that candle. Set the alert above it. And we'll see if we trigger. Just now triggered it. So now we got to look for the reversal. We just saying for it to be a good trade, we got to see it turn here. If not, then we stay away from it. We don't take it yet. We just got to see if the buys start to come in at the double bottom. I'm going to walk you through this one here. Let's see what kind of hammer you're leading out with. And let's see here. This week, the 220 strike. Scalping. If it's within the same week, we only scalp.
Got a couple of movers for you this morning, including shares of Archer Daniels Midland. See them right there, down over 13%. There were a number of downgrades. The company did issue fourth quarter guidance that seemed to be below many analysts' prior expectations.
There's your answer. We wait.
The key reason why the stock is down is that it has placed its CFO on leave. This is amidst an investigation into accounting practices specific to its nutrition reporting segment, including as related to certain inter-segment transactions. Apparently, this was initiated after the SEC asked for a voluntary document request. They gave them the documents, they're cooperating, and whatever they saw at least warranted suspending their CFO. They have an interim CFO who stepped in. On the flip side of that, take a look at shares of Affirm. Company we follow, up over 9%, maybe just on rates, getting a little bit better this morning, Sarah. Hard to know specifically what's behind that, but there have been a number of, whether it's Affirm, Upstart, Palantir, just in general, sort of some significant moves this morning among certain technology-related names.
Yeah, the ARK Innovation Fund is up 4%, so that's always a good.
AMD at support.
Less profitable or unprofitable techniques.
Oh, there we go, 190.
Let's talk housing. New home
Microsoft.
sales and new home sales data out later this week.
Did anybody take this trade with Bobo?
Below 7%. Buyer demand is coming back. However, our next guest warns of challenges ahead, such as, quote, the lock-in effect of current homeowners. Robert Refkin joins us, Compass co-founder and CEO. It's good to see you. Welcome.
Thank you for having us.
You were saying that things are looking a little bit different here as we go into 2024. How?
Yeah, well, it's official as of Friday. The number of the homes that sold last year was 4.1 million. It's the lowest level
Now, break out.
since 1995. And the population today is 27% bigger than 1995. However, this year, all the key signs are pointing the right direction, specifically inventory. because more inventory
Turned into an inverse head and shoulders.
7% more inventory today than this time a year ago. And you can see as well, 5% more homes.
We got an inverse head and shoulders getting ready to squeeze.
Is it that mortgage rates? Is it the relief? Is that what's changing things?
Yeah, 8.1% mortgage rates last fall was very difficult, but now it's basically free marketing to the entire real estate market, saying that 6.8 is a good deal. And so you have more.
Is that working?
It is working. You have more buyers than sellers. And sellers today are more realistic on pricing than they were last fall. That modest buyer strike led to 39% of all homes in the fall having a price drop, and so prices are better now than they were.
The Redfin data on listings, new home listings, is up 2.7 year on year. You think that's low?
Yeah, I think that we're going to continue to see more demand for new homes than existing, because people today want things that are new, and there's just not enough homes available for sale in the existing home market because of the rate lock-in effect. This time last year, 72% of homeowners were locked in at 4% or below. Now it's actually 59%. And so, although it's still high, it's much better than it was a year ago.
Do people try to beat each other to the punch before spring comes? Or do we have to wait for spring like we in classic fashion?
In the last month, I've spoken to over 1,000 of our agents and just asked them, how's the market going? The most common quote I've heard is, this is the busiest January I've had on record, and more buyers are calling me over the holiday season than ever before. They were working over Christmas, they were working on New Year's Day, New Year's Eve, and so, yeah, I think buyers are trying to beat people to the punch before the spring market really hits.
Regionally, you always give us a breakdown. Does it continue to be, some of these warmer places or low-tax states that benefit? And what about the pandemic darlings, that they come back down to earth?
Yeah, the low-tax, warm-weather states are still, excuse me, are still very attractive. But I think Florida has more staying power than some of those other markets. Texas, Carolina is still strong, but Florida is just benefited longer than the others. It is a vacation community that the entire country can go to. So if you're, it is a retirement community. So if you're planning retirement 5 years from now, you could just accelerate it earlier. And there's still enough of the country that's working from home where it does make it more viable. I would also say the spillover migration markets. And so markets people move to when they're getting priced out of their core markets. So let's say San Francisco moving to Las Vegas or Sacramento. You have DC moving to Charlotte or Raleigh, or Austin moving to San Antonio.
6.8% is still a lot higher than, where are you? I mean, most Americans have under 4% rates, right?
Yes, the 6.8% is still high, but that's encouraging for me to see that the market could be this strong with 6.8. Last year it wasn't this strong, 6.8, so it shows that demand has been building over the course of last year, and you can only hold back the market for so long.
Robert, thank you for the update. It's always good to get color from you. Robert Refkin from Compass.
Still ahead this morning, a look at the stock rout that's been hitting Chinese equities and erasing millions, and much more than that in market cap. We'll head live to Beijing for the latest after the break. And an interview you don't want to miss next hour. The CEO of Marriott's with us. We'll get a read on the consumer when we continue.
Asset.com.
China is keeping its low prime rates unchanged as stocks continue to sell off. The Hang Seng approaching what is its lowest levels since 2009. The CSI 300, that's an index of mainland Chinese shares, that's also hitting multi-year lows. Eunice Yoon joins us. She has the
There we go,
from
211.
Beijing. Overall, sort of, the sentiment has got to not be particularly positive right now, Eunice.
Absolutely not, David. It is very pessimistic over here. Shanghai has hit a 5-year low. Investors are bailing out of Hong Kong as well, especially Chinese property plays. The central bank's decision was expected, but it's just feeding into the growing belief here that the government is not willing to make any meaningful stimulus or take any big action to try to shore up the economy. In fact, most of the speculation around the non-action by the central bank was that the authorities are much more concerned about the potential downward pressure that they could put on the renminbi. The authorities here are very sensitive about the possibility of the renminbi moving quickly, especially when it declines, because they're worried about the potential for capital flight. The traders had been talking today about how state banks appear to have been making moves to try to stabilize the yuan, in fact, shore it up by selling dollars. And there were also some reports in the market today that the regulator has been making unofficial guidance to some of the local funds to come up with new equity products in order to stabilize the market. The state media has also been weighing in. The Xinhua, which is the state news agency, has been saying that, really trying to debunk a narrative that we've been hearing. At least
I think I can get
outside
one
of
more
China,
candle out of it.
That China, with all of its economic woes and its problems with its demographics,
What's
has
this?
hit peak China. And so Xinhua ran a piece
What did I
today
just hit?
that said that it's an opportune time to pick China and not worry about peak China. Guys?
Ah, darn, I can't
Curious
figure
on
out
the
what I
domestic
hit.
front. I mean, it's been many years since I was there, but there was a great deal of interest amongst Chinese in investing. I remember this is years ago. They'd go into sort of almost parlors and buy stock and sell stock like it was horse racing. I don't know to what extent there is that kind of interest or enthusiasm, but what is sort of the mood and or the action on the ground amongst the domestic investors?
Well, the mood is not very optimistic. And in fact, I was talking to someone just yesterday about this, about where do you invest? And a lot of people here are really wondering where they can find any type of yield. The stock market doesn't look very good. Today, there was a lot of talk on the internet saying that, I've lost so much money. And that's the sentiment that I've been hearing just in conversations. Also, the property sector hasn't been doing well. So it's like home values going down. Where do you put your money? People have been talking about, where can they find investments overseas? But it's just gotten much more strict. And you could potentially be flagged if you take money out of the country. So it's a really, really difficult environment right now for average investors.
And I feel like we should separate both the near-term issues, Eunice, which you describe on the economy, the cyclical issues, and some longer-term structural issues. The number that stood out to me was that foreign direct investment actually went down last year for the first time in years. So it's not just investors that are worried about the economy, it's businesses worried about, big things like de-risking and geopolitical support. And I wonder how much of a long-term challenge that's going to be for China.
I think it's going to be a really big long-term problem. People have been discussing how they feel that the outlook for China just isn't very good when you look at all of those things, deflation, de-risking, demographics, debt, everything. So the outlook has been something that people are talking about, and one of the reasons why we're seeing all this money outflow from the Chinese markets.
Eunice, as always, appreciate your time and insights from Beijing. Thank you. Well, don't miss on the other side of this break, we're going to have Marriott's CEO and, of course, our live market coverage. That continues at all times. Back at this.
Now we're retesting. So this is exactly how this strategy works. We have the snake. We created an inverse head and shoulders, which was a wedge, but then it came back and recreated a head and shoulders. It pulled back and broke out of the snake. See what it pulled back. I'd like to see it drop a little bit more, but this might be enough to jump in this trade and run it up. But when you break out of the snake, you want to try to look for another pattern to take you into this trade. And right now, we actually could have a falling wedge. So you take and draw your wedge pattern in. If it breaks out of the wedge, then that's when you want to take it. It's kind of a fat wedge, but it is a wedge. So count to 3. See if it wants to come down one more time and hit this support level. Then once that happens, we want to look for it to move to the upside and break this channel. I'm in the trade right now, but if we break out, it'll go to the upside. If not, I can scale out and be happy. I would have been a lot happier, though, earlier if I got it out at 220. So I got to hold this support. I got to watch the tape. Right now, you don't have nothing big going on here. Here it is. This has got to hold. If it doesn't hold, I'll get out. There's your 1, 2, 3 bits. We want this next candle to be a good one.
Good Monday morning. Welcome to Money Movers. I'm Carl Keats, and ASR Eisen is back on the floor of the New York Stock Exchange. Today, the street debates the next move for stocks, with the S&P, Dow, and NASDAQ 100 all hitting some fresh all-time highs. We'll talk with HSBC's chief strategist on why he's cutting risk exposure.
Then more from our conversation with the CEO of Ralph Lauren, advantages and risks he's seeing from AI.
Marriott unveiling some new growth numbers with shares up 40% in the past year. Tony Capilano is with us live this hour.
Now we're doing a break to the upside.
Carl said new highs. We continue the strength building on last week's more than 1% rally.
Now we try to break up to the upside here. It did exactly what it's supposed to do right now. And we want to see this tape. There we go. See that? See them 100s come in there? Somebody just bought a bunch right there. Perfect. Bam. Now, I'm a little skitsy of this trade because I never have done well with Microsoft, so I'm going to get out of it, take profit. I got in at the shoulder line of this head and well, I got in before that. Then we had the 3 black crows. We had a long leg doji. This is a bull flag. This is called a falling wedge. And if it don't work on the 3rd trip down, it ain't going to work at all. Get out, and I'd be real happy right here. But I want to see if I'm just so sick and tired of getting out of these too early and not taking them big bucks. I got a lot of shares here. Right now we're very bearish, so I got to get out. Screw it. I can't take it anymore. I'm having a Charlie Sheen incident. Ain't that a relief? So let that be kind of a lesson. Now, for this to stay bullish, it has to hold what was resistance, now becomes support. So it's called stair-stepping. If we can gain respect off the old resistance of this here falling wedge, we'll come up and have a 2 bits and a freebie breakout. But I'm out of the trade because I just couldn't, my gut was telling me to. I'm getting goosebumps, and I have a lot of contracts, so I don't want to take too big of a risk. That's called getting yourself out of trouble. But it'll be, again, I'm going to start sobbing. Ain't that right, Linzoid? Can you handle a guy that sobs? Some women don't like that. Because I'm about ready to have a heart attack. Go ahead and just run to 250. I dare you. There we go. God bless America, land that I love. Stand beside her and guide her with the light from above to the mountains. It's doing it. Oh my God. I'm so sick of myself. Do 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 from above. Dadgummit. I'm not going to say how many contracts I had because it would make everybody want to cry. I don't want nobody crying, just me. There goes my whistle is going off. I'll be right back. Oh God.
Like the UK and like the Eurozone, those stronger currencies in an environment of quite sluggish absolute growth momentum, that is toxic, right? So then really the rally that we've seen in Q4 in Europe is not really on sound footing, and we do expect a bit of a pullback there.
It really does feel, in terms of the outlook for global growth this year, that it's lumpy and that it's not connected. You know, there's this idea of coordinated growth, and it doesn't. Investors are pouring into Japan and the U.S., not so much Europe and China. And I do wonder how those opportunities shake out, and also how that sets up just global growth in particular this year.
Yeah, I think global growth, you're absolutely right. I think global growth, or the cycle really, is, like, to be quite honest, at least what I haven't seen before, right? We know that, for example, look at manufacturing. Even within manufacturing, there's these mini cycles going on. We know chemicals are really struggling. Autos are sort of trying to get out of the doldrums, whereas, construction, particularly with you guys in the US, is on fire. So even those businesses or industries within a tiny sector like manufacturing are having these very independent stages of the cycle at the moment. What I would say, how you have to position right now, if we do get a bit of a reverse Goldilocks going, where particularly US growth, which at the end of the day is the most, that is the most important, that is going to be the key factor, the key determinant. If we do indeed surprise very strongly to the upside in the next couple of months on the activity data, then it's particularly short duration.
I mean, I got this down to a T. The strategy. Why me? Oh God, I don't even want to look at it anymore. Ugh. Panic attack. I'm telling you, I've left, let's say I have a dime and I get out at a dime. I get out early, and then I go back and I look at it, and it's at 20 cents. I probably would be worth at least $10 million if I would just hold. Here in the past 2 years. I think I'm probably one of the best knife catchers out there. Not too many people, I mean, oh God, 260. So I got out at 219, and that'd have been 31 extra cents. 32. 33, up 34. $34 times 15 is 510 bucks left on the table. But that's okay. If I could play a song on, I tried to play music on my thing the other day and I got copyright issues. You can't do nothing on YouTube anymore. I played a Beatles song one time and they took it completely off. I could play one of my songs. I don't think I want to put you through that. So I'm going to go and cook me a hot dog. I'm going to put Ralph Lauren. Here she is pumping Ralph Lauren.
For consumers this year.
One of the challenges in this industry is to chase trends.
Oh, shut up. How much is Ralphie Poopy?
We do want to be fresh and relevant. We're also really,
I mean, I got some nice shirts, but they don't cost me no $1,000. Oh, gosh. Tesla double bottom. What did that one do? Oh, God. Look at that thing. Right straight to the 200. So YouTubers, the exit idea would be the 200 SMA on a 1 minute time frame, and if you had the 5 minute up, it would probably be the 51. Now you got two engulfing candles here, so that's another idea of a sell signal. And you switch this all around. Let's clear this up. So you're working the 5 minute. You've got an inverse head and shoulders right here. So you draw out your trend line. Draw out your snake. Break out. Always clean this gym. May I help you? Yeah.
Good morning. This is Jonathan. How are you doing?
Very good, Jonathan. I'm busy right now. What you got going?
Okay. If I catch you at a bad time, I just want to let you know that I'm calling you about ASU.
The who?
Affordable caring. Calling about ASU.
Eight?
Affordable caring.
Oh, yeah. Yeah, I got that.
And what's your name?
Jim. But I gotta go right now. I'm in the middle of a trade.
And how old are you?
I'm 63. I'll catch you later. Bye-bye. Excuse me?
If you have 2 to 3 days, can we continue the conversation?
No, I gotta get. I'm in class. You have a good day, sir. Now, what was I talking about? 5 minute chart. So we got the snake, and we got the chart pattern right here, inverse head and shoulders. This is on the 5 minute. Say you're watching your favorite stocks. It could be Microsoft, it could be anything, Boeing, it could be NVIDIA. Then all of a sudden you're having this tech sell-off today. So you want to look for the snake and look for the pattern. You break out, you pull back right to the shoulder line of this inverse head and shoulders. And that's when you take the trade. And then you look at the candlesticks. Now I don't use the 5 minute very often, but we do have a doji right here. And that doji would have maybe got me in the trade. This is called a dragonfly, upside down dragonfly, or an inverted hammer, or inverted long leg doji. It looks kind of bearish to me because we have the upper shadow is taller than the lower shadow, but I would have probably took it because did pull back and respect a tweezer bottom on this inverse head and shoulders. And then I would have took it and run it on up and got out of the trade to the 51 EMA. That's on the 5 minute. I prefer to use the 1 minute because it gets me kind of in there a little bit earlier. But still, it'd been about the same spot. You got your left shoulder, you got your right shoulder where it consolidated at. So the snake breakout, pull back, boom. Tesla, that's what I was going to look at. It just sometimes, I just want to, I'd like to stay in these trades a little bit longer. I just can't get myself over not doing it. Because I'm happy making what I made, I'm happy making $600. But it could have been 500 more. So we got the snake, breakout, pull back to a double bottom, higher low. Boom. On Tesla. We couldn't take the trade because it didn't break out of the snake. And if it did break out of the snake, we'd have to wait for it to pull back. And we could have had us probably a higher low or a triple bottom on that trade. But I got in Microsoft and I wanted to get out of that trouble.
As there is material, spare parts, equipment, goods that comes from there, that will have an impact. So if it put a lot of burdens on the companies,
God, DWAC,
and the industries, because they have to pay higher cost. It will take, as I said, longer. Insurance prices goes up. So a lot of implication for the industry.
You can watch my full conversation with Nasser at 8 p.m. Eastern tonight. It's part of our CNBC Leaders series from Davos, airing all week long. And I chose to play that part for you, Carl, because I know it's top of mind right now for investors as these Houthi rebel attacks continue out of Yemen, backed by Iran, and it disrupts global shipping, including the oil trade. Interesting. He says they're not affected. They have an alternative route, but the longer it lasts, it's obviously disruptive.
Yeah, the bear argument is that there is new capacity coming online this year, but that's not tomorrow. It's going to be a while, and what happens in the short term is going to be important.
You need capacity for energy,
New freight capacity, new shipping capacity that would, still go around the corner, but would be more boats.
More expensive, too, I think, is the question, at least in the short term, until they can get there.
Fascinating. What a point of view on such an important story. Later on this hour, the CEO of Marriott's going to reveal some new growth numbers. Stocks up 40% in the last year.
And just mention the energy sector. Natural gas on pace for its 5th down session in the past 6 this morning. Right now, falling more than almost 5.5%. We're back in 2 minutes.
What was I going to do? Oh my. Why did I play Microsoft? Because everybody's pumping it on CNBC. I've heard nothing about Microsoft. I don't see what they see in it, but I want to join the crowd. NVIDIA. Take and draw your snake out. Knife catch. Breakout. Pull back. Boom. This is called the neckline of a two-headed snake. It's a W. That's the neckline, or this could be the neckline right here. But usually it's a W.
European markets moving higher.
It breaks out, pulls back, boom.
ECB rate decision later this week. About 100 basis points of cuts have been priced in for this year, with 96% expecting the first cut to come in June, according to Reuters. But our focus this morning turns to China, with Beijing setting a 5% growth target for 2024. They officially did that, higher than last year's target, despite lower growth expectations. And then state-owned CCTV reporting that the country will aim to, quote, consolidate and strengthen the upward trend of the economic recovery and promote stable and healthy development of the capital market. Markets not so confident for the time being, though.
They're lying. I wouldn't fall for it. They're trying to tell you that the U.S. market's overpriced, and they got to look for somewhere else. Now, they had a guy on here earlier bashing China. He said he got a blanket to put on his bed that was an American flag. He more or less told people you're an idiot to buy China right now. China's not real good about stimulus money, not like we are here. We're foolish here. So we got two sides, you know. You got to stick with your gut.
See if there's any kind of relief coming in the days
Because
to come.
going into the year ahead, it was like, this is the cheap market, right? There's a lot of value here, but so far hasn't really panned out, and the Chinese have had to.
I don't pay much attention to her alerts at all, because I don't think she's that good.
And markets, the two big global markets of trade, China A shares, they've gone nowhere for 17 years, since 2007, essentially. We'll talk more about that on ETF Edge coming up in the next hour or so. But I want to just know we're at new highs, of course, on the S&P 500. How we got here was largely technology. Again, today you see Microsoft, NVIDIA, new highs, Alphabet, Meta at new highs. Let me just show you this screen here, because the advance since 2022, the new high that we passed, was mostly due to technology. 15% move in technology. Energy was the biggest mover, but remember, energy is only 4% of the S&P. Technology is about a quarter of the S&P 500. Industrials also had a modest contribution as well. So in addition to the biggest big cap stuff, we've been pointing out the momentum in some of the really big cap software names. So again, here's your stalwart. I seem to put this up almost on a daily basis as we have Salesforce hitting another new high. That's, of course, a Dow component. There's other big software as a service mega cap names that have been hitting new historic highs as well. Bill McDermott says ServiceNow, stalwart on CNBC every single day now, hitting new highs. Not a lot of momentum elsewhere. One subgroup not paid a lot of attention to is insurance stocks, which on the back of Travelers, fantastic earnings last week, where the pricing was much higher. We're all paying more for insurance, folks. That's another new high for Travelers today. So there's your momentum there in technology and insurance stocks. Elsewhere, I keep waiting for oil stocks to bounce. I mean, it's true oil's just stuck at $73 for ages and ages, but these exploration production names like EOG down 9% on the month. No energy, not a pun, folks. No desire to own them at all. And it's not just EOG. Marathon, Conoco, Chevron really not going anywhere. It's kind of a major problem for the markets here. I'd like to see some movement. A little bit of excitement on the IPO front. Remember, we got new highs in the market. Some hope the IPO market will start opening up. We did have an announcement today of an interesting IPO that's coming. Amherst Sports is going to be here at the NYSE. It's
This is what I'm looking for. NVIDIA is the market leader. So this is, I'm trying to think ahead. I want to see a rounding. I want to see it hit that 620 something and 640. And I want to see something. I want to see a pullback. Because they're relying too much on these 7 stocks. They tried to call out the Russell 2000. That didn't work. They're calling out China. That ain't going to work. They tried to call out a broadening of the market. That didn't work. The only thing holding this up is AI, tech stocks. They tried to call out energy. That didn't work. They tried to call out healthcare. That didn't work. It just sounds like the perfect bubble to me.
To discuss abortion rights on what would have been the 51st anniversary of the Roe v. Wade ruling.
Okay.
This is the 4th meeting of the task force since the Supreme Court overruled the landmark abortion rights ruling. It comes as the Biden administration stock exchange.
I'm done with you all.
The biggest stock.
I don't want to listen about abortion on the stock channel.
2 p.m. Eastern on Schwab Network. A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full...
If anybody sees a pullback on a 1, 2, 3 count, bring it to my attention, because I might just go ahead and take the trade. We have a triple bottom on FedEx with a snake. So you draw your snake in. We had the breakout, pull back to the top of the channel with a 1, 2, 3, triple bottom, boom. Snake breakout, pull back, boom. Boeing facing investigation after engine trouble forces Atlas Air 747. There we go. I knew it was going to happen.
that the traveling public understands the safety of these vehicles.
Right, so lithium-ion battery cells. These are high-performing battery cells, right, from what I
Yes.
understand. Are we worried? Are there worries about either getting the materials that you need to supply new phase of electric vehicles? Are we worried about getting these things charged properly over a period of time, over however you do this?
Yeah, the good news is that we use a similar technology that is already being used in masses on the ground with EVs. So we are procuring battery cells, lithium-ion cells, from a commercial off-the-shelf vendor. So it's not like there's some new technology that we're waiting for. And these cells have been proven to be very, very safe. And a lot of the work we're doing with NASA will help really show that in a really broad way to validate it. We use similar type of charging that you see like a Tesla supercharger would use, 2C charging. So a lot of the really hard problems that have been put into place really happened when Elon Musk put Tesla on the map and really helped develop the entire EV industry.
Do you know Elon Musk? Have you met him ever?
I don't know him personally.
But
no.
you should have a conversation with him, I'm sure. Can we talk about, the idea of how this can expand? I mean, are we thinking flying taxis, flying cars? Is that where we're getting to? Because yours is the midnight aerospace vehicle of some sort. I want to hear exactly how large that may or may not be. But I think a lot of people start thinking about flying vehicles and flying taxis.
Yeah, so these vehicles are about 6,500 pounds, so very similar actually to a Tesla Model X in terms of weight, but they have a wing. And so about a 50-foot wing that's put on top of these planes. And so they're designed to fly up to around 100 miles, but really targeting trips that are in the closer to 20 to 40 mile type of trip. So the trips, again, that are on the ground that take a long time to drive.
We talk about helicopters, but the idea behind this too is the exciting part. Is this going to ultimately be cheaper, quieter, provide some ease or dependability?
Yeah, so electric planes get substantial benefits over the competitors' helicopters, and that comes in the form of cost, safety, and noise. From the noise perspective, these vehicles have much smaller propellers that spin much slower, so they make very little noise, and when flying overhead are basically silent or just blend in to the background on the ground. From a safety perspective, there's 0 single points of failure. So these vehicles can fly and get ultimately certified at very similar levels that the big commercial airliners get certified to today. And because they're electric, we can actually manufacture them and operate them at price points that are very, very low, similar to what rideshare prices are.
So among all of this, I mean, does this ensure U.S. in the leadership position in the world of aerospace? I mean, because this deal that you have, this collaboration is very exciting. It is an initial project, from what I understand, right, about these battery cells and safety testing and such. I'm sure you're extremely proud to be working with NASA. I mean, I can't think of a higher achievement, and you and your team must be extremely proud of this. Tell me how it's going to grow, and maybe also how it helps the United States.
Yeah, so I think it is critical that the U.S. maintains a leadership position in aviation. We lost some of that leadership in the drone market, and now it's become really critical in these new electric airplanes that we do really make sure we maintain a broader leadership in aviation. The good news is that the FAA and the broader public has been very supportive of the industry. So the FAA put a framework in place, starting with the former administrator, Billy Nolan, to help certify these vehicles. And now we're at the final stages going through the flight testing portion of the process where we can actually certify these vehicles. And so that has been really exciting. And with NASA coming on board and really helping show the safety of these vehicles on top of the FAA certification, I really think it'll enable the flying public to gain the trust of these vehicles, which can enable them to scale and become ultimately a mass market transportation solution.
Adam, I'm excited for you.
Thank you.
It really is your moment now, is that you've been here on the New York Stock Exchange, but your platform continues to grow and some of your visions are really coming to fruition. So congratulations, Adam Goldstein, founder and CEO of Archer Aviation. Thank you. Coming up, we're taking a look here at Developing Stories. Kevin Green is with us, senior markets correspondent. We're looking at Archer Daniels Midland. I saw it down about 20%. Some concerns about the accounting. Tell me about that, Kevin.
Yeah, definitely. We actually got this news late last night here. They are actually doing an investigation regarding the accounting of its new.
Here's a good example of 3 white soldiers out of the gate. You get the little breakout, and you always want to wait for the pullback, and you got that first candle and the second candle. If you draw your support line across that second candle, that would be my support level right in there and right here. Somewhere in this, and there you go. You created an inverse head and shoulders. Boom. Back to my resistance that I had on FedEx. I wish I was watching this one here. Snake, breakout, pull back. So you got your snake, as you're watching this trade, and all of a sudden I come back from lunch and just 2 minutes too late. What am I doing? Snake, breakout, pull back, boom. Or snake, breakout, pull back to the head and shoulders. Left shoulder, right shoulder, back to the VWAP. But I've had a good day and I don't want to overdo it. I hope it's rain, man. I'm not liking it one bit. It's giving me flashbacks of 2007 and 8, that ice storm. I'll show you what I'm talking about, YouTubers. If you ever had to deal with ice, this could get real nasty. Freezy warning. Let faucets drip and keep heat set at 65. I almost hit a car this morning. I decided to go ahead and go see if I could get to the IRS and clean up their sidewalks and get them ready, but I got in their parking lot and it was just a sheet of ice. I could barely, I was sliding. So I decided to come back home. And as I pull into the parking lot, there's another car that said slid sideways and come real closely, hitting their cars, hitting two cars. And so I got up there and I thought I could pass them, and mine started sliding down. I'm like, oh shit. Lucky me, I stopped within a foot, and I didn't know what to do. So I straightened out my wheel as best as I could, and I gave it a little bitty gas just to back up, see if I could reverse it back out of the lot. And then I ended up going back in the street and pulling over into the church next door, which is a solid sheet of ice. So I don't think it's going to warm up today, and it's going to be a mess again tomorrow. People don't know how dangerous ice can be. It don't matter what you're driving. Snow can get around good, but ice, no. So I got back home. I went on all the doors here in the apartment complex, and I said, at your own risk, man. I wouldn't be driving on this stuff. But I came within a foot of sliding into this other car. And that's saying I would have probably had a stroke. Okay, we got charts here.
Post full value or margin of $62, and in case you get assigned the shares, but your break-even is at $60. So effectively it's bullish, but it allows us flexibility, because if the market pulls back a little bit, the stock does as well. Ideally speaking, we'd like to see that premium erode to zero.
Yep.
All right.
February 16th, $62 put.
Good luck there at Uber, our dispatcher today. Coming up next, it's time for our 360 round. It's a big week for earnings, and our team is ready to preview Johnson & Johnson. The company reports its earnings before the opening bell tomorrow. Let's get a look at that, and let's get prepared for that. Trading 360, we'll be right back.
Yeah, Uber will come back to 64 and retest it.
Binge watch the
We've got an expansion pattern.
Tune in 24 hours a day.
So we hit the first support right there. If it doesn't hold that, it'll drop all the way down here and be a real strong buy at the 123B. Set an alert just above $62. We'll bring it up to 62.20. Why did I do that? That's a good question, Sam. I'll tell you why I did it. Many a times I've set an alert right on the spot, and it will stop right before you get there. So on TrendSpider, I used TrendSpider. chart. That's the 1 hour. So here on TrendSpider, your money's right there. The big money's right there. And I set around 62. So I want to set an alert. I want to set an alert off this 61. Create an alert. Touch. And bounce. Sensitivity level is set. That means there's going to be a little, before it hits it, if it does not hit it, it'll hit that sensitivity lever spot. I'm going to say off the 65 on the hour. I'm going to create an alert. So if you look at this here, 65, there's a little force field around that 65. And if it touches that field right there, it'll stop before it hits my target. And that's right where the money is. So that has a good chance of pulling back and hitting that spot and then taking that trade and bouncing it back up. That'll be a double bottom right here off this here, a triple bottom. One of it's 2 bits and a freebie. And the alert's been set. Sava hit my alert. $11 days ago. It hit the 200. 200 SMA right there. Oh, Intel. They got Johnson & Johnson coming up.
That could be a pretty strong catalyst for this drug to be able to take market share from a different drug that is annualizing close to $5 billion. So a huge potential opportunity for J&J. And I think the market maybe doesn't appreciate that opportunity as well as some of the very well-entrenched drug platform J&J has in multiple myeloma. Multiple myeloma is a blood cancer with very strong drug pricing, and J&J has a great franchise already entrenched and is working on building the next generation of drugs there. So when we look at the valuation of J&J, we think it's undervalued. I think the concerns around the patent pressures coming up for Stelara in particular, Stelara's annualized sales are close to $10 billion, so that will hurt the growth trajectory of Johnson & Johnson. But what we think the market's underappreciating is that pipeline, and I think there will be some discussion of that pipeline at the earnings call tomorrow, and I think that will help the market appreciate some of the opportunity that we see in the name.
Right, and 164 is your target. It's at 161.90 today. David, final thoughts. What names do you like where you see
I like these guys.
Some value opportunity if someone were
They
to
give
buy
targets.
today? Do you have
They
some
show
buys and
charts.
buys out there, David?
If I could move over to the life science.
And the most important thing is they don't frickin' discuss politics.
you know, they do a lot in producing assays, instruments, sequencing, and you know, all sorts of lab equipment manufacturing. And you know, if we see a stronger biotech sector, better funding, IPO, and you know, we're going to see that reflected in the life science sector and in Danaher.
Yeah. All right. So we'll watch for that one as well. Thank you both. Nice setup for
GWAC.
tomorrow. David Tung of Argus,
3981.
Conover of Morningstar. Thank you. That's going to do it for us here on Trading 360. Thanks for being with me every single day. I'm Nicole Petalides, live at the New York Stock Exchange, 11 a.m. and 2 p.m. So I'll catch you at 2 for the watch list. Join me then. In the meantime, keep it right here. Fast Market is next.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
This is my DWAC target.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Bum bum. Bum bum. Bum bum bum. More cowbell, please.
Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and strategies in earnings names. We'll take a look at Procter & Gamble, which continues to lag the overall market gains, and General Electric, which rallied over 95% last year and is at 6-year highs into their quarterly results. And like Folio break down consumer sentiment data on United Airlines, the stock is down about 6% so far this year, as higher costs have offset the robust demand for flights. Now let's take a look at the major indices, which are off of session highs, but we're still hitting record levels. For the S&P 500 up 0.3%, same for the Dow Jones Industrial Average. NASDAQ up nearly 0.4%, and the Russell 2000, the small caps, making some inroads. They were down last week, about 0.3%, up 1.6% in today's session. To help me break down the market action, let's bring in my co-host Kevin Hinks. Kevin, looks like you take off for a week, and stocks are pretty optimistic here as far as equities goes. It didn't seem like higher yields or higher dollar over the last couple of weeks have negatively affected stocks. We're kind of getting a divergence from that theme.
Yeah, you know, one of the things, Tom, that I noticed while having one eye on the market while on vacation was the fact that yields were going higher and the dollar was creeping a bit higher. And I thought that was a really good sign for stocks. Now yields are back down again today, back below 4.1%. The dollar is pretty close to unchanged, but down ever so slightly. And the market continues to power through. So there's some real positive things going on here in the market as we get into earnings season. And you know, Tom, we started with the banks. We'll do more airlines this week. We'll get United Airlines after the bell today. That we'll cover today. Then we're going to get into large cap tech. We have some consumer names coming out this week. Visa and American Express will give us a good look at the U.S. consumer. And then we start creeping into large cap tech with Tesla, Netflix, and you know, Intel, a couple others. This is a big week, Tom, but it might be a week where the data means just as much, if not more, than the earnings, Tom, because we're going to get no look at inflation, and we're going to get our first look at fourth quarter GDP, expected to come in around 2%. So we're watching data, we're watching earnings, and we're watching a market, Tom, that right now, unless something comes to change it, seems to be on a kind of a glide path higher.
Yeah, definitely. Bars getting higher for some of these names going into earnings.
Okay, get ready for the
that are due.
to short DWAC.
Rallied over 30% from its lows, Kevin, was Home Depot over the last 3 months. Let's bring in Jenny Horn, markets correspondent, here to help us break down. Got a couple downgrades in this space today, Jenny. Not surprising. If you look at the chart on Home Depot, it's like nothing happened throughout 2023. And then just spiking to the upside, hitting 52-week highs.
Yeah, but those of us that looked at Home Depot all year long know that we are not so quick to forget, because it was an underperformer pretty consistently as we've seen this shift away from DIY. And now a lot of people just are pulling back on their spending regarding the home improvement space. I mean, just compared to the pandemic, not to say spending has gone away, because this name has been relatively resilient, but they do have this exposure into a lot of the pro business, which has been read as a positive. But Oppenheimer today downgrading shares to perform from outperform with a price target that was slashed to 345, down from 360, and that also implies some further weakness. Currently trading at 357.59 a share. They did also downgrade Lowe's, though, to perform from outperform with a price target that was also cut a little bit more substantially to 230 from 275. Difference there, though, is that Lowe's hasn't seen the same degree of excitement as of late, and so that price target actually implies some optimism from here. But they did note this more cautious near-term stance toward home improvement retail as a whole, saying the structural underpinnings of home improvement remain intact, and they're still upbeat on the long-term prospects for the sector and leading operators. But that being said, Oppenheimer is fretting the shorter-term market positioning towards Home Depot, and Lowe's is turning too complacent in that shares might not discount adequately for potential persistent fundamental weakness at some of the chains. They said specifically actually calling for that forecast not until 2025, of January of 2025. So they did say the initial 2024 outlook could prove unfavorable as a catalyst for shares, but all things considered, a lot of this sentiment seems more negative, more far out. We do also hear from both of these companies in the last few weeks of February. Home Depot February 20th and Lowe's February 28th as far as their quarterly updates go. So they see this more of a long-term painful story, but we know both of these names have been fairly resilient despite some of the overall consumer headwinds.
You know, Jenny, Tom and I make fun a lot of analysts that follow stocks and just upgrade. But this is a little counterintuitive to that. This analyst is saying Home Depot and Lowe's have run a long way, and there's just a little bit too much optimism out there because, whether we talk about home improvement.
There's too much optimism in tech in general right now, sir. I'm serious. I can't handle this. I'm going to have a panic attack.
Where the analyst is saying, okay, it's run a long way and things are just a bit too optimistic here.
Yeah,
exactly.
I think that is important to distinguish between like that same.
Now, you wouldn't hear that shit on CNBC, and you'll get stuck and caught up, and because they're just, these people show charts. That's what I like about Schwab. They'll give an analyst, they'll get somebody on here, and then they'll chart it up. And I mean, and there's no politics. God, I get tired of it, politics. It drives me batty. I want to argue with them all the time.
Somewhat of an overreaction of selling to the downside. I completely agree with you, Kevin. I think a lot of times read the actual story, assess what you actually can take away from the analyst note, and then decide if it's negative, neutral, or positive. Because I think a lot of times we overall in the market
$35.
Some of these more neutral notes as a negative piece of information from this analyst, and I don't think that was the case. I think they're just saying, hey, in regards to its outperformance as of late, we're just reevaluating our assessment based on its valuation levels, which I think is actually the right kind of analyst note. Perhaps just some of the selling today was a bit of an overreaction.
I wonder if falling interest rates and housing data that's been pretty robust lately contributes to that a little bit, because the data hasn't shown that the consumer's still out there spending on goods like Home Depot and Lowe's sells at this point. So maybe some clarity needed on that. All right, thanks to Jenny Horn, markets correspondent, breaking down the downgrades in Home Depot and Lowe's. Now let's bring in Alex Coffey.
I'm going to change it to 35.
Senior equity contributor here on the network. Alex, I wanted to get your take here. The expectations for a rate cut, according
there
to
it is.
Fed Watch,
Oh, you dog.
They were touching the 80% level just about a week and a half ago. So those expectations have come down, but that led to support early rate cuts in March when it was at 75, 80% chance. That lended support to the equity markets. Now those expectations have come down severely that we're probably not going to get a rate cut in March, but the market doesn't care. It continues to move higher.
Yeah, it's the better of the two outcomes, though. A resilient economy, one that remains in a growth trajectory, one that isn't worried about inflation, and this soft landing dynamic is the preferred outcome. Look, I don't know what's going to happen with the equity market at this point. It really hinges on what names like NVIDIA, Apple, Microsoft are doing on a day-to-day basis.
Right.
You hate to be cynical or simplify it, but it's just the fact of the matter. Now the Russell 2000, small caps, things that have a little bit more non-profitable growth companies associated within their index, it's hypersensitive right now to interest rates.
Yes.
Interest rates had made a bit of a retracement the last few sessions. Their last few weeks, rather, and you saw the Russell 2000 under tremendous pressure. Well, it's a bounce back in bonds today. Rates are moving lower generally across the curve, despite what you're talking about with the CME Fed Watch, and you see this resurgent Russell 2000 that's way out in front. So when you're looking at interest rates, I think that you can draw that correlation strongly to the areas of the market like the Russell 2000, maybe the other 400 in the S&P 500. But really, when it comes down to it, the overall market's performance, you can watch names like NVIDIA, Apple, and Microsoft. You'll have a better idea of what's going on.
Yeah, Kevin, when you look at that, and the leaders have definitely contributed to what's going on here for the overall equity market. If we start seeing some cracks, I mean, NVIDIA hit 600 today. Microsoft hit 400 today, all-time highs. If we start seeing some cracks in those names, because the valuation's starting to get pretty thick here heading into earnings, maybe a good earnings report when the bar is so high isn't so good for the stocks.
Well, there's the problem, right? How we're going into earnings and the valuations of these companies, and all it does, Tom, here we go with this term again, it's going to raise the bar on these companies to beat earnings that is substantial, and they
come on now.
Some of these
don't panic, guy.
Meta, Microsoft, you named a couple of the names, could have really good quarters and the stock could go down because the valuations are so meaty and they've run far into this. Kind of like the end of the year, how some stocks finish. How did we start the year? Pretty sluggish for the first couple days. Now we've recovered some of that coming, but this is going to be a earnings season where the expectations are pretty high based on the valuation of some of these companies. And so it's going to be interesting to watch the 7 and the 493 in the S&P 500 and see how that plays out over the next couple months. It's going to be fun, but
I'll be right back.
wow, we are going to pay attention to the Nvidias and Microsofts and Metas and Google Alphabet. We're going to pay a lot of attention to them, Tom, and they're coming up on the horizon.
Yeah, we've got to wonder, do we throw Tesla out of the Magnificent Seven, throw in AMD, which was hitting all-time highs last week? A lot of those semiconductor stocks were hitting all-time highs last week, driving equity gains. But Alex, Kevin mentioned some of the data that's going to be coming out, that first read on Q4 GDP, PCE data on Friday. What are you focused on here as far as potential market-moving news?
Yeah, I think both of those have the potential to push back on this rate cut timeline. And I honestly think if we get a situation where it is pushed out in time, while there might be things bubbling under the surface that need lower rates, the general macro view should welcome better data. Good news should be good news. Whether or not that ends up being good or bad for stocks in the interim remains to be seen. But we would much prefer the soft landing growth story for our economy, for our everyday lives over some sort of deflationary setback, which looks a little bit more in the kind of the scope of 2008, 2009, less so, a little bit of a goalie potentially. So if you see this huge U-turn from the Fed, it's probably not for a good reason. Now, I don't know what's going to happen. GDP is expected to fall off a cliff in fourth quarter, but it's expected. So if it comes in around there slightly better, that could be a positive catalyst, much like retail sales was in the last week. In terms of PCE, it's a little bit warmer than expected. Maybe it pushes back that timeline, but no one's worrying about runaway inflation right now. It could come back. I think that's probably our lowest probability event of all the different outcomes at the moment. I want to tie this to what Kevin was talking about, though, because I see the risk in the market much more something that we're a little bit more familiar with, which is, you mentioned Tesla. Let's use Tesla and electric vehicles, for example. Tesla and electric vehicles were the AI of 2 years ago. Tesla explodes, much like NVIDIA, on good fundamental reasons. Excitement also from a trading and those type of dynamics as well. And then the thesis was, this is a growing sector. It's going to expand, and there's going to be these winners everywhere. Rivian, Lucid, Fisker, you go down the list. Well, the reality was the expectations weren't met, and now you're seeing the aftermath. I'm not saying AI won't change the world, but maybe it doesn't meet these lofty expectations on the timetable laid out, and it's so exposed to such a handful of companies.
Exactly. This guy's got it right, man.
The .com led to the internet, and that changed the world. But it took us 15 years to get back from the 2000 highs in the NASDAQ 100. I'm not saying we're in the .com, but you guys were around that. No one's saying Microsoft has.
I said the same damn thing.
There were a lot of companies that ran up with Microsoft that didn't. Yeah.
This guy, we got a mole from Schwab in here. I said the same thing about all these bubbles. I laid every one of them out. I'm having so much flashback of the .com era. CNBC has way overdone this pump. And they're not telling, this guy comes out and says it. He brings back history. It always repeats itself. And I can go after every bubble over and over again. When you have stocks that have run up 200 to 300% in 1 year, it's a bubble. It's not normal. I don't give a frick if it's God came down and said hi to you. It's still going to be a bubble. And this guy's saying exactly what I said earlier. I'm hired, man. You want my application? I'll give it to you.
Be the clear winner in AI, the dominant player, and the stock could be $350 just based on valuation.
Always clean this gym, may I help you?
That's what investors have to be concerned about when they trade these stocks. What we've learned time and time again is
Now, Brandon,
they don't go straight up forever. They just don't.
we're in a bubble, man. I'm telling you.
Valuation
Your market is not as good as you think it is.
Theory, Kevin. I think we're going
I tried to tell you that the other day.
over the next couple of weeks. High
What?
bar, low bar, because there's
Cannabis,
You're going to audit me.
I mean, you go down the list. I mean, it's not
Because I
that
don't
hard.
agree
It
with you?
happens all the time. But to Oliver's point this morning on the
Brandon, shame on you. I'm going to write you up. I'm going to make sure you don't get elected next year. Yeah. See you in November.
going into earnings for some of these tech names. All right, let's take a quick break. When we come back, we're going to take a look at the other side of tech, and that's going to be the staples. Procter & Gamble reports earnings after the before the close open tomorrow morning. Stock has underperformed the overall market. Well, we'll see what earnings have in store. Fast Market's coming right back.
My target is going to be 35.43.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim.
There we go, baby. I can't make it any more clearer than that.
On the Schwab network.
Oh, God, man, what is the deal here? Brandon! Always clean. This is Jim. May I help you? You better have a good reason to call me. I'm in a very good trade right now. I don't give a shit about your taxes and your re-election. All I worry about is making money. This is the FBI. This call is now being recorded. Have a great day. Now look what you caused me to do, Brandon. I was up. Oh man, they're buying the thing. There's 2,000 contracts right there.
Percent growth, and it just comes off that. You know, a bad quarter for this name is, you know, down 1% or something around there in the last couple of years. So when you start thinking about this, that's really why you invest in a name like Procter & Gamble. You're investing in it because they're selling staple products, because they're generally stable. That's the idea. They're a defensive investment typically, and I would stress the word investment. If you're speculating on a shorter term basis on something like this, you can't discount the fact that this is not the part of the market that's in favor right now.
Right.
Despite its you know, personal or its own successes, investors flock to these names in times of uncertainty. Right now there might be uncertainty, but the market's discounting that. And those who are polarized and have that uncertainty have expressed their wager elsewhere in things like treasuries and things like Fed funds futures and things where they're more macro positions as opposed to interim stock positions. Now the stock's a little bit weak here today. It's down a little bit. You can see over the last few months it's been sort of chopping around, kind of approaching this earnings event as it's somewhat like a coiled spring ready to go. But even with that coil action, you're not seeing a ton of volatility priced into this. You're looking for about a $4.25 expectation based off of what the platform's calculating using the real-time option prices on that market maker move. Well, $150 stock, $4, I mean, what, 3% or so is roughly what we're talking there.
Mm-hmm.
That's not very much in terms of what we're used to looking for. But for me, this comes down to what's in favor in the market and what's not. And right now, staples are not in favor.
Yep, and if you look at the chart, I mean, it's been trending lower since about beginning of September here. We're topped out about 158.40 on that. I mean, it's not like an out of the realm of possibility, but look at that chart right there. See where it bottoms out the last 3 times is around 142, 143 level. So how do you want to look at this one from an earnings example trade?
Yeah, it's hard not to notice that level being pretty critical, sort of that very subtly up-sloping trend line there, potentially acts as support. And to pay tribute to Kevin being back from his vacation, I looked at a week-over-week put calendar here. So a strategy that he often has looked at, and one that you know, I've started looking at more from his conversations around these. Selling this Friday's expiration, buying next Friday. So selling the 26th, buying the Groundhog's Day, Feb 2s, 143 put calendar, 20-cent debit, just $20 in risk. Like right now, like I said, I'm not sure this is the area that many are necessarily the sandbox many are playing in. And if you don't have a super strong opinion, one way to still participate but not necessarily be overly exposed is to use a risk-defined trade with not a ton of notional risk. And so while this is speculative, it needs to be right, it's $20 in risk. Now, I know $20 is different to every investor, goals are different, but objectively, compared to some of the trade illustrations we look at, this is on the lower side. And so it's a smaller trade, all things considered, but one that needs to be right. Now, the beauty of this is there's dollar-wide strikes, so pick a strike that's more, you know, reflective of whatever your potential outlook is. Different time frames available as well to different expirations, and you can express that using the time spread.
Yep, let's break this one down. Going up to the February 2nd weekly cycle, buying the 143 strike put. You've got 11 days to expiration in that. And to offset some of the costs on that, sell that January 26th weekly, that same strike, the 143 put, paying roughly about a 20-cent debit. There's your risk. $20 per spread, but you can see there from the risk profile, we've got a nice wide range between just maybe below about 138, about 149 to the upside where we can remain profitable. Now, the risk profile here, Kev, shows that you can maybe, you know, profit about $150, but Kevin, when you look at this, you're buying that divergence in implied volatilities, buying about a 24% implied volatility in February 2nd, selling about a 35% in the near term. If this thing expands to 40 to 60 cents, that's kind of what you're looking for if the stock kind of goes down like that 1 standard deviation move, right?
Yeah, when you look at, and you know, the theme for today's show might just be option spreads for under $100, because wait till United Airlines, the one we're doing next, I'm doing something very similar, Alex. Why? Because, remember, a smaller account can trade these. A larger account can still trade the value in these and possibly do more of them, is the thought. But a low-risk trade that gives you an opportunity to make money, you're right. I mean, one of the things that you have to pay attention here is consumer staples aren't real sexy. Doesn't mean you can't make money trading them. You can, but you have to be right, and you have to be used to little shots with your nice percentage returners. Think about it. If this 20% trade turns into 30%, that's 50% return on your money. It's small numbers make for big percentages. So, but you got to be right. Yeah. And these calendar spreads are a factor of where VIX is right now. It's making some of these trades quite reasonable. Doesn't mean you'll make money. You still have to be right. But these are pretty low-risk ways in terms of dollar outlay of trading these markets, guys.
Yep, flexibility with those calendars too. If you're more bullish and you think it's going to go up 1 standard deviation, maybe you do it's something on the call side. I would also say too, look, I can't speak for everyone, but I think you can make an argument that there's more uncertainty right now. It seems a very polarized market.
Yes.
We're in a situation,
finally,
I know it's a one-day type of a situation with the earnings tomorrow, but we're in this situation where we get a recession, we get rate cuts, or we don't get a recession, we maybe get some rate cuts. Those outcomes are so vastly different that there's times where there's more uncertainty than others, and right now it feels like a time where there's more uncertainty than typically when it comes to what may happen next.
So I don't have to sit here and argue with these guys because they're thinking the way I think. And I can sit here all day long and argue with them people on CNBC minute after minute after minute after minute. But these guys, I mean, they back it up with charts and they're not pumping these stocks that have been up 300 or 400 or 500% in 1 year. It just makes no sense to me. It never has. I've been in too many bubbles.
And sentiment data on the stock moves. Airline stocks down about 5%, 6% so far this year. Into earnings.
I've just been in way too many of them.
We'll come right back.
They never count. CNBC will never tell you when you're in a bubble. They won't. I think they get paid by these companies to pump their stocks. To be virtually honest with you. They think exactly. I mean, the guy was talking about bubbles, and I wasn't even on here for a half hour, and he brought up that .com era. If anybody was around during that period, it's just like China. China has 300 EV car companies that have been listed on their 300. And the same thing with .com. There were so many companies trying to be in the internet business, and only one survived. All the rest of them, same as the car industry. When they first started making cars, there was not just 3, 4, 5 cars companies that came out. There was hundreds of them. And only a few of them survived. Same thing with the cannabis, same thing with the cloud. A bunch of cloud companies came out, and only a few of them, they end up merging, and they just, CNBC won't talk about any of that. Schwab does. Every time I listen to Schwab, I just feel like I can breathe again. I need to hear a little bit of negativity when we're at these bubbles, because then you don't get caught in. You don't get caught. That's why I've been so caring about this whole dang thing. I know I sound like a broken record, but I'm just trying to save you from a lot of agony.
Welcome back to the show, Landon.
I'm probably going to get $100 a contract on this.
Happy Monday to you. We're talking airlines.
Because I mean, I've been here with DWAC before, and this will only last so long, and then it's going to end up selling off. Because for one, CNBC hates Trump. They used to love him. He used to be on their show every there was a time for Trump to get on the show, and they'd joke around, have fun with Trump, and that was until he ran for president. And he's a conservative, but he was a liberal, just the same way as Elon Musk was. He was a big time liberal, and then I ain't gonna act, I ain't gonna be like this. But they had Trump on CNBC all the time. They had a special spot for him. I'd wait for it to get on there because, I kind of liked the guy back then. And I still like him. As a liberal, I liked him when he was a liberal, but
that's going to take a huge toll on things. It could if Spirit has trouble and they,
but if you don't follow the swamp
will jack up prices for a lot of other companies
and agree with the swamp, you're in trouble.
We'll see how that plays out. But when you look at United Airlines, one of the things that we've seen is we've been fairly bullish, moving in the bullish direction on United for a little while now. We put out a note a couple of months ago talking about how things are really shaping up well for United. They had very strong happiness, and the scores were looking pretty good on that. I'm using past tense because over the last couple of weeks, just with news with what happened with Alaska's Airlines door plug, with the emergency landing for United, and with their CEO being in the news for politicized stuff, we've seen a big drop in happiness for United. And with airlines, happiness is a really big indicator that we've seen. So we like to follow that one. Delta, like I said, is always at
UAL looks like it's at a head and shoulders right now.
But United was challenging. They're down a few points here. That week, I think they dropped 9 points. They've recovered some, so it was maybe a flash in the pan. We'll see. But given what happened with Bud Light, I just want to be very careful with this company because you get into politicized stuff, and investors and consumers particularly start to get a little bit weary. So. United, they went from an earnings score of in the 20s, plus 20 to plus 30, somewhere in there, 2 weeks ago. Now we've got them basically neutral. So I was looking forward to playing this one ahead of earnings on the bullish side, but now it's a lot more neutral because of, again, the happiness drop that's happened over the last couple of weeks for United.
Good smart man.
Landon, the airline stocks in general are tricky to trade, right? Because of all the different things that can affect their price. I've got the TSA data in front of me that Tom just mentioned. Except for January 21st or January 1st, which fell on a Monday, every other day this year was higher than last year in terms of TSA data so far this year. I traveled over the last week and I got emails on both sides asking if I want vouchers to skip because these flights were overbought. But the problem is, Landon, and you explain to us if you think that this is the case. This stock sold off on the Delta news. That's one issue. But capacity, right? It's really good for the company, but it's not always great for the stock when that happens. When, for some reason, when airlines add capacity, it looks like it cuts into margins and they hammer the stock. on that news. And as you know, all these airlines have raised capacity in the last year, Landon, and that's why I think some of these stocks are sitting on lows. Doesn't mean there's not opportunity, but it's tricky here, isn't it?
It's definitely tricky, and you know, it's tough to understand and kind of put into words how capacity affects everything. One thing though that we've seen with a lot of these airlines is they're moving towards the more premium seats.
I never
right?
looked at it like that.
More leg room, more first class, less capacity, basically higher prices per seat, which you would think investors would love. And I think that, you know, as a consumer, I definitely love that. Well, I'm a tall guy, I need that extra leg room, but yeah, absolutely. I think that capacity is key, and I do see a trend in a lot of the airlines, United included, into moving towards slightly fewer seats with higher prices, because that's what consumers have asked for through their wallets, through their actions with the companies. When you book, people are more likely to book those seats, so they want more of them. So that I'm bullish on for the airline industry overall. TSA data, again, love it. And I think we're all-time highs on TSA data, if I'm not mistaken. I know we're finally above the 2019 numbers, which, you know, took a long time to recover from the COVID lockdowns. But now we're finally beating those, and I think we're hitting all-time highs on TSA data. So bullish on the industry as a whole. Was more bullish on United 2 weeks ago, just some of the safety concerns in the direction of the company, just general things that, you know, consumers take notice of. You know, obviously a light coming on and an open door light causing an aircraft to have to land, not a huge deal, but if it happens a week after a plane was flying around with basically a hole in the side, that makes people question, well, do I want to fly on a 737 MAX 9, right? I mean, it just, you have to make that kind of decision as a consumer. It's in the news, so it's in your head. You would think, you know, as much as I talk about valuation, you would think that the drop from Delta would really boost Folio's outlook just as far as value play wise, but the data of United dropped at the same time, so it didn't open up an opportunity like I hoped it would. And also, it makes me just a little bit hesitant on the airline industry overall, because we've always had Delta as the clear leader for the last few quarters, and so to see them disappoint makes me a little bit hesitant on the rest of them.
And when you look at this, you know, competition here in the States, the stocks trade choppy. Are you guys seeing any data that's reflective of that international travel still robust because it exploded in 2023? And are, you know, business travelers coming back, because that's where they make their bread and butter on those higher fares, those short-term fares and stuff? Are you seeing any data that's reflective that that's starting to pick up or at least staying robust?
Sure. I would say that as far as the international travel, vacationing, things like that, we're seeing pretty good strength there. We're seeing that consumers, even though they're prioritizing where they spend their money, they're cutting back a little bit. Things are a little bit tighter. That is one of the first places that they keep, or the last places that they cut. Experiences has won over versus, you know, premium consumer goods. So I think that as far as the vacationing or the personal travel, including international, that's very strong. We're starting also, as far as the business goes, as far as that trend goes, we are starting to see a small uptick.
Earnings tomorrow for Johnson & Johnson are before the market opens. And we're too high. So we got to wait. We're at resistance. I'm still in my put here. Should have got out of it when I was up 50 bucks. But I'm still holding on here. This thing's all messed up today. Da 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 da. Hey hey. Bye. Do 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 do.
See the range here that you have. You want the stock to move away from the current share price of around 39 bucks, but you've got a range about 35 on the downside, about 43 on the upside, where you can potentially remain profitable. And you can see there from the risk profile, the apex of profitability is at or near either one of those strikes on this one. You've got some assignment risk on the short options going into expiration over the next 4 days, also on the 41 short 41 call and short 36.5 strike put. But Kev, when you look at this, you know, it's inexpensive. You don't expect to make a triple or a quadruple on this type of trade, but that divergence in implied volatilities and positive time decay should expand that if you go at or near either one of those strikes, right?
Remember, you look at these trades that the net debit aren't very big in either one, and maybe a smaller, more new account can make a trade in something like this. A medium or larger account can do more volumes in this. But, you know, you have to decide, do you pick one direction? Do you pick bullish, bearish, or both? This gives you choices in either direction, Tom. And like I said, you're playing the divergence between that. Just remember, stocks already sold off in the Delta news. So that's one thing you have to factor in here. But, you know, they always move, Tom, on earnings, and United Airlines will be right in the thick of that.
Yep, definitely. We'll have to watch for some of the commentary too on the disruptions in the Middle East, and also those 737 MAX 9 planes also, because United's got a few of them. All right, good look at that double calendar position there that Kevin brought us in United Airlines into earnings. But coming up after the break, we're going to take a look at General Electric. The stock of the industrial company has rallied to a new 6-year high into earnings tomorrow ahead of the open. Fast Market's coming right back after this short break.
Okay, so I'm still in DWAC puts. I'm waiting for the next dip here. If it does it, I'm not down on it. I'm at 50 bucks. A little break out of this channel. That's number one. It's got 11. Then we got PLTR. Up 6.29%. See, this is up 50% almost, DWAC. That's why I think it's going to go down. PLTR. Piton is up today. Did it have news? No. Sophie's up 6%. That's going to make a few traders happy today. Mira, Citibank, FSLR, First Solar, /CL, crude oil. Big old pop on it. About time. They've been talking about it for 2 weeks. It's at the price, $75 is always been my little target area. If it's either broke out from that or pulled back from it. You'll get me some salsa and I'll be right back. I'm back to even on DWAC. Lumina, Airbnb, nailed that one. I waited forever for that 132.33. You'll see what I'm talking about. Double bottom, snake, breakout, pull back, double bottom, boom. Disney called the dip today and the breakout. Did a video on Disney. Jimmy's going to be watching. He just now noticed a flag and popping off of a certain moving average, and it's all about chart patterns, moving averages, and being in the now. So we're already in the now on Disney. It's had a rough struggle since wokeism took place, and everything's kind of changing. When there's a change in society, there should be a change in how stocks are affected. So it's a 50-50 chance on Disney right now, but they are definitely pumping it up to the upside. Are we in a bull or bear market? We're definitely bullish. We're at extreme levels. So when I get to extreme levels, I'd be very careful and delicate. And I said, oh shit, I thought I could make it. It'd be woke to our children chart. I noticed here on the chart that we got a bull flag. They're pumping up this stock real big. I mean, they've been real hard at it. And we did pull back to a 1-2-3B, and we are in a bull flag. This is a bull flag as you go to the upside and you have a Darvas box at a vertical downward level. So we could, if we break out of this, we could go a little bit higher, right around 96, maybe a $3 trade. We got a gap right in here, or we could pull back and hit that 200 SMA on the daily time frame. That's what I was talking about. The moving average is the 200. We found it difficult to break up here once before. It held support at the first of the year of last year, or back during about this same time period, same day. So that 200 SMA could be a solid support. If you do come back and we touch that, I'd probably go in small and add on if we decided to go ahead and break this resistance level on this bull flag. So I just wanted to bring it to your attention. It's something to watch. I'm not a big time lover of Disney at all, although I've been to Anaheim, California, to Disneyland, and I had a great time, but things have changed. Wokeism has took over, and it's just going to be hard. It's going to be run mostly on momentum. The fat cats love this stock. They want to pump it up. They're heavily invested in this trade, and it eventually move. It will. So just be aware, buyer be aware. It will definitely move up, but if you could get it at the 200, I think that would be your best bet to get in at the bottom of Disney. I can't see it going much lower than that now, unless, I don't know. It's definitely at a pivot point area, I can say that. And that pivot point runs right into the pivot point of this here channel. Let's go ahead and draw that in here. I want to show you what a pivot point is. Pivot point is a place on the trade where it finds support and resistance. So we found support right here. We pumped up, we broke out, and then we came back down, and then we found it again. So we got what you call a pivot point channel right in here. And if we can break that pivot point, which is right around 94, I think we can definitely move higher to the upside. But you can see it couldn't break resistance here, it couldn't break it here, and then it did pop. This is when they were pumping it up big. You had that big gap up. That's a sign of bullishness. And then we hit that resistance, and it created that bull flag. The wrong chart. So if you kind of magnify this up a little bit, right now we touched that 50 SMA. So it could, and we have a symmetrical flag right here, bull symmetrical flag right here. So it's definitely starting to look good. It definitely is. We got a tweezer top up here as resistance level. See how it met right there to there. So yeah, I think this could be maybe even the 50 would be a good spot to start a position. And then if it dipped down to the 200, I'd definitely load the boat. That's it. That's it for Disney. Yeah, we broke out of that channel today. It's not being very cooperative now. Created a new high. Okay. I'm gonna still hold on to it. Not convinced yet.
Suggest they may end up saying something about a special dividend, or with the spinoff, a special dividend, or potentially an increase in dividend, considering they also have about $18 billion in cash through all their combined units right now as well.
Yeah, they got an investor day in March. We'll get some clarity on that spinoff of the power unit. All right, thanks to George Tillis for joining us breaking down GE. Kev, let's get into the example trade. Stock at over 6-year highs, so I'm looking at something. Bar's high on this one, so I looked at a strategy. If you think it's going to maybe consolidate, maybe pull back into earnings, this type of strategy takes advantage of that. Going out to the January 26th weekly cycle, so just 4 days to expiration, really short term. Selling an out-of-the-money call, the 133 strike call, and then buying the 138 strike call. Short $5 wide call vertical, neutral to bearish, collecting roughly about $1.50 credit. I think it's closer to 170 right now. But if you collect that $1.50 credit, that's what you can make. The risk is $350. Break even at 134.50, Kevin. That would be a new 6-year high if it goes above there. Your thoughts on the short, neutral to bearish call vertical?
Yeah, what you're doing here, Tom, is taking the price of the stock, right? Looking at the expected move, but also acknowledging, we know what the expected move is. It's about $6. That takes you up to about, almost 138. Almost 138.50. Now, your trade is bearish, right? You're saying the stock is running far enough, it's either going to be flat or on the downside. So if that's your opinion, and everyone can have a different opinion on GE, what you've done here is made this a little bigger credit by lowering those strikes closer to at the money, right? This is, the probability of out of the money is not as high, But the trade-off, and there's trade-offs in every options trade, is you collect a more credit. Now the break even, like you mentioned, after this run had, it'd be a new high on GE. So, you know, that's the trade-off that you make. You've taken the basic short call vertical, moved it down to make it a little more aggressive, Tom.
Yep, I got some assignment risk on that short option also, the 133 strike. But fading it a little bit, as we mentioned, maybe stocks go down after running up so high. All right, that's going to do it for Kevin and I today here on Fast Market. Stick around, though, right here on the Schwab Network. Next Gen Investing's coming up.
More cowbell.
Knock, knock. Number
Who's
one
there?
broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So,
Even FedEx had its move today. Yeah. Broke out of the snake. 2 days in a row. Back to resistance. What took 5 days to pull back only took 2 days to gain back. To the 5 day rule. 1 2 bis 3 bis 4 bis 5. Boom. 1 2 3 4 5. Boom. I do not want to get whacked by D-whack. Oh, you're funny, James. So the loser is ADM, and I just added that today. China. PayPal's had that great run. And I thought about that today. And did the fibbies. And we broke out from the fibby. And now we're pulling back to the fibby. Tesla had the breakout, pulled back to support, didn't hold support, which I wanted to keep it at 210. TSM had the wonderful run. I said we'd pull back on it. I've got a 212 or 112.27. Did a fibby on this one, I think. Yep. So back here, that's 61. It's 38. BlackRock. Traded Microsoft today. Boeing. Almost hit my channel of resistance. Pfizer. Head and shoulders pattern right here on Pfizer. Amazon undervalued, needs to pull back some. JP Morgan. Meta and Lilly are all on my red on my watch list. I'm back down again on this son of a gun. DWAC. Oh no. They're wanting to run this thing up. Might have to get out of this one here. See if we get back down to support and I can get out even, maybe. No. This is a strange option. Unless there's a delay in my platform. Yeah. Oh, my baby cakes is here. Do. Damn. Thing's strong. Now, so now I got to do some finagling. $285 average. Where's my 310 at? I didn't fall on my butt today on the ice.
Start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Yep, cut them losses fast. How's my Elmira doing?
almost to that point though, and then we found some footing down here. Big rally then on heavy volume. You can see, looking down here, these are multiple volume spikes during this period. When I say a volume spike, I mean volume that is 50% beyond the 50-day simple moving average of volume. So heavy volume during this.
Well, how'd you get that on there?
Here, we did break through the steeper upward sloping trend line here in blue, but we didn't get a big breakdown or anything. We merely retreated to our old pre-gap lows there. We didn't even touch our 21-day EMA. We have a more modestly sloped trend line here now, kind of a rising wedge type of shape here. Two trend lines sloping upward, converging toward each other, but we notched new 52-week highs today. Trading above all three of our moving averages. All of them are trending upward. They're diverging apart from each other still. Looks like the trend is still pointed toward the upside.
Yeah, it sure does. Looks to me like the bulls are in charge here in a big way. What I look at is high conviction trade to the upside. You see that into the summer highs from last year, and then we came off a bit, got a bit more rotational, kind of sideways around this 110, 115 area. But Rick pointed to the volume as we broke out above that 120 level. High conviction, exactly what the bulls wanted to see. Higher highs, higher lows with participation, volume, energy. And then all of a sudden we go back into another consolidation phase. So just kind of establishing value at that higher level. I'm curious what you're seeing on the momentum chart and how RSI participated in that big move up we saw into the beginning of December last year.
You might have been tempted to look at this portion of the RSI, our measure of momentum, and say, oh, looks like some bearish divergence here. But if you look carefully up here, price was not making new closing highs. Price was actually making lower highs. So momentum was behaving more like how we would expect here. Slowing down a little bit, consolidating, like you said, unable to take out those previous highs. Then we did see a little bit of bearish divergence start to form here, which was more complicated because it was also at the same time the RSI was moving into the overbought area, which is a sign of strength. So on one hand, we had momentum slowing down, but we also had
but still in them frickin' calls
overdrive at the same time. So the pace of the gains was slowing down, but it was still strong. So, long story short, we're moving into the overbought area once again today. Look for this little trend line to be invalidated here. That would be a sign of further potential bullishness.
I like that. A very interesting point to take note of here. Price continuing higher, yet RSI trending lower. That does create a bit of a divergence here. But again, with RSI in the overbought territory level and still holding up there, that does sort of lean and kind of give the benefit of the doubt to the bulls here. Let's take another step back here. Let's look at a couple key levels of support and resistance, Rick.
Well, if you're familiar with these segments, one of the things that I like to do when a stock or another product is making new all-time highs or 52-week highs, we don't have a lot of previous price action to go off of. I like to include standard deviation channels. Our blue line, our linear regression line, our line of best fit based on closing prices. Then we take standard deviations, 1, 2, and then to the downside as well here to give us these
Now, Mike's talked about that before, the standard deviation channel. To find new resistance levels, there's like 2 layers of them. I had a chart set up one time with a standard deviation. I don't know if I still have it or not. There it is. This is standard deviation set up on 2 different axes. Standard deviation set at 2 and one set at 1. You go in there and you set it up. Deviation of 1. Then the other one you set it up. Deviation of 2. I'm probably be in this trade all day today.
here. Looks like we're holding on to that level a bit sideways, but you can see on the left side of the screen the highs from around this time last year up around 42. So still some heavy lifting here for the bulls.
Yeah, true to its name, kind of a V shape here in terms of the price action here. A long slide downward, you can see this blue dashed line going across the highs here, eventually forming some resistance here. After we had this gap up on earnings, we bounced around it a little bit, struggled to overtake it, then made a big push upward here. And you can see that the move up, starting with this area that we broke above the trend line, took us above all three of our moving averages that we follow: yellow 21-day, orange 63-day, purple 252-day exponential moving averages. We can see here the yellow 21-day and the purple 252-day, to a lesser extent, were supportive during this period of consolidation here. We once again had a brief dip below that level, as well as below our trend line, so kind of a scary moment for the bulls there. But the ship righted itself. We pushed above this green dashed line here that represents some old highs, just below the 39 level here. So once again, moving averages, prices above all three of them, they're all trending upward here, and we're seeing them diverging farther apart from each other. So it suggests the trend is still more.
I can't believe I'm still looking good on this thing.
Jumps out to me here. It's pretty well defined.
I mean, I can't believe that we've gone up so high, and I bought that at 260 and 310, and I'm average 285. I'm at 290. Every time I think I want to get out of this thing, or hold on to it, it pops to a new high, and I'm going, geez. And the puts that I was in are just incredibly high right now.
If you line up these 2 points here, we had a peak in the RSI,
the calls,
the peak in price. Then things kind of fell off a little bit here. We had this phase that I mentioned earlier of consolidation, of sideways price action here. Momentum reflected that, kind of just languishing, bouncing around back and forth, but remaining crucially above that 50 midline here. Then we had another push upward. It was looking pretty promising here. We broke above that 40.11 mark, which was our old best close from all the way back there, our red dashed line.
They need higher strikes.
It fell apart once again. We once again had that break below our trend line. You can see we briefly dipped below that 50 midline, but once again, we're able to fight our way back up here. And momentum now, what we'd really want to see if we were bullish in this name would be a break above those previous highs in the RSI, that previous peak that we formed, a continued push upward, and a break above this resistance here. You'd want some combination of those things to start happening to break us out of this ceiling that we've established here, just above 40.
Yeah, that's exactly what I was talking about. You need a battle, a break above, and ultimately you can see that significance associated with the 42 level. So that's going to be the key area for them to get above here at this point. Let's take one more step back here, Rick. Talk to us about a couple key areas to keep an eye on should we get above that 42 level, ultimately levels that you're watching.
Now, there's a lot going on in this chart because I included standard deviation channels once again here with our moving averages and our support and resistance line. This gives us some confluences to be on the lookout for. Look how close the 40.11 level is to our +2 standard deviation channel. So 39 to 40, like the high 39s to 40, 39.75 or so, that would be one resistance area to watch. We'd want to see a convincing break above that mark. And then really, we've still got to take out 42. That's our highs from further back in the year. Our +3 standard deviation channel comes in just above 42. So between like 42 to 42.40 or so, another resistance area to watch. Support, 21-day EMA with those old highs near 38.83 or so. So around, the 39 level. Then a big confluence right here. We've got our +1 channel, our 63-day EMA, our 252-day EMA, and our volume profile point of control, all between
252, 63. Darn, I've never heard of these numbers.
So potentially big support there. We're a bit farther away from that point here, but I just try to call out these points when I see them.
I got the 65.
It's a pretty well-defined point when you're looking at this chart again. You got
But
that
I don't have enough
252
252.
to the downside. We identified 42, the significance thereof. Rick points out 42 to 42.50, but you can also see how we're currently trading right around that 39.50 level. So a couple areas to watch here in reaction to the news. Thanks to Rick DeCat, the chart master here, helping us take a look at our upvotes this afternoon. Let's bring Alex back in. Alex, you heard the levels Rick's dialed in on. What do we have? 39.40 currently trading around. He's got 42, 42.50 the upside, and ultimately looks like 37 to the downside.
Yeah, no doubt. And putting that again into context, given this is an earnings-related trade, super short-term, expiring this Friday, I looked at the market maker move, which assesses does some math on the option prices, spits out a 1 standard deviation range to kind of guide what the expectations based off what markets are pricing. That was about $1.50, so $39.50 thereabouts a stock price, $1.50 market maker move. You're targeting somewhere around 38 to 41 is what the market sees as the potential for this one in a 1 standard deviation basis. Bring the debit spread with that in mind. If you're looking at something that will benefit from a move, you want to make sure that that strategy encapsulates what's possible. And so certainly this can outperform and do a lot more than just what that market maker move does. It's not a limit, but it may not be the most likely of outcomes. And so we looked at a strategy that'll benefit within that market maker move if there is a move to the upside. And so 38.50, 40 and a half, call vertical for $1. So $2 wide spread, if you spend $1, that equals the risk and reward to 1-to-1. So risk 100, make 100, 39.50 to break even. Those who have watched this program know our second loose guideline is to try to get that break even near the current share price. We accomplished that with this as well. Current share price just under that 39.5. So we've got the catalyst of earnings, Ben. 1-to-1 risk reward, looking for a little bit of upside here. Above 40.5, that's max profit. So it doesn't need to be a huge move, but it does have to have a move to the upside.
Yeah, well, these are stocks that in theory will move in reaction to the news. So definitely one to keep an eye on in reaction to earnings, and a couple key levels, as well as a good breakdown in terms of the trade. One to watch here as well.
Yeah, no doubt about it. Coming up next, we got FOMO. Ben's sticking around. He's agreed to join me for the hour. We're going to look at Western Digital as analysts are piling in this one. We'll find out why right after this.
Western Digital.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100. Didn't want to do that. As proud of the price he was charging. My dad.
Stop it. I'm green finally. I'm green. I'm green. Well, I was. Let's get a big knife. Meta's pulled back to support.
it got some love over the weekend here and into the morning from Morgan Stanley, which just absolutely just eviscerated their former price target, went from 52 to 73. They keep the overweight. But why is also making the news headlines is this next piece. Top pick
bumping.
Which one?
NVIDIA.
And that's why. I mean, if that wasn't part of this story, I'm not sure we're talking about it.
Well, I mean, when you look at what the analysts had to say, maybe you can understand why. We can get in that in just a second. But the stock's been on fire here, much like NVIDIA. Shares are on the move higher, have been and continue to be. Taking a look at the rally we've seen off the December lows, stock was trading down around $46, recently up to just shy of 60. So a solid move up here. And Alex mentioned the comments from Morgan Stanley raising the firm's price target on shares of WDC to 73 from 52. They kept it with an overweight rating, but as Alex mentioned, this is now the firm's top pick in semis, replacing shares of NVIDIA getting bumped from that king of the hill position here. Let's take a step back because it's not just the move from December lows here, again around 46, all the way up to 59 or just shy of, but take a look here. This move is, well, going all the way back to the October lows from last year. We're talking around 35. So a big move up to say the least here, and really holding
What was that
on to
other
these
one I was
levels.
looking
No
at?
rejection as of this point here. Now, I did see Morgan Stanley
Oh,
commenting on
AMD,
how the firm, they
ADM.
expect more than 20% quarter-over-quarter increase coming into the first quarter in their NAND memory flash chip, and more in some areas. They're raising estimates in their, they see business getting better at a rapid rate. Now, I wanted to show you what's going on here, bigger picture here, taking a quick look at a daily candle chart, which goes all the way back to, we're talking 2019, the spring of. You can see this move really just has shares back in the middle of the range that they've established over the last, well, we'll call it 4 years now. Upper extreme, we're talking 77. Lower extreme looks like it's around, well, that pandemic low down around 27, we'll call it. Lastly, I wanted to show you where we are relative to the 50 to 200-day moving average, because the move up on this chart, you can see it really speaks to. Now, Morgan Stanley views the valuation disparity between WDC and its peers as extremely compelling, particularly in the light of the second half separation of the memory business, which the firm thinks should unlock some of the parts value. So again, a vote of confidence in many ways, right, from Morgan Stanley, raising shares, the price target to 73 from 52 on shares of WDC.
Yeah, this analyst Joe Moore at Morgan Stanley with this adjustment. This is the only update he made for the 22nd, which is today, in his coverage universe. So I was just thinking, you know, you want to make a name for yourself, you want to make some news headlines, just bump NVIDIA out of anything right now, and you're gonna you know, rattle some cages. Doing that here today, but to your point, it's not like Western Digital has been a slouch. It's really done very well over the last 52 weeks and some change.
Oh, there we
going
go.
Back to late 2022. But
You take your head off of it.
Brutal.
I was at 310.
for
I'd have
Western
took that
Digital.
any
So
day.
it's in kind of comeback mode. Names like NVIDIA have done a lot more than that, making new all-time high after new all-time high. But forgotten in this is we keep thinking, you know, the AMDs of the world and some of these other names in this space have been so strong. Ben, AMD just made a new all-time high. It's really been NVIDIA alone that has been just out of this stratosphere. These other names are largely undoing the damage of the inventory cycle that we've seen post the pandemic, post-reopening, post-return to work.
Come on,
and
baby.
Of course,
Drop.
They've gotten a great inflation type stuff that we saw in 2020.
Is anybody in DWAC? I don't want to put bad news on everything.
Supply shock pressures of 2022. It's finally starting to normalize in this space. Throw some AI cherry on top, and you get names like WDC, AMD, and NVIDIA all doing quite nicely.
Yeah, well, I think that's what the analysts talked about, right, was that valuation disparity. Taking a look at the chart here, Alex, you bring up a couple good points. This is a stock that has been beat down a couple times. It wasn't just that move that we saw in 2022. This is what Alex was referring to. We're talking about from, well, we'll call it 60 all the way back down to the lows that we were just recently talking about, around 30. But look, I was noticing here back in 2018, the stock sold off from 105 all the way down to the lows we saw around 30. Again, there's been support.
If anybody's in DWAC puts with Bobo, we just breached a support level. I think here. Yeah. We're definitely right on support right now. We're at 335. I want to see if we can get a little bit more here. This is definitely a support level. If this can get to the VWAP, I'd be doing backward somersaults. And it can happen. People just push the button and say, I'm going to get out. A bunch of, like, one room. Everybody's watching this one. It's Trump supporter right now. It's if you are, take profit. Watch this tape. Looks like they want 41.30.
Towards that 63, in which the investor would be faced with some choices on what they may want to do. But $250 in risk here, Ben, on a bullish strategy that is sometimes in some circles called the poor man's covered call, because you're buying that longer dated option, seeking to have some sort of stock-like performance. We know there's differences: no voting rights, no dividends, expiration date. The list is not exhausted. It's a longer list than that, but that's some of the main ones. But then you're selling that shorter dated call against it, kind of mimicking the risk profile theoretically on the graph there of what a covered call would look like.
Yeah, well, the trend's your friend, right? I always say continuation more likely to change, you know that. And in this instance, again, really what you're doing, it looks like, is participating with the trend that you've seen building on the more short term, the hourly candle charts off the October lows, with the hopes and the upside potential here to participate in that
These
longer
guys are
term
good.
trend, as far as, again, kind of getting back to that weekly chart here. So looking for those longer term gains.
If you ask CNBC to read a chart, half of them couldn't do it. What is this in here? This is a good one here. WDC. Weekly. I don't see what he's seeing.
However, this is where your skepticism might be correct, Alex, because the times remained unchanged for 48 hours for pre-orders after they were open. And an analyst says
I'll be right back.
That raises some concern that demand may quickly taper off after all the heavy users and the mega fans stop making purchases. By comparison, the same analyst says popular iPhone models also immediately sell out upon pre-order, right? But shipping times typically increase to several weeks within hours. However, unlike the Vision Pro, iPhone models continue to see those types of steady increases in shipping times 24 to 48 hours after the pre-orders open. And that did not happen with the Pro headsets, the Apple Vision Pro headsets. So he believes that that might be telling us a story about demand early on that may wane very soon, really.
Hey, this is supposed to be a niche product. I don't think they're expecting to sell iPhone-like numbers with this thing. So the fact that they sold out in any capacity at all, I think is somewhat of a good sign. This is an early adopter story, but you need those early adopters for it to ever catch on. So we'll see what happens. I'm excited for hopefully someone in the office to get one that maybe we can try it out, but I don't think this...
But you know what? One quick thing though, Alex. The analyst who was covering all this expected the company to post about 400,000 deliveries for the full year. So that gives us an idea of just how much they're expecting of the Vision Pro headset in this year alone.
Yeah, 1% of the population in the U.S. or so. So we're talking, or actually less than that, like 0.1%. So still very, very small, but hey, start somewhere. Renita Young, appreciate the update, senior markets correspondent for the Schwab Network. Coming up next, Tesla, another name on the minds of investors. Often it is for Mr. Kevin Green, as he's going to join us. We're going to discuss that coming up next. We'll be right back.
Okay, let's go over the watch list. DWAC, hit my target plus, a lot more. I'm still in my put. History's always told me that this thing does not hold. But it's been a while since we've had a good run on this. Go back 3 years. That was back in these times. Should have got out one there again. Twice now I could have got out of this thing. Then we got the WDC that everybody's talking about. Western Digital Corporation. Go back 3 years on this one. And go back 20 years. Had a tweezer bottom. 22 and 23 were definitely above resistance level. So this thing could probably get to 63 bucks. WDC. PLTR, bullish on, called this one out. Been hovering for a couple of years here at resistance level. We break 1778. I think we could hit the 21, go to 20. And Sophie, Piton, Oil, Citibank, Solar. Disney broke out today. Jimmy said it would in his little video maybe this week. 94.31, resistance to break. Got a target of 96 for Disney. Yep, 96. This one looked very good today. We had that bull flag. Got Humana, took the beating. We're up $6, 6%, $6. It's creating an inside candle. Needs to break 411.56 for Humana. CVS pulled back pretty hard. They've been talking about healthcare today. Definitely at a pivot point at 72.88. FedEx also popping today out of a snake. Another good run on it. Okay, here we go, 3:15. This time I'm going to get out. I'm tired of holding this piece of crap. Sorry about that, Trump. Breakdown, please. We do have a bear sign. We have a lower highs. I just want to see it get down here to the VWAP, and that'd be like $100 a contract. There's Bob. Oceanics playing Pac-Man. I gotta get to know these guys here.
We've seen in China and now starting to spill over into the European markets. There's a lot of competition out there, Ben, outside of here in the United States, where Tesla has a pretty good strong hold on the EV markets. And I think when you start cutting those prices, obviously you're going to start cutting margins as well. And the street really did not like to see that. I mean, you pay a premium for this particular stock because it had the ability to turn out 18% or even 20% margins on its car sales. And that's just starting to compress more and more. But unfortunately, and fortunately, they still outpace many of their peers when it comes to those margins. Actually, pretty much all of their competitors, not only here domestically, but also if you're looking at, say, BYD, which has more sales on a volume standpoint, but they're not making as much money per car. They're making around 4 to 5% per car, where Tesla's doing around 15 to 18%. So from a profitability standpoint, it's still great, but I think the investment community is just starting to get a little bit, starting to normalize those margins a little bit better as we continue to see these price wars carry out.
Thank you, Kevin Green. Yeah, I'm looking at that 210-week moving average on.
Oh, of course, me and Wall Street have a different opinion about margins. I think it's more important to get more cars out than it is. I mean, when he first started doing this, he said he didn't care about how much he made. He just wanted to make sure that everybody could get a car, affordable car. You know, not something that's 60, something for the middle class, something for even the lower sector. And to me, I still remember that. But these people, they're all about margins. They're fundamental traders. And I'm more of a charting person and quantity. I mean, the more I put out, the more money I make, is my opinion. It's a lot more harder work, too. especially when I had my picture frame shop. But I keep comparing that to a picture frame shop, and there's, now I charge more for cleaning than probably other companies do, because I don't want to work my ass off. If I was cheaper, because they always look for the cheapest, but they don't look for quality. And then they regret it because they bought the cheap and they didn't get the quality worker. So here we go. We're at 340 now. I can ring in some profit. Finally. I still think I can get it down more. So that's a sign of it might go lower because we got the lower high. And we broke when we're at support right now. So if we break down below that, it's a good drop to the VWAP. So I'm going to make a business decision here shortly. Hold on to it, he says. Oh, yeah.
Other e-commerce players like Amazon, for instance. Macy's is still a legacy department store. They have been growing their e-commerce business, but in the last year, sales have fallen off. Just to give you some perspective, going back, I went back to 2015. The sales for the company were around 28 billion. Last year, 25 billion. 9 years ago, they generated about $1.1 billion in net income in last year.
What?
It was less. It was about 680 million, but nonetheless, they're still making money. It just happens to be that they have to right-size their business to deal with some of the revenue contractions and earnings growth, and that can be done through, spinning off some real estate, closing unprofitable stores, cutting expenses.
They've been doing that for years.
So my point is I can see why the board of directors rejected this deal. It's just insufficient considering the value of the business.
George, solid breakdown in terms of the takeover, the details associated with it.
They used to have a building here, the Macy's down at the square. It was a real cool building, and they turned it, so they got out of years ago, and it sat there empty. And then somebody came in and created apartments out of it. and put a restaurant in it, put a bar in it, and it's right downtown on the square. That was a little kid back then when they had that building going.
Business with a balance sheet that has about $3 billion in debt, which isn't too bad considering, you know, about almost $5 billion in equity. They have some cash, but they have a lot, like I said, of real estate that they can do a lot with. I mean, they could spin off the real estate, they could lease it back. That would certainly unlock a lot of value. And I think that's maybe the direction the company is going. Now that's separate. That's more of a financial, construct versus an operational change. Operationally speaking, there's quite a bit they certainly could do to improve the margins. But like I said, even last year, even though sales have been down just comparably from, let's say, 8 or 9 years ago, they're still profitable. They just haven't demonstrated profit growth. So I think, better merchandising, wholesaling, perhaps cutting some lines, cutting some of the non-profitable stores, cutting some employees, unfortunately. There's a lot to be done, but there's also that real estate story behind this that, again, can be unlocked in terms of good value, but they haven't done so yet.
Yeah, George, I don't want to oversimplify, but it just seems like a space that e-commerce and the fact that brands can just reach out directly to consumers through things like social media has just disrupted this space too much. But thanks to George Tillis, as always, for the breakdown on the Macy's deal. Thanks to Ben Lichtenstein as well for stepping in. That's going to do it for us here on Next Gen Investing. Coming up next is the watch list right here on the Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through.
Commercial's a little too loud, honey. Now watch this thing drop like a rock.
cues. We're watching for those earnings coming up. In the meantime, you've seen markets hitting new highs, though pulling back off those numbers on this day. Still holding green arrows. S&P is up 14 points at 48.54. The NASDAQ 100 up 0.25% at 17,351. The Dow is up 1/3 of 1% at 37,977. And the Russell, after dropping last week, is a winner right now, up 1.4%. As you look at oil and gold, you're seeing a mixed bag because gold is selling off by about $6 as oil is gaining $2. U.S. dollar is at 103.07, virtually flat, and Bitcoin 40,260. That is off about 3%, but has been selling off since it hit 49,000 just over a week ago. In the meantime, some of the biggest stories we're watching. Kevin Hinks is with us, senior equities contributor here on Schwab Network. I mean, we've seen this rally, and we were talking about it being maybe a down month, and now after last week and run-ups and bumping up against highs, a complete, about face. What are you watching for now?
Yeah, good afternoon, Nicole. It was interesting. The market got pretty resilient last week with a 10-year yield that was drifting a bit higher, the dollar that was drifting a bit higher, but stocks rallied. Now, 10-year yields are broken. At one point today, they were down below 4.1%, now drifting back over, but stocks seem to be on a glide path here, Nicole, leading up to a January 31st Fed meeting. And right now, not a lot of data to get in the way. That's today, though. As we get later in the week, we're going to get GDP, we're going to get durable goods. We'll get first look at fourth quarter GDP, durable goods, and then we'll get personal income and outlay, some inflation data. So a lot to go on here as we finish up with airlines, finish up with financials, start to get into high cap tech, and then a little look at the consumer this week with Visa and American Express. So we're starting to creep into a little bigger names, different categories. High cap tech will be on the calendar this week. And as you know, Nicole, with Tesla, Netflix, big stories coming.
Yep, without a doubt. A lot of earnings to watch for this week. It's going to be a busy, exciting one. How about the semiconductor index? We've seen some of the names within the semi group doing incredibly well. Of course, Advanced Micro is a different story in itself. What are you watching here?
Yeah, despite a downgrade in Advanced Micro Devices, the Philly Semiconductor Index, the SOX, is still powering to new highs. And what's leading that? NVIDIA. Let's face it. There's a Magnificent Seven that we see and we watch on a daily basis. And then there's the Michael Jordan of that Magnificent Seven, Nicole, and that is NVIDIA. And it continues after
Michael Jordan, huh?
For about 2 quarters, seeing the PE ratio go from 144 to 60s in the mid-60s. It's now powering higher. You've got NVIDIA now almost near $600, Nicole. So really powerful, despite, like I said, the SOX having a good day despite NVIDIA going up, AMD going down. A little interesting price action there for sure.
Yeah, I mean, when you look at AMD, that is down about 3.5% right now. I do see that one with a down arrow. Kevin Hinks, thank you so much. Good to see you.
You might be hitting my support level on the video.
Maybe something you might want to watch. Mish Schneider's with us, Chief Strategist at MarketPage.com. Thank you for being here, Mish. Happy New Year. How are you feeling about 2024?
Well, it's interesting because I don't know if everyone expected to see the explosion in semiconductors and growth stocks to start the year like we've seen, particularly after the first week, which we saw everything go down. But here we are. And so what it's telling me is that there's still a separation between what's happening in growth and everywhere else. And everywhere else is really what I think is a more accurate measure, maybe, of what we can expect economically and from the Fed. And I think the simplest thing to say is just look at the retail space, which is not really keeping up right now with what's happening, say, in semiconductors.
And so with that, when you see what's going on, how will you gauge about where to put some money to work? What are some of the criteria you're using for this year?
Well, one thing is the January calendar range, which is always an exciting time because it kind of resets the stage for the first 6 months into the whole year. particularly this year, it's even more exciting, of course, because we're in an election year. And so essentially what's happening right now is we're looking for things that had their price range the first couple of weeks of the month, what's breaking out above those highs, what's stuck in the middle, and what's breaking down. And so the things that are already breaking out, those would be obviously mostly in the growth stocks and the semiconductors. And there's a couple of commodities too, which is really interesting. But the stuff that I'm really keeping my eye on in terms of next opportunity are kind of stuck in the middle. And that would be a lot of the consumer stocks that you and I talked about actually last time, which I'm calling the vanity trade. I'm interested in that. And I'm also really interested to see what happens here with inflation, because I still have not given up on the idea that it can come back and haunt the market and the Fed as we get further into this year for a whole host of reasons.
Yeah, I want to hear more. Let's break it down. You know, you already started doing that for us. Vanity trade, tell me about that. That's more in the consumer realm. And those are some names that you do like. Like what and why?
Well, what's so interesting is that last year, obviously, we saw this very strong consumer at the end of the year. The consumer confidence numbers came out last week. The consumers are in it, right? There's a lot of disposable income, no matter how many stressful stories you hear about credit card debt, et cetera. And so I started to think, well, what were they going to spend money on this year? And it kind of got into my mind with Ozempic and the diet drugs that people are going to change the focus from traveling and going out to eat more to self-improvement. People want to feel good about themselves. Last year was you only live once. This year is, okay, maybe it's time for me. So as a result, you have categories: skincare, fashion, diet drugs, cosmetics would be another. And that can trickle into other areas. It might trickle into dating, it might trickle into exercise and exercise equipment. So this is really my focus. Now, most of those stocks, not all of them, are kind of stuck in that range, I was saying. So it gives me a really good eye to look at things like Coty, AbbVie would be one because they make injectables. TJ Maxx, which has had a great run, but is sitting right under those highs that we're talking about. Urban is going crazy. IPAR, which is a perfumery, also doing well, but they're not quite at that explosive stage yet. So that's just a few of the areas and stocks that I'm really keen on.
Yeah, I think that's exciting. To your point, I mean, people focusing on themselves a little more than originally thought, I guess. Tell me about another group. I know you were watching cannabis too, but tech is always on my mind. Are you part of the AI craze at all?
Well, you know, luckily for us, we have quant models that are really trend strength indicator models, all done through algorithmic formulas that have caught most of this move. And actually this week taken a lot of profits, which tells me if I were looking at it from a discretionary standpoint, I may not necessarily want to jump in now. But I'm really watching Microsoft very carefully. And
Microsoft.
Because of this launch of Copilot. I think that could be one of those revolutionary apps that changes a lot.
This is the one I traded earlier today.
Who are working, but in every area. And I'm just learning about it now, but Microsoft has had a huge run with everything else. It's kind of stopped at around 400. I'd like to see what happens with the stock, but that might be where I would go. And that's an AI area that hasn't been talked about as much.
All right. And so tell me about commodities and cannabis.
Okay. Well, I guess you could say cannabis is kind of a commodity, right? Well, a couple of things. You know, obviously there's a lot of talk now with the election about declassifying cannabis, and I know that there is obviously a very popular thought about that in the country. So it's going to be interesting to see if that becomes a political hotbed. Right now it seems like it's being pushed more towards that. But I mentioned AbbVie before, so in terms of cannabis, I'm really interested in how much Big Pharma adopts it for its use with medical research and drugs, and what kind of lobbying pressure that might put. So we've been in MSOS. I mean, we take profits, but pretty active in that area. That hasn't quite hit the trend strength indicator like we've seen in some of those more growth stocks. But nonetheless, AbbVie, let's go back to that for a second, is doing very well, and they're actually using cannabis as part of their medical research. So I thought that was kind
I did not know that.
Commodities, since you asked about are really interesting to me right now because even though gold and silver have kind of flatlined, particularly gold, oil is starting to pick up a little bit, just got over $75 a barrel, which means geopolitics haven't exactly gone away. But soft commodities took a big rally in the last week. And if you just look at DBA, which is kind of a nice basket of lots of softs, grains, live cattle, those kinds of things, it gapped higher last week and is actually higher still. So that is, I think, the sticking point is in the super cycle of commodities where people think disinflation and it's all over, soft landing, mission accomplished, anything can happen to change that, in which case we have a whole new market as we go into the second and third quarters.
Back to the consumer, I mean, you had NVO for your diet drugs. That was another one that we may have left out. What about Peloton, Match, Bumble? Are those things you like? I mean, they've been beaten down.
I love that you asked me about those, Nicole, because I am a little bit of a contrarian, right? So, but I like to call it an evidence-based contrarian, right? So yeah, dating definitely fell out of favor. I mean, starting with COVID, but even since, people are not necessarily actively dating as they used to back in the day, and I think that's kind of sad. But nonetheless, on Match and Bumble, two dating apps I've been watching very carefully, and they have been beaten up. So it's another one of those areas. Like, let's look at Bumble, for example. It's been trading between like 13.5 and 14.5. The momentum actually is doing better than the price. So what would trigger that? To me, from a technical standpoint, again, it would be, all right, the winter's over, you know, obviously there's been a lot of illness around. Let's go out, I feel better, I've got my, you know, my slimmer body, and I've been, you know, working on myself, let's date. And so Bumble gets to 14.50, and we start to see more of something like that. And I think that could be an interesting play because it has such a huge short flow. So that's why I'm looking there. Peloton had some big news a couple of weeks ago. It flew and came right back down. So I'm just watching to see right now whether those things find a good base. I'm not saying run in right now, but I think when things are out of favor like that, and we get more stressed out, people can start turning into wanting to actually reconnect with others outside their homes and their computers.
Yeah, Misha, it's great to see you, and I think the consumer story was a lot of fun, and you had names like Allergan, part of AbbVie, you said Botox, Juvederm, Cool Sculpting. I mean, I have a lot of friends doing a lot of stuff, and it really is interesting where people are putting their money. Used to be save your money or buy some stocks, but everybody's going crazy. Mish Schneider, marketcage.com. Thank you so much. Wonderful to see you, Mish. Happy New Year. Coming up, so the market's hitting new all-time highs. Did you expect that? What about your portfolio? Are you positioned well? We have a lot of events going on globally, some things that you should be watching. Schwab Network. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
the New York Stock Exchange. We've got you covered, the biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Some more market movers for you. Archer Daniels Midland plunged today's trading. The company has put its chief financial officer on leave. The move comes as the company investigates its accounting practices. ADM saying the probe was launched after a voluntary document request by the SEC, and multiple analysts have downgraded the company today in response, and it was down around 20%. Sunoco will acquire NewStar Energy, $7.3 billion all-equity deal. Sunoco manufactures racing fuels and is fuel of NASCAR. NewStar Energy is a pipeline and terminal operator for petroleum and other products, and Sunoco shares have slumped. NewStars have left higher on this news. Gilead Sciences, one of the S&P big laggards of the day, announcing its phase 3 lung cancer trial did not meet its primary endpoint. So the drug, Trodelvy, has already been approved to treat breast cancer. This is a blow to the cancer treatment pipeline. Gilead is building. Shares are on track to be Gilead's worst trading day since December of 2014. Western Digital, a top performer on the S&P, named a top pick by Morgan Stanley, raising its price target to $73 from $52. In a note to investors, the firm said that Western Digital plans to split its hard disk drive and flash businesses this year and will unlock material value. Western Digital shares are up 50% in the past year. Taking a look at Bitcoin, which has been now is below 40,000. Just crossed back above 40,005, had been at 49,000 when we got the news about those ETFs being approved about a week and a half ago. Now let's take a look at the bigger picture. Joining me right here on set, Octavio Lorenzi is with us, CEO of Optimus. Thank you so much for being here. Good to see you.
Thank you.
Happy New Year.
Thank you.
So, how are you feeling about 2024 so far as we hit records? We have records on the S&P, the NASDAQ, the Dow. I'm not sure anybody expected those records right now at this time, especially when we had a high rate environment last week. But somehow on Friday, nobody, they just brushed it off.
They took all the stops out and the market just seems to be going up and up and up.
Yeah.
I mean, maybe we can call it irrational exuberance, I don't know. I think the market might well get disappointed because so much of this increase is predicated on the idea that the Fed is going to start cutting interest rates aggressively. It's going to start cutting them basically at their March meeting. Now, if you look back a month or two ago, that was considered to be a virtual certainty that we'd see some aggressive cuts happen. Then now it's looking a bit less likely. The probability that it's going to stay pat is increasing. And I really think there's a risk that we're going to see this sort of peter out and go further and further into the future. And the Fed is going to look like it's on the verge of cutting rates, but doesn't for some time to come. I don't know how long that will be, but I'm pretty sure in March they won't be able to because the macroeconomic numbers are simply not there for them to cut rates. The economy is doing well, unemployment is low, core inflation is higher than it'd like to be, the market's at record highs. We don't need more juicing or goosing of the market at this stage. So I think they'll stand pat.
Let me ask you this. I mean, for June, it's basically 100% likelihood of cutting the rates, right? At least 25 basis points. What if they don't? I mean, why do they need to, in June, cut rates?
I don't think they need to. I don't think there's a strong economic argument for it. I think the market is expecting it. And we'll see then the market have to go through some sort of correction as they reassess their prognosis about what the Fed is going to do. But I think it depends on what the Fed says and why and what kind of new data we see. So if they don't decrease interest rates in March and in June, I think we'll have to look very carefully and say why have they decided to not do that. But I think the exact timing of it is maybe not so important. Bear in mind the Fed, when it tends to embark on either a tightening or loosening, will do so for 12 to 18 months or 24 months typically, so for an extended period of time. They don't just do a one-off hike and then a reduction, go back and forth. They keep going in the same direction.
They're not supposed to.
They're not supposed to. They keep going in the same direction for a long time. Maybe too long, I don't know. So we'll have to wait and see what the reason and rationale is and what kind of numbers they're basing that on.
Right. I mean, inflation is supposed to be one of them, right? But inflation has been going in the right direction, I guess, for the most part. We'll get some more prints later this week, PCE, for example.
Yeah, the Fed loves a PCE because it's always a lower number than the consumer price index, so they love that number because it's always lower. So that bolsters their argument. If you look at the core inflation numbers, they've been stubbornly high. Last March reading was 3.9%, down a bit, but not very much. Still about twice what they'd like it to be. So they've got some work to do. And the economy is very strong, so there's no compelling reason to cut interest rates at this stage.
Yeah, and consumers are still facing that. I mean, I just was reading an article about that when you go to the grocery store, you're still paying about 20% more than you used to a few years ago. Even eggs, which had come down, went back up 8% since a couple of months ago because of bird flu. I mean, it wasn't just one reason, but that consumers are still facing some high costs. And how does that affect GDP, right?
Well, it definitely has a negative impact on that. In fact, I don't follow the price of eggs very closely, so I can't.
Neither do I, but I couldn't believe when I saw they were back up 8%.
No, but certainly it's certainly an indicator of something going wrong and something going in the wrong direction. I think there's also the risk that we now, with all this tension in the Middle East, start to see oil prices shoot up again, and that will throw all the inflation numbers off, because so much of the decrease in inflation we've seen, or the increasing rate of prices, has been on the back of lower energy prices. And if that goes the other direction as a result of the Red Sea being closed, or the Suez Canal, or other things, the Gulf of Hormuz, then I think all bets are off, and we might see inflation ignite again.
I'm glad you mentioned the Suez Canal and Hormuz and with the Red Sea. I mean, all this that's going on, you still have turmoil, Russia and Israel, and just so much going on. It's not a simple strategy for 2024. That being said, how about the uncertainty of the election? Any thoughts on how change in the White House, or a stay if the incumbent Joe Biden stays in his position? Any way to sort of ramp up or put a portfolio in place for one or the other outcome?
Well, listen, last time Trump was elected in 2016, we saw a big rally in stocks overall as the market sort of finally digested what a Trump presidency meant. And in particular, sort of bent lower taxation, less regulation, far more business-friendly than the alternative that had been on the table. And that, of course, bolstered markets, and markets eventually came around to saying, oh, that looks really good for us, and basically drove the stock market much, much higher. I think this time around, most people, I think, expect there's a good chance that Trump will be elected, and so we know what kind of policies that brings with it, and it will bring more business-friendly policies with it, no question about it. Less regulation, lower taxation, increased oil drilling, all those other things will come with it. So that
could be good for stocks.
It could be good for stocks, but I think it's sort of being baked into the price already. We're not going to be caught off guard by Trump presidency the way we were last time. Last time it was a big surprise, at least to most people it was a big surprise. No one really expected him to win. This time I think the smart money is on Trump to win at this stage.
So that could be baked in already. So if Biden were to win, maybe we'll see a sell-off.
I think it's more likely it's going to be in that direction. I think Biden being re-elected will be a big disappointment for the markets, and we'll see it go the opposite direction. That's, of course, presupposing that the election were to be held tomorrow. Who knows what happens over the course of the next 10 months? We've got some time to go before elections.
And they often say that really much of the market moves don't happen until we're very close to the election. It doesn't happen now in January, February, March. That being said, where do you see this rate environment? I mean, we still are above, 4% on the 10-year, 4.11 today. 2 years moving higher. I checked earlier this morning.
I think it's going to basically be flat for the time being. I think the market's going to sit and rate what the Fed does. I think we're going to be disappointed in terms of a rate decrease in March. I think they're going to do nothing, and it's going to remain flat. And so short-term rates will remain where they are, basically 5.4, 5.5%, which is not an unattractive place to park your money, because you're taking no risk and you're getting 5.
So that's one strategy. Money has to be in fixed income or in some parts of fixed income. Anything else? Any particular stocks or types of areas?
I think gold is looking very attractive, especially with this geopolitical unrest. If things escalate further, and it looks like they're going in that direction, gold could be very
wrong channel.
We're overweighting gold at the moment. Of course, it depends on your risk profile and what you want to do and what not. And if you really believe that the Fed is going to sort of start to cut interest rates, well, you should go really long into equities and bulk up on tech stocks. That is where a lot of the action is going to be, and AI stocks in particular. Whatever AI means, and I see some problems with investing in AI stocks in that the word is starting to be used so broadly that anything in technology is now AI.
Right.
And anytime you have a piece of software that's beyond a certain complexity, you say, okay, that's artificial intelligence. And so discerning what really is AI and what is just a piece of software is becoming important.
Yeah, Octavio Morenzi, thank you so much, CEO of Optimus. Great to see you. Appreciate your look there at 2024. Coming up next, we're watching Celsius expanding its footprint into international key takeaways. They're an opportunity here for Celsius. Coming right up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Tesla getting hit pretty hard right here. What's this? Find where I put my chart. What the heck is it?
and essential aminos into the product. So there's a whole plethora of different things you can do, to kind of differentiate your products. But this is very much a health and wellness play for sure.
Yeah, understood. And what's your rating on some of those others like Coke and Pepsi? If you have $75 on Celsius, do you see upside for Pepsi, Coke, and some of the others?
Yeah, I mean, we're outperforming the soda names. We're doing some work on it now. You're going to have Pepsi getting ready to report earnings on February 9th. So, we're recommending the soda companies. They have had a couple of years of above algorithm revenue growth and above algorithm earnings growth. And so, I think the big question around the soda companies becomes as pricing starts to moderate, you should in theory see an uptick to volumes, and that's what we're trying to gauge, as we look out ahead of 4Q. And
talk about momentum with DWAC.
All right, Gerald Pasquarelli, thank you so much. Good to see you. Appreciate it. Of Woodbush. Still ahead, we're looking at REITs, real estate investment trusts, the reasons why investors may want to look beyond the troubles that we've seen in the office space segments. Is there something more to it? And here's a look at winners and losers in the S&P 500.
Where is Randy?
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Yes, brilliantly. Yeah, I trade futures. Just a couple of them.
reach here, but I wanted to point to, first and foremost, the WTI. This is the move higher that we saw today off the highs, so a little bit of relief here, about 70 cents off that high up to 75.46 WTI. Looking at the Brent contract up to that $80 level as mentioned. So again, just want to point out here, crude on the move higher, not what the Fed wants to see, but still relatively contained here. This is where we saw the highs from last fall up around 95, so feeding into inflationary pressures easing. Crude oil has come off here, and you know, I think this chart also speaks to what we've seen, which is a very level-headed approach towards events in the Middle East, which have been broadening and, you know, potentially worsening, depending on how you look at it. I want to show you real quick a reflection of that. Look at crude oil, Nicole, above the 50-day moving average, something we haven't seen since going back to October, again, of last year, and that a big decline that we saw at the 95 level. So if this continues higher, it could become a bit of a headwind for stocks, which have managed to shrug off most of the negatives, focus on the positive. I'm wondering if that will continue to be the case if crude becomes one of those negatives ultimately.
All right, thank you so much, Ben Lichtenstein. Good to see you. Thanks. Now it's time to turn our attention over to real estate. Take a closer look at REITs to watch. Richard Anderson is with us, Managing Director, Equity Research at Wedbush Securities. Thank you so much for being with us. So is the picture different? You know, it's 2024. Some of the REITs were beaten down. People were out on REITs.
Man, my throat is killing me.
Always a safe haven. It paid good dividends. Real estate never went down. Where do we stand in the world of REITs?
I think it is changing. I think, you know, we've
Just
had
more
the
water.
last couple of years with rates going up, interest rates going up, and you know, the REITs have a tendency to trade down when rates are going up. What we need is a range-bound 10-year Treasury yield, and I think the REITs are off and running. They have the best cost of capital in the commercial real estate space, and I think part of the big story for us is consolidation, and we expect the REITs, which own about 10% of the commercial real estate industry, to start playing a more active role from a pure investment point of view and making a spread versus their cost of capital. And I think that really kickstarts things for the sector in 2024.
And look, you're probably getting that on the 10-year, right? You're probably understanding the range a little better versus the trajectory that we saw during the Fed's hikes. I mean, 11 hikes, it just sent markets reeling. It sent those regional banks into a world of confusion and chaos. And there is some concern about some of these commercial leases that need to be renewed, and they're at a higher rate, and there was concern there. But at the same time, you think there's big potential, right? Why is that?
I think, you know, there's a tendency to paint a broad brush around commercial real estate, and I think the REITs are just the cream of the crop of the space. And so where there is distress and where there might be some issues about refinancing, that's where the REITs can jump in and participate in that opportunity with a longer term view. And so remember, these are the best capitalized companies that the industry has to offer, and we expect investors to look past the present tense of some of these bank issues and other things that are going on around them, and look at the REITs as the crown jewel of the space, really, and that's our expectation.
All right, for someone who loves REITs,
I do.
Yeah, you do. And look, if you call it the crown jewel, I mean, you definitely are. This is your specialty. So, what are some calls for REIT land in 2024? I mean, are we looking at specific REITs, and how are you going about picking what you're picking? Is it because medical buildings, more people go to those? Is it senior care? You can't deny, despite the economy, you have to have senior care. Or is it, you know, what makes your picks these
My
days?
picks are made by those things that you're not mentioning, which is what's going to happen next, right? Because some of those things you mentioned are true, but we're trying to make calls about what's going to happen in the future. And so a name, for example, is UDR, ticker is UDR. It's a multifamily REIT with a national footprint, but including the Sunbelt area, which is about 25% of their portfolio. A lot of supply, a lot of concern about supply in that market. But we think that a company like UDR will be able to manage through that and be, you know, a winner at the other end of this. And so we're thinking a step ahead from what the present tense is thinking. So that's one example of a call.
And I felt like multifamilies were doing better than single family, but of late I started to hear that it went back, and single family was back up again and multifamily was down. But I think the Sunbelt area is hot regardless.
Well, the
no
Sunbelt
pun
area is,
intended, but
it's hot
yeah.
from a job perspective, but it's
Yeah.
also hot from a supply perspective. And if there's too much supply, that's not good if you're already long the space.
Yeah.
And so a lot of concern today about supplying the Sunbelt. We are thinking that in a very short period of time, we'll get past that, and then we'll see the quality of real estate
There it
shine
is.
through.
Finally, where'd I get that
earlier
thing?
mid part of 2024, and that's what UDR represents.
Looking for quality.
Yeah.
The conversation you and I were having during the break was also about what's happening here in New York versus, let's say, on the West Coast. In New York, you have a lot of financial houses, and they're demanding everybody back in person. And then on the West Coast, you have a lot more tech, where they seem to be a little looser on the work from home idea. I mean, I've been in person what feels like forever, in a good way, and I'm happy to be here. But maybe that helps the real estate market here on the East Coast. Is that right?
You would, the theory would be correct. I think it's still a case by case basis, right? We're still working our way through the office market. I think New York City is viewed as there's at least the one surviving market in the United States, and we've seen a lot of the New York-based office REITs do very well lately because of that view that New York is not going to go away.
Right.
Whereas California, a little bit more loosey-goosey about working from home, and as a firm based in LA, I see that firsthand. And so it is a case-by-case analysis, but in theory, you're right. We should have a better office story to tell on the East Coast versus the West Coast.
So then, that being said, I'm not trying to tee you up for an East Coast pick, but what are some of your other picks that you have for us today?
Yeah, so one is could be considered an office REIT or a healthcare REIT, and that would be Alexandria Real Estate Equities. The ticker is ARE. This is a company that's owns office buildings, but with lab space embedded in them, and their tenants are biotech and pharmaceutical tenants. They have been beaten down because the biotech bull market or bear market that's been happening over the past several years, and we think that Alexandria will draft off of the biotech recovery to the extent that that starts to materialize this year. So Alexandria is another one we like a lot.
Yeah, it's at $123 today.
It was at 90, but not too long ago. So
it's been on the upswing for sure. And what's the last one?
I think Ryman Property Group, ticker's RHP. This is a hotel REIT, but it specializes in group space. So you have the benefit of having cash flow visibility because 70% of their business is group-oriented business, and you can predict when that's going to materialize, unlike most of the hotel space where, on any given day you might have occupancy move 10 or 15%. That's not necessarily the case with Ryman. We know where it's coming. So Ryman is another favorite of ours.
And is all of this based on the economy improving? I mean, is that sort of your thesis?
It's the key to my call, right?
Yeah.
So I'm saying a soft landing at worst. Now we're seeing good numbers. The sentiment number was good. Retail sales was good. All this stuff is a building block to strong demand for commercial real estate.
Dang, I drink that water up.
What gets lost often is office is 3% of the REIT index. There's 17 other asset classes that are doing quite well, actually, and so that's the part that we're trying to communicate this year to investors.
Yeah, in case you missed it, Richard loves REITs, and we're glad you're here to bring them to everybody's attention, because to your point, there really could be some great potential lining up, especially for some of them that have been beaten down. I mean, we just saw one that was an example that went from 90 to 120 recently, a great move there.
Yep.
Richard Anderson of Wedbush Securities, thank you so much.
Thank you for
really
having me.
appreciate it. Still ahead, we'll bring in our panel to discuss some big names in oil, and we've seen a lot of collaboration, consolidation happening in that group. Names to watch like Halliburton, Baker Hughes, Schlumberger. We'll be right back.
Alrighty, well, we've got 11 minutes to power hour. Anybody on YouTube have a question? Of a stock they might be in or stuck in or need help with? Seems like the market doesn't care about the earnings too much, but that's what they're using as a catalyst to run it up. Tesla pulled back. I did a little video on Tesla here. Hit kind of my target idea and then just didn't held up. I keep using, I got to get rid of this over here. That thing's going to bother me. Some guys giving me a hard time about Tesla, how I called it. I said, let's break that 200 SMA on the weekly, and we could not do it. So I guess he wasn't paying attention to the video. That's the 200 SMA right there. Once we break that, we'll move up. But right now, that's a deterrent. We're still at my support level that I called a few weeks back when we were at around 260. 210 is what I said I was waiting for. 210, 207. And that's what we hit. So we just got to kind of build up support here or fall down more. There's, like I said, there's a lot of negative sentiment in the wintertime. Just a hard time for this to bounce right now, especially with all the other ones failing. Ford, General Motors. The only one that, even BYD's not even doing good, and that outpaced Tesla. So it might be a good trade someday here. BYDDF. We also broke below the 200 on it. General Motors still holding, I don't know, holding the 50. But that's never been a good trade. And then they downgraded Ford. They took the 150 off. Lightning. Couldn't sell too many of them. Downgraded it. None of them are really doing too hot right now, but Tesla's still my number one. But I'm not in a hurry to trade this yet. If this thing can fall back to 150 as far as that goes, hit this shoulder line of this head and shoulders. If this momentum keeps up, I don't want to short it, nor do I want to go long with it, not until we break the 200. If we break the 200, I'll take it back to 250, baby. But not right now. We got this week's earnings. I'll clean this out. Let's see if we got 3 black crows here. Nothing that I can see. TRIN. There's your 3 black crows. Big old rolling pin candle. Man, I can't hardly look at these penny stocks anymore. See what AMC did today. Yep, AMC had to break out and pulled back. I had a 491 resistance on AMC today. We hit 481. Not too, excited about that one. Dow Jones, we got Apple, Intel, Microsoft, Verizon, Disney, and Disney, yeah. Verizon's got earnings coming out. When? I thought they did. Boeing.
Right now, we wouldn't be surprised if we see more producers, either merging or acquiring, smaller player, most likely in, the shale regions of, the Appalachian or in the Permian. But, with respect to oilfield services and drillers, it's definitely not on the radar.
Catherine, final thought.
Golly.
The last word.
I again would just keep in mind that it does tend to be a cyclical industry. There's going to be periods of, low activity, but it will usually rebound over time. The offshore space is going to be really strong in terms of investment over the next several years. That will be a huge boost for SLB moving forward, and a little bit to Halliburton. And yeah, overall, I mean, as long as people are drilling, there's going to be demand for these firms' business and solutions. And, we overall have a pretty optimistic outlook for them over the next 5 or so years.
Good to see you both, Catherine and Jonathan. Catherine Alexa of Morningstar, Jonathan Hanshu of CFRA. Good to see you. Thanks. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me. Keep it right here. Oliver Reddick, Market on Close, next.
Think about Mister? I was looking at that the other day and called that out.
Here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get...
Smart money is betting big on Mister options. %33% of traders are bullish and 60% are bearish. Tennessee's over it right now. 3-year time frame. We went below the... I gotta use a different... This is the 21, I think. EMA. Let's use a different chart. All in all, I think we're overbought in a lot of these, but not this. Definitely broke below my low support. Three-year time frame, we're at the 21 right now, and that's the SMA. The 200's been a pivot point. This runs with Bitcoin. So whatever which way Bitcoin goes, this goes the same way. That's one thing I know about that. And right now it's selling to the news. Always clean. This Jim may help you. It's a fun one to trade when Bitcoin's running. That's for sure. I'd wait until Bitcoin starts to get some news and starts moving up a little bit more. We could pull back and hit this 200 and be a very strong buy at 400 bucks. I mean a very strong buy. Right around 400 somewhere in that area. Actually, it's a gap. 405 bucks right there. I wouldn't be too much in a hurry to trade it until we start seeing some Bitcoin start to move. Now, I know the fat cats are buying the dip. We just got a message in here in the room that BlackRock, let me get this over here. BlackRock and Fidelity hold more than 64,000 Bitcoins worth 2.56 billion, and they are buying 433 million of it almost every day on average. So they're definitely buying into the dip. And that'll help Mister out. Now your first support was right here. See what this hump is right here? Right around, that's where we are right now. So I'd keep a close eye on this one, to tell you the truth. You got the support channel right in here where that gap is. So that 559 area could be a possible real strong support level. It's almost to the penny. We had a double bottom. I'm going to keep this one on real close watch because I think we are at a solid support. In fact, I like that a lot. We came back and touched it once here before after we broke out. Looks like a double top break. Came out, pulled back, found support, and then ran up like a Dickens during that Bitcoin craze. So I like it. I wouldn't invest right yet in it, but I sure like it here. We'll see how this does next week, or this tomorrow. I'll keep a good eye on it. You can make a lot of money on this stock if it starts to move to the upside. Bitcoin dip doesn't faze Kathy Wood. Bitcoin bounces back above 41,000. And right now we're at 39. So I've heard 36,000 was a good spot. I kind of eyeing 32. $36,000 for Bitcoin, but I think that's a real solid support if it gets there. Or did we already get there? No, not yet. Drawing this here snake. It's definitely a sister play to how Bitcoin runs, but definitely we're at a good spot here. Buy on rumor and sell into the news. Write down 459.28 and see if we hold that support level. 459.28. It's a bull flag. So it's getting ready to poise to move to the upside. And that's it.
Next week. Let's bring in Kevin Hayes. He's host of Fast Market, of course, back with us. Kev, today you see a little bit of rotation in the market. And given that the Russell's been the leader, sometimes those days are really weak. It hasn't turned out to be that way. Everything's holding in, so it just kind of seems like we shifted some of the momentum into a different part of the market today.
Yeah, it's kind of an interesting day, Oliver. I mean, it seems like this is a market that, you know, for the last couple of weeks been so dominated by some of the tech, and tech is still in play today, but it's others. You mentioned industrials, and more importantly, the ground transportation. Industrials having a nice day. Pretty broad rally for industrials, even without the likes of Boeing,
trucks, rails,
which is struggling today. So you look across, no Boeing, no Uber, but you know, ground transportation. What am I talking about? It's you know, Norfolk Southern, it's Union Pacific, it's JB Hunt, all higher today, all on price hikes and new notes by firms. So they're all those three having a good day, seem to be dominating that. You know, the industrial is a big space in the S&P 500, and there's a section called ground transportation that really is showing strength today, and those three stocks are in that group. Oliver showing some real strength today. Then you've got the interesting story coming out of semis, right? With NVIDIA higher, Western Digital higher, but AMD on a downgrade lower today. So
AMD had a downgrade.
Most people,
definitely red.
We talk about it on the air a lot here. They see AMD as the real, serious, most powerful competitor to NVIDIA. So for those stocks going in two different directions, that's some interesting price action to start the day. But all things considered, what you said to start your presentation, Oliver, is that with a back-ended data and good earnings coming out throughout the week, but everything a little later in the week.
Yeah, I personally think we're still way overbought. I've been saying it for this run up.
On which way it goes. So right now we wait for some stronger data points to come in, either from earnings or from economic data, Oliver.
Yeah, it's interesting that some of the volatility in chips today has been divided. AMD, though, firming up, right? I mean, it was down like 6% earlier, so it's going to take more than a couple notes. I thought the note was interesting, though, because it did talk about that phrase a lot of folks go to when the market starts really ripping irrational exuberance. And, you know, we kind of had been wondering, all right, how much are all these different companies really going to get the same liftoff? Like today, all the love for Western Digital. I mean, kind of a more classic cyclical chip, not something that you think is really like breakthrough, groundbreaking technology typically, but you are seeing quite a bit of love across the board now. So I can kind of see where this analyst gets the exuberance part from.
Yeah, the Northland note on AMD actually pulled out the Alan Greenspan irrational exuberance. They did talk about, you know, the things that have been fueling chips up till now, the ChatGPT movement, the average selling price increasing, double ordering Chinese government and Chinese economy stockpiling chips may have pulled some of that forward that demand, and they think you're starting to hear that a lot. Why? Because valuations have gotten a little pricey here.
AMD did pull back to my first support
Hesitant downgrades, just taking some companies
today.
off the top perform list because of price action. You see it in Home Depot.
Oh God, I'm gonna look at DWAC.
Another example of that today, where they still like the stocks, but they're acknowledging how far some of these stocks have run. Oliver.
You're right. Yeah, it's definitely going to draw some attention, draw some profit takers. Most of these analysts were bullish on these stocks, and so they're kind of just saying take profit basically. So I don't really see it as much of a bear case for now, but I guess the idea is take some money, plug it elsewhere, like some good old trucks and rails today. All right, that works, I guess. Appreciate it, Kevin. Thanks, sir.
Buffett will like that.
All right, let's talk to the macro situation with Vincent Dillard, always with a unique look at the market and the economic picture. He's the director of global macro strategy at StoneX Group. Vincent, welcome back to the show. One of the main headlines from your recent note is that the disinflation of the past year was more luck
You're welcome.
than skill. And as they say in poker,
NVIDIA.
they also quote Napoleon. Sometimes it's just better to be lucky than good.
Yeah, that was. I actually watched the Ridley Scott movie.
God, guy, you're a little loud. Okay, I did a little video on NVIDIA, and I asked for a little. We got resistance levels and supports. Again, called this one out at the first of the year to go to 650 from the $500 level. And I think definitely they're having a small little correction today, but NVIDIA will always be number one. So pull up the yearly time frame, and I've got this here channel. What was these here? These are all plugged up together. Let's see if we can get to the weekly. We got 580 for support and 567 on NVIDIA with resistance at 624. And that's on the top of this channel, and that's on the yearly. The yearly resistance is going to be 640 if it decides to break out of them highs that we've had at 603. Now, this thing's had one heck of a run, and I've been very leery of it until the first of the year. So I'm thinking this baby can pull back to around that 585 area and hold. With that 624 being a hard resistance. I just be extra careful at these high resistance levels and kind of wait for a pullback. It's hard to say on this because it's had already a $100 run here in the past couple of weeks. You could always set your Fibonacci's up on it. I'm going to stick with that 585, 54 to maybe jump back in this trade. It's 15 after. Are you in the trade, Debbie? Or are you just looking for a good spot to get in? There's Randy. How's my baby lifesaver? SPX. That 600 could be a little resistance to break for a little bit and pull back and consolidate too on the NVIDIA, because we did have a good 100-point run, and that's the way it acted before when it was at 400 to 500 for about 7 months. I'd just be a little extra careful at these levels, that's for sure. If we get a good pullback on it, and it could happen just like overnight in one day, and then boom, they'll start liking it again. Randy's here. I hope this ice gets melted. We do have a 1, 2, 3 here on SPX.
How even that part of the movie was completely mind blowing.
And out of respect for your native language, I will cede the argument to you. Thanks, Vincent, a lot. Stone X Group. Right, when we come back, let's do some trading, go through some charts. There's your macro setup. The Fed too early to declare victory on inflation. Expect some firming in the figures, including PCE this week. Vincent Ballard coming up. There's Soloway checks in with us on some trading.
My dad was a hard worker. He used to do side jobs installing windows.
That commercial's getting a little bit old. You got 650 calls at 85 cents for today. Debbie, are they for today? I guess they would be. Well, if we break this, let me see here. This week, I mean. Yeah, that's kind of too far out. I think they're too far out. These are the ones you got right here, January 26th. Might be a little bit too far out. I like to get it closer to the money when I'm trading these. If we get a pop on it, try to get out even. At least back up here to 48.57. That's what you got to break. The 1, 2, 3 up there. A triple top. On the video. $43.57 area. If we pop up there. Oh, shoot, that's SPX. God dang it, Jim, get your shit together. Yeah, I don't know about that. Called it out earlier this morning on this knife. We come in tomorrow and have the same kind of sequence where it pulls back. Yeah, it's a little bit too far out of the money. Well, I got away with playing the puts on them today, but it wasn't easy. And the calls was easy. On DWAC.
So it might push up a little bit on earnings. Again, the stock has had a remarkable comeback, but this wouldn't be, again, I wouldn't necessarily be going long here into earnings, but at the same time, I certainly wouldn't be short into earnings as well. There's a lot of stocks out there that are making new all-time highs that are very, very lofty. I don't look at Netflix as being one of those ridiculously lofty plays at this point. So it would be possible to see a surprise pop on Netflix into earnings.
Well, it seems increasingly like they're the only ones that know how to turn a profit from streaming at this point with the advertising bracket. All right, so Intel getting ready to stab, basically. Netflix watch it to push to the gap closer to 500. A little bit more discreet bearishness in Tesla. What about the coin? We just slipped through 40.
Discreet bearishness in Tesla.
What do you think?
I was waiting for you to ask me on that one. So this is the kicker, right? We had the great push up into the spot ETF. I love to remind people, and again, this is something that we can all learn from, is that in the 2017 top in Bitcoin, that was when futures were released. The 2021 first top was when Coinbase IPO debuted. The second one was the futures for the ETF futures, and this one was the spot ETF. So there's this history of the hype leading into these runs in Bitcoin, and then kind of the letdown effect. I think we're coming back to at least 38,000 in the next couple of weeks, and then if we break below 30,000, 38,000, we could revisit 30,000. Now, but 30,000 to 32,000 will be epic.
That's what I got.
Bitcoin. The only reason I would say
I got 32.
30 to 32,000 to the downside is if the stock market really starts to tumble. So I'm going to be a buyer personally at around 30 to 32,000. The 38,000 is more where I'm looking to cover my short.
Okay, good analysis. Like that analysis. Any existential risk building for corners with stocks at all-time highs, with Bitcoin not? Can't really think of a lot of examples where that happened.
Yeah, you're right. There's a divergence here. I mean, there's so many divergences out there. There's negative divergences in the RSI on almost every market, including it was in Bitcoin before this fall, kind of alerting us to that. And I also think that you have to look at some of the issues going on in China. Does the China slowdown start to spread to other parts of the globe? Because that is getting to be nasty. In fact, I was looking earlier today at the Hang Seng market versus the S&P, and it's very rare to see such a divergence in markets with the two biggest economies in the world. And I think that's really something that I'm paying attention to. Are we going to see China start to turn around, or is the U.S. going to come down to meet it as well? So little things like that becoming very intriguing going into this period where the market's expecting a lot of Fed rate cuts this year, and the Fed's kind of saying not so fast. We have to watch those inflation and jobs numbers coming up soon.
All right. Thanks, Garrett, for the charts. Appreciate the look.
Thank you.
All right. You got it, Garrett Soloway. Verified investing. Coming up. 3 bullish trades, options, bulls unfazed by a little bit of a slower day in the tech world, but in these names, it continues to ramp. Western Digital off the highs of the morning, but still a great day for that stock, up 5%. Micron's in the mix. We'll come back to Tesla. Look at a trade there. Stick around. Options Corner next.
I remember when I first started flying and we would experience turbulence. I would watch the flight.
Gosh, I wish they had some kind of volume control on these things. Oh.
To digest in this earnings report. Option market's pricing in about a plus or minus 6% move in the shares, and somebody thinking we're going to see some upside after this pullback that we've seen. So saw some unusual option activity out in the February 16th. The monthly cycle is about 25 days to expiration. Trader bought over 10,000 of the 220 strike calls. They paid a pretty hefty debit for out of the money calls, $7.50 for 10,000 of those. But that break even of 227.50 over the next month, it's about 9.5% above the current share price in there. And as I mentioned, I mean, this stock was over 260 just at the end of December, Oliver. So yeah, maybe somebody taking a shot here to the upside. It's not a pure earnings play by this trader because, you know, we got earnings on Wednesday. This position's still got 3.5 weeks until expiration on this one. But yeah, some bullish sentiment in there. Even with the stock under pressure, we're seeing call volumes outpace put volumes. The put call ratio about 0.64, 65. That's almost normal. So even during the pullback that we've seen recently, we're still seeing a lot of call buyers out there. There's always some speculators on the bullish side.
Right. People buying dips, and it is dipping. It's real soft. It's like almost every day it just starts off weak and it doesn't really improve that much. Right. It's just kind of in this real malaise right now. Let's switch over to chips. You got Western Digital, Micron, both up today, but Western Digital really the one leading the charge. They generally don't move too far from one another. WDC up 5% on the super bullish note that says it's going to replace NVIDIA as the hot chip trade.
Yeah, Morgan Stanley put that price target $73 from 52. Keeps an overweight rating on it. They said this is going to be the stock of the day in the memory chip space. A lot of people pull back on inventories, they pull back on production. What does that mean? Well, over the last 2 quarters, memory chip prices have actually increased anywhere from 10 to 20%. That increases margins for Western Digital. Then you throw on top of it the AI space within this.
Well, they like this WDC.
You need a lot more memory. You get a bottoming cycle that happened in mid-2023 as far as demand goes. Now you've got them actually increasing prices. You saw Samsung and Taiwan Semi pull back on production of memory chips in mid-2023. That's equating to those higher margins that they're seeing now. And
Randy, SPX hit my resistance.
NVIDIA's chips coming online. So a lot
48.57.24.
Note where they raised the firm's price target. Wedbush also did up to $70 from 65. And we saw some traders in there setting up for earnings. They got earnings on the 25th. Option markets pricing plus or minus 8% move in the shares either way on this one. But we saw in the February 2nd weekly cycle, so 11 days to expiration, trader bought over 20,000 of the 62 strike calls. Average debit just under $1. So the break even just under $63 to the upside. Over the next week and a half is about 10% above the current share price in there. Over 150,000 calls traded on the day, Oliver. That's 12 times normal daily average volume that we've seen over the last 5 trading days. Only 18,000 puts versus over 150,000 calls. So you see the sentiment there as far as the options flows go all the way on the call side in there. Hitting 52-week highs today, earlier in today's session. But yeah, solid gains for these memory chip makers, and they had good runs towards the end of 2023 also.
Okay. Western Digital still is lagging Micron on the year by a couple percentage points.
Yeah.
But the two are pretty well linked, is generally serving that memory complex. What do you see in Micron?
Same thing, up 4% so far this month, rallied 70% in 2023, hitting nearly 2-year highs. So same story here. There was a note out that NVIDIA, they're going to be the main contributor to NVIDIA's B100 chip, about 70% of the market share on those chips for AI. Those are going to be some of the ones that they use over in China and some other places. Those headwinds that, remember, China put Micron on the restricted list in 2023. They were going to do some investigations, kind of a pushback on some of the tech stuff that we're doing in China also. But late last week, KeyBank raised the price target to 115 from 100, keeping an overweight rating on the shares. Memory, highly cyclical, but all the signs are pointing to trending higher for DRAM and NAND. So those are positives, and we saw some call buyers in Micron also. These are out in the April cycle, so giving themselves a few months to expiration here. They bought 10,000 of the 90 strike calls, paid a hefty option premium, $6.15 per call on that, so that break even to $96.15 over the next 88 days, about 8% above the current share price. So bullish flows across the board in the chips. And remember, you saw the SMH hit another all-time high today. The Philly Semiconductor Index also elevated near those all-time highs, with the S&P and NASDAQ and Dow all-time highs, Oliver. Bullish sentiment across the board as far as unusual option activity.
Yeah, Russell leading the way. Nothing faded today. So NASDAQ definitely more sluggish, but still up. So we're good. We're in the clear. At least 18 minutes left. Looks like we're going to make it there with everything higher. Thanks, Tom. Let's talk some commodities, and let's go into metals with Chris Robinson, Managing Director, TJM Institutional Services. Chris, gold is like kind of pinned, you know? Every commodity, it seems like right now, other than nat gas, like has a range it's pretty well committed to.
Yeah, we've talked about this. It's been frustrating, really. Go back for 3 years. Go back to July of 20. Gold cannot get above. It's not like staying north of 2100, 2060. So we're right there again. And then we're gonna. Looks like we're gonna test 2000. Obviously, that's a nice round number pivot. Just wasn't that long ago we went north of there, looking for a breakout. And I think it's been frustrating for a lot of people because you haven't had a huge move that people can get involved in. We've been in a kind of a 3.5, 4 year, about a $400 trading range. Sideways trading ranges are very hard because people tend to get bullish at the top and then bearish at the bottom. So now where we're sitting out here today, it's going to be, 2000 is going to be the fighting zone, because every single time we've gone above the 2060, 2073, we've backed off there. So at some point, we're going to break through that. I don't know when it is, but we need to break through more than just 12 hours or 14 hours. We really need some sustained trade up there, or we may be in this sideways range, for a little while longer. And it's there'll be some opportunities there because it's a $400 trading range. But again, I think from a trading standpoint, that can be a very, very difficult trade for a lot of people because it's difficult to trade that. Most people get very, very bullish at the top of the range, very, very bearish at the bottom of the range, looking for the big move. So, if you want a level to make a decision against, it's pretty clear. 2000, nice round number. The market likes to trade those round numbers. So. I would also look at it in conjunction too with what's happened with the dollar, and also the not to get too far in the weeds, but what's happened with silver too, because I think silver will follow gold. So a lot of people out there were hoping to see silver get north of $30. We'll see if that's going to be there. So. I think you're gonna have to keep your powder dry, wait and see if we can get some extended moves.
Yeah, silver's getting hammered, down 2.5%, with the exception of like a few weeks there in September, pretty much at the low end of the range. So we've talked a lot about how the commodities seem to have a bit of a barrier in demand with China's weakness. So I guess silver kind of a little connected to that. Copper down too, which I feel maybe kind of fits that explanation to an extent.
Yeah, copper's a pretty good litmus test for what's going on in China, or at least, a lot of the trading community looks at it that way. And obviously, China's had its problems with the stock market and everything else. And
copper used to be a leading indicator.
Talks about it, even the grains were 2-year, 3-year lows, a lot of pressure, a lot of the blow off. We had a lot of, I'm going to say, a bullish frenzy for a couple of years with the comeback from the bottoms of COVID. We bottomed out in COVID, but then we had really explosive moves fueled by the inflation trade. And I think that's, if you're looking for one thing that will turn commodities back bullish,
HG.
You have to see what happens in the end with the Fed versus inflation. If they have succeeded in getting us into a soft landing, you may have some quiet months ahead for commodities, because commodities more than anything. If there's no supply issue, really what drives them is money flow and demand. And we had a huge drive between 2020 and 2023 where people just wanted to own commodities at all prices, and that's kind of gone away here.
Seems like. But right in time to go against the grain. WTI catches a bid today, so we'll see if it lasts. Thanks, Chris.
Yep. Thank you,
for
sir.
the look, and good eyes on silver down 2.5%. Definitely a mover today for sure. Chris Robertson, DJM Institutional Services, is going to developing the story on one of the worst performers in the stock market today, at least the S&P 500. Gilead down sizably. Renita Young, our senior markets correspondent, got the story. Renita, go ahead.
Well, this stock tanking today.
There you go, Randy. In the close.
Around $9, or pardon me, down, seeing its biggest sell-off in more than 9 years. And this is on a failed late-stage trial of the company's drug for lung cancer. It's called Trodelvy. Now, the big thing about this drug and others like it is that it's supposed to use these potent shots of the actual drug to target the treatments directly to tumors, and it gives patients fewer side effects. At least that's the commentary around it. But results show that advanced lung cancer patients who were taking Trodelvy did not live significantly longer than those who were just getting chemotherapy alone. And many people put a lot of hope in this drug, not just because of those targeted treatments, but also because of the fewer side effects. And this new revelation just shows the development of these drugs isn't just that straightforward anymore, because a similar drug that was developed by AstraZeneca
GILD
also fell short of expectations in one of its trials. And Gilead, they said they're not giving up on this lung cancer drug, and they want to find out what other uses that it could have. And that's, however, been a challenge lately, just finding out which patients would benefit the best from it, whether it be someone with another form of cancer or even someone in a different phase of their cancer journey with it. But we did see some analysts, several of them, talking about it. I'll just let you know a couple of them that I saw. Bloomberg Intelligence said the study failure is a major disappointment, and Evercore ISI called this stock sell-off, however, an overreaction, given that AstraZeneca's drug also went through a similar situation. Jefferies calls this another dent in the pipeline thesis for Gilead.
Ouch. Yeah, big deal, big sell-off, and it was just a 52-week high, so a major back there at a bad time for those hoping the drug would make big breakthroughs. But still a lot of experimentation with combinations, so we'll see what happens next. Thanks for the look here. Of course, the stock hit hard. When we come back, time for a Schwab Big Picture discussion. Set us up for this week. Don't miss it. 10 minutes until the bell rings.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client.
The only problem with this station is the commercials, the noise. Everything else I love about it. Schwab. Man, there she goes. SPX. Off the support to the resistance, but I didn't take it. I still won't trade much. I'm tired. I'm wore out. This morning got to me. Wore me out.
Other central banks still in play. Let's bring in Colin Martin for our big picture discussion, Director of Fixed Income Strategist at Schwab Center for Financial Research. Colin, afternoon, sir. Good to see you. This week, we don't have a ton of data until Thursday and Friday.
It's a
And
huge
we got
drop.
a quiet period. So, do we get any movement from bonds?
Yeah, we still can, but we'd expect more movement later in the week, as you alluded to. You can see GDP could be market mover because all eyes are on what that fourth quarter would bring based on such a strong third quarter, because that ties into the potential if we do see a soft landing or not. And then, of course, Friday's PCE report is expected to be the main attraction. I think if you look at PCE, it's going to be very important to see what that month-over-month number is. If we look at core PCE on a monthly basis, it's risen by 0.2% or less in 5 of the last 6 months. And it's expected to rise by another 0.2% in December, which gets released this week. When you look at those numbers and take them on a 3-month annualized, 6-month annualized basis, we're basically at the Fed's target. So we'll be paying attention there. And if we are looking for some sort of surprises that could result in some volatility for the markets, it could be an upside surprise for the Treasury market if we see a stronger than expected print on Friday, because that could result in maybe a pushback in the timeline of that initial cut.
And how will the other central banks this week maybe play into this? Can we glean anything from what they tell us if they try and push back their own timelines?
No, we can. They're all related to a degree, right? Every economy has their own challenges and things they're looking at, but at the end of the day, they are related because other rates affect how their economies can impact other economies. And what it can impact is the dollar. I think that's something that we'll be paying attention to, where we've seen the dollar rebound a little bit on expectations for that timing of the first Fed rate cut. If we see some shift or delay in potential cuts from other global central banks, then maybe we could see some movements with the dollar market there. So that's what we're going to be focusing on this week. But the main attraction will be next week's FOMC meeting and really what Powell says in his press conference.
All right. For PCE this week, if we do hit in line with expectations, I guess that'll add some confidence that the Fed can stay relaxed.
I think so. As I mentioned before, it continues to move in the right direction. So on a year-over-year basis, core PCE is expected to rise by just 3%. Now, not that that's not important. We always look at the year-over-year numbers. That's what really makes and grabs the headlines. But that's highly dependent on what happened 12 months ago. We want to look at the here and now. And if we look at that shorter time frame, we'll stop short of saying mission accomplished with inflation. But if we do get an inline print of a 0.2% increase, I mean, that suggests to us that inflation should continue to trend lower over time, and it should get to that Fed's 2% target. And that means that the Fed should begin to cut rates at some point later this year, really just to keep the same level of restriction as they have now on a real basis. Because if inflation continues to come down, they can ease and just maintain a real level of restriction, and it won't necessarily be for stimulus purposes.
We heard the case earlier from Vincent Dillard at StoneX that the old ceiling of inflation will now be the floor at 3%. I'm curious how you guys feel about that.
I would disagree with that statement, mainly because we're seeing numbers right now that suggest that inflation should come down to 2%. I mean, if you look again at the year-over-year numbers, yes, we're probably going to be in that 3% area, but those short-term readings suggest we're already there. And that's been a debate we've seen a lot, where the low-hanging fruit of getting inflation from 6, 7, or 8% down to 3 to 4% is the easy part, and then getting down to 2% is going to be the hard part. We don't necessarily think that's going to be an issue based on what we're seeing. If you look at goods inflation, that has come down sharply and actually hasn't risen much over the past number of months. It all does come down to services, but that has been slow. And if we look at the numbers, again, on the 1 month, 3 month, 6 month annualized basis, we're really close to 2% right now. So we're not concerned that we're going to hover at this 3% floor right now.
All right, encouraging message for bond bulls and the Fed alike next week. Colin, thanks for your time.
Thanks for having me.
Colin Martin, Schwab Center for Financial Research. Closing bell. We'll see you on the other side. We do have some earnings this afternoon. United's going to report. It should be a good one. We'll be right back.
Young lady who was
mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through
Oh boy. Well, what a day. I was pretty concentrated this morning, then I kind of got off the track later in the day. I felt kind of like the tech was selling off a little bit, kind of consolidating for the next run. You know, they are really up there, like irrational exuberance. It's hard to keep up with them sometimes. Like that AMD for a good example. I mean, just look at what it's done here just in the last few weeks, couple days. Stocks have to consolidate sometimes. We were down here at 133 in 2 weeks. We made it all the way up to 177. That's like a $44 run, and that's, you know, quite unusual, especially in the last week from 150 to 177. $27 run in 5 days or 4 days. And it's all about AI, and I just feel like we're getting into over our heads. But then I heard some guy said that China had been buying the heck out of chips and kind of slowed down now. I thought we stopped that, but I guess we didn't. That's what I thought the government said. They were putting a ban on them. But then I heard that NVIDIA was still selling it to them, so I did a couple videos this weekend that kind of more or less hit what they were supposed to. Tesla didn't break out yet, but it did run up to that 217, pulled back and consolidated. I don't think it's over yet. Could be a retest. There's a lot of bears out there on Tesla right now. They're kind of boasting and bragging. But we've had these pullbacks before. We've had 3 of them in the past 6 months. Good one right here, and then we had another good one right here. Then we've had another good one right here. They're all about the same length. This one was a little bit bigger, but it was a much higher level. So it's kind of, you know, EV cars, they just don't do well in the wintertime. They don't. They just don't. I mean, you're hearing stories about the F-150 running out of power after going so many miles because of the cold weather. And one video I watched, it ate like 40% of the energy just to turn the heater on to keep you warm. So they're going to have to come up with something to keep that charge up. I always like to take them wheels like a windmill and just run them on heat maybe or something. But then I heard Musk might be doing some kind of hydrogen kind of car, run on water. That'd be something. And then we'd be short. Well, we're already, cannabis sector's eating up our water anyway. I mean, for one plant, you got to give it 2 gallons of water every 2 to 3 days. And there's hundreds and millions of plants being grown right now. So I'm going to go over my watch list just a little bit here. Start off with the highest volume. That's the way I like to look at it, highest volume. We have AMD with a small pullback. It's had such a huge run from $90 all the way up to $74 in 3 months. So it's just, and you heard irrational exuberance again said on Schwab. They don't say that on CNBC. I like Schwab a lot. I really do. I think they're honest. They're not pumping the market. They don't talk about politics. None. I didn't hear a thing about politics all the day long from Schwab. And that makes me so much not as argumentative with CNBC. And you get so many mixed messages on CNBC. And I think they try to do that to play safe. Well, we had, here I like it because they talk about a stock and then they'll pull up the chart and they'll analyze it and even give you an option idea, which is kind of cool. I could learn a little bit more about trading options with them. I just got to get to know the people on the channel. And they had a Chartist artist on there, which I thought was pretty good. He gave me a couple moving averages that I might try out. I've never heard of the 252. Now I use the 65. He uses a 63. And then he uses the 21 EMA, where I use the 21 SMA. So I might apply that 21 EMA on my chart and see how that works. And just switch it over for a little bit. I don't use that 21 very much anyway. It's usually the 51 or the 65 or the 200 SMA and the 200 and the 50 SMA. And the 9 EMA. So I might add a couple of them. That's how I learned how to use these moving averages. I listen to these chart artists and they bring something up. I used to just use the 50, the 100, and the 200 SMA for a long time, and then I added the 9, and that kept me in and out of trades, so I started trading with the 9. I did DWAC today, the calls, and also traded the put. I had to do a little cost averaging down on the put. GWAC. Look at that thing, almost hitting 50 now. She got her 50. This is because of Trump. And we were going to see what would happen today when DeSantis went ahead and what do you call it? Gave the go-ahead for Trump. So we were expecting something from this anyway. Yeah, I was driving this morning. I didn't want to get out on the road, and I was able to get out of this parking lot pretty safe. But on the way back in, there was a car in front of me. I went to another parking lot, and man, driving on ice. Don't ever try to attempt it. Stay home. It's not worth taking the risk. So I pulled in the parking lot, and there's this other car. Before I could do that, I seen this other car already slid down and stopped right before he hit these two. And then I got in there, and I was within, a half a foot from hitting that guy. And I didn't know what to do, so I tried to back it up. I was worried if I backed it up, I was going to slide down more. The parking lot's kind of in a downhill slant. So I got out of there, and I pulled over next door and went into the church, which has a flat parking lot, and it's just pure ice. So if you ever have ice in your area, don't get out and try to call in sick or whatever it takes. Don't take that risk. So DWAC was a good trade today. The SPY and the SPX, I got in there first thing this morning and scalped him real fast. I could have been done for the day. Then I traded Microsoft on the pullback because they've been pumping Microsoft all day today, all week, for the last 2 weeks, and it really hadn't. I don't know why they're pumping it up so much. But I was able to catch this knife and explain to you how I took the trade, why I was taking the trade. Inverse head and shoulders, pull back, boom. And got out of that real fast. So I'll catch y'all later. Now that's a guy who wants to call me about some card. Some bank card. Diddle-diddle-doo-doo. From my bank, they want to give me a card for 0% interest rate, which would be a good deal. WDC, they were talking a lot about this stock today. This could have more wings on, more room. Definitely, you got a resistance right around $65 on this thing. WDC. And then Boeing kind of moved up a little bit today. Pulled back real hard this morning and had a nice pre-market bounce, which looks kind of nice, and then pulled back. It opened and moved up and broke resistance. I'm still not bullish on it. PayPal pulled back. It's had a good run. Pulled back real hard today. So a lot of these, I think people are taking profit on some of these stocks. They did that with NVIDIA today. And I think we might be playing in that $100 channel. They don't want this to go below 500, that's for sure. So we're going to see if we can hold that at 21. I'm going to add this here moving average to my charts, or probably just keep it on 1 and see how that 21, if it works like the 9 when I'm swing trading the stock, I can stay above that 21 EMA. And they're different time frames. But I like it on that hour. That'd be like a swing trade idea. So I'll be using the 21 EMA for sure. I'm going to go ahead and get out of here. Thanks, everybody. Appreciate everybody that listens to me. Had some guy give me some trouble on YouTube today. Well, you called Tesla, right? I called the double top. This is what gets me about people sometimes. They come in late to the scene. And it was almost, 3 weeks ago, the first of the year, the end of last year, when I called this double top on the SPX. And we hit that double top. I said we were going to pull back. We even pulled back from this is on the 3 year. So this was the double top on that 3 year right here. And when we hit the double top, I made a video on the 31st, and I said we're going to pull back. And we pulled back for 2 weeks, and then finally broke it on the third week out. Broke that double top. We still pulled back to that low during that third week, and then we had that big 3-day run or 2-day run where it was just like contracts went up to $3,000, $4,000. So we definitely broke resistance, and I said we'd probably break that once earnings started to come out, and they did, and we broke that resistance level. So a lot of people, they come late to the show, and then they want to go ahead and down you and dog you, and I don't get that very much, but when I do, it just gets under my skin. Nobody's ever 100% right, but I was definitely right on that. Same with Tesla. Was he around when I was calling Tesla at 160, saying we were going to pull back to 110? No. No, he wasn't around to do that. I mean, 210 from that 260 area. And so we were going to pull back to 210. So then I'd start to get ready to call the reversal into earnings to the upside. We had this 1, 2, 3 here, and we broke out, and I called that. And then we had that little pop this morning back to resistance. So we had to break a certain resistance. We had to break the 200. No, that ain't the right chart to use. We had to break the 200 on the weekly time frame for it to become really bullish. So he assumes I said we were going to break that too. No, we had to break the 200 before we could become bullish. So we'd probably take it to 217 today, to the top of that there 200 SMA, and that's right where we went. We went right to that 217, and that had to break. If it didn't break, we were definitely going to pull back and consolidate. We're still not below the low that we need to be, and that's right around the 206.87 area. So this thing can still bounce up. I wanted to see what these two hammers did. And you can see what they did, and it just produced another one. So, and I was a little leery of it in a way because of the upper shadow was bigger than the lower shadow. Same right here. So we could be consolidating, just waiting for the earnings, and then when they come out, we could. And everybody, I mean, it's all about the market, the way these fundamental traders trade. They think if you lower prices that's going to kill your margin, and that's all they worry about is the margin. They don't worry about how many cars you're putting out or anything like that. And I think a little bit different than that. I'm not a fundamental trader. I was a custom picture framer for many years and had my own shop. And I realized if I sold ready-mades and I sold them cheaper than the guy down the street, that I'd be getting their business. And I cut out all the work because I got a ready-made already put together. I just got to flop it together. And these are all doing customs, and I was able to give them a cheaper price and put out more and still get my 300% markup on a frame. Let's say I bought about a 16 by 20 for $25. I'd sell that same frame for $100, and then add all the, plus my little bit of labor, $10, and sometimes I'd throw that labor in free if they had come in and they wanted me to frame 3 pictures. So I end up making more money because I had more productivity. Plus I was undercutting their business. And you heard that guy here on Schwab, he says, my dad put in windows, but he didn't like charging $500 a whack, so he'd charge $100. And he'd put 2 or 3 windows in a day and make $300 a day, and to him that was a lot of money. Where someone else was end up charging you $1,500 to put in 3 windows a day, and then the word gets around and says, Johnny will put them in for $100 a whack if you want to, save money, and give him all the business that he needed. So that's the way I look at it. But again, the fundamental traders, it's all about the margin. I mean, price cuts, oh my God. If Ford would have said price cut, or General Motors would have said price cut, it wouldn't have been no big deal. But they've been on Elon's case ever since he bought Twitter. And that stopped the swamp from spreading, which I think was probably one of the best things I've seen in my lifetime. To have that kind of money and to be able to, just brush it off. So I'm still happy about that. So I'm going to get out of here and have dinner, and hopefully we don't have any more ice. I got to do my work. I can't do my work if it's icy outside. Ice. Who needs ice? Take me to the porta potty. That'll be nice. We'll catch y'all later. Have a great day. Washboard Jim.